Good morning, Crypto Chaos. How's it going, guys? I overslept a little bit here. Bitcoin coming in at 108.5. Good morning, good morning, good morning. Easy here with the coffee. Yeah, he's just also feeling it too. I don't know. I had a bad nightmare and I could not wake up from it. I was trying to resolve it the entire time. How's it going, guys? How's it going? Sup, Otaku, Grand Rising, Otaku and Chaos family. Let's get this money, says Gamma. Yes, yes, yes. Morning, Otaku. Morning, everyone. Morning, J Money as well. Strawberry Dragons. Yes, our favorite flavor of strawberry is here with us this morning. How's it going, Strawberry? Oh, man. Yeah, I had a nightmare. about someone sold my guns for me, and I didn't agree to it. It's such a stupid dream. Anyway, guys. How you guys doing? We got Powell today coming out talking about the payments and innovations. I guess meeting at the Fed today. That's going to happen in about 2 hours, I think, from now. Roughly about 2 hours from now. Maybe an hour and a half, something like that. We're going to have a long show for you today. It's going to be fun. It's going to be interesting. We're going to see what we got to dig up today. All right. We do have, of course, the pleasantries until the open bell in about 7 minutes. As always, I like to get in here a little early and figure out what's going to happen soon. And guys, every time I look for Powell with a cup of coffee, I only ever find the single one. I've used the same one on my channel like a bazillion times, so it's kind of crazy. I don't think he's an avid coffee drinker. But anyway, let's of course get into Bitcoin and some things this morning. There we go. So yeah, there's the only picture I've ever seen of Powell holding a cup of Starbucks. I don't think there's anything even in it. He's probably just a stock photo or something that someone made up. Anyway, moving on. Even this one, I don't think he's not even drinking coffee. Enough. Anyway, I just have to have a little fun, of course, setting up the live stream. 108,696. We're kind of on our baseline. This is kind of weird. I was not expecting this. I really was not expecting this. We didn't go into bear, which is, I guess, good. I'm assuming that there's the entire markets overnight. For us to see it flat like this overnight and not even see any movement after or before 3 a.m. was kind of weird, kind of strange. Which tells me that the rest of the markets are kind of holding off until this meeting today, maybe. We also have the SEC talking crypto tomorrow as well, the Crypto Roundtable. So this week has a lot of narratives playing out. Hopefully, it's all in our favor, right? Hopefully, we don't get any more pushbacks or hold-offs or regulation, yada, yada, yada. But all in all, it looks like Bitcoin's holding strong here at 108,000 currently. I could see a little bit of turbulence, but we did see a wick, quite a big of a wick here down here at 9 a.m. right before the market, right before the open live stream. While I was setting up the live stream, we did see a wick down to 107.9, very short-lived. Let's see how long did it last, like 10 minutes maybe. Looks like it split between the 15-minute candle and the 5-minute candle. Yeah, definitely didn't last 30 minutes, that's for damn sure. You can see that down there. Yeah, hell, even a minute, probably a minute. From 108.3 to about 107.9. We went down there for a minute. Okay, it's on the minute chart, so a minute. We're gonna give that a minute to load too. We're wicking sideways here on both the bulls and the bears. Kind of weird. Again, leading into Powell. Let's see what we can dig up with some headlines this morning and cover some of that before the market bell opens. Let's see what we got. We got CNBC coming out this morning. Warner Bros. Discovery says it's open to sale. Damn, Warner Bros. Is going to sell. Well, I guess they're all probably feeling the heat from AI coming down the rabbit hole. GM stock soars. Automaker rises guidance beats quarter 3 earnings. Cost and chaos. Yes, they said the thing. Good morning. If you guys aren't awake yet, you probably are now. Yes. To test the resiliency of the U.S. audio industry. Oh, damn. I do like the doom in the morning. A little bit of doom in the morning. Airbnb adds direct messaging, new social features, other app overhaul. What else we have here? Jamie Dimon, avoid the disrespectful mistake in meetings. What? We're going to take a look at that. Any other topics here? Coca-Cola tops earnings and revenue estimates. Just says demand for drinks is still soft. What? Soft drinks? I don't know if this is a play on words or not.
What are you, stupid?
Yes. It's kind of weird because I never really thought of them as soft when it comes to drinks. They're a little harsh, right? They're a little hard to swallow. Here are Tuesday's biggest analyst calls. Nvidia, Apple, Tesla, Goldman Sachs. Okay. CoreWeave CEO says Core Scientific not a need to have as shareholder opposition to deal rises. Stocks, money markets, big moves, OpenAI cracks down on Sora 2 deepfakes after pressure from Bryan Cranston. Okay. Weird. James Comey's asked the judge to toss criminal cases. Trump-picked prosecutor was appointed unlawfully. We got China's rare earth magnet exports to U.S. fall for a second month, reversing brief recovery. So we got pretty much nothing too crazy today. Most of the stuff going back into yesterday. Japan makes history as Takaichi is set to become the country's first woman prime minister. We've been talking about that for a few weeks now. All right. What else we got? Okay, I guess we take some of the look at these headlines here. We got 2 minutes, so gotta be quick. Cost and chaos continue to test the resiliency of the U.S. auto industry. The auto industry is facing a new slew of challenges at the beginning of the year: tariffs and inflation and supply chain concerns. Auto executives, insiders, and analysts told CNBC the industry has been resilient. Things aren't as bad as they once feared, but there are growing concerns about the state of the consumer and suppliers of the economy. That optimism will put to the test with the automakers such as General Motors, Ford, and Tesla begin reporting their quarterly results this week. Okay, there's obviously tons and tons of doom surrounding this, especially with the credit markets and the car repo right now is insane. It's insane. The average cost of a car now is like $50,000. People are getting loans as far out as 7 years. I mean, those cars are probably not going to run by the time they're loan, right? It's kind of insane that people are going that far out. Anyway, continuing on. Don't make this disrespectful mistake during the meeting, says Jamie Dimon. You get 100% of my attention. What the hell is he referring to? Where's the quote at? We could probably dig the... Nah, we can't. I'm probably going to skip this one, guys. This is nonsense. When I go to a meeting, I've done the pre-reads, and you get 100% of my attention, Jamie Dimon says. None of this nodding off. None of this reading my email. And when I can't do that, I should move on. Okay. All right, whatever. He's like, hey, I hustle, man. I hustle, bro. Don't worry about it. I don't know what the hell that's about. Guess we got about a minute. We got about a minute and a half, maybe less. I got to pull that up, make sure we don't miss it. The Japanese market bell. I'm going to have that inside of my screen real quick. Hope we don't miss that one. Trump admin agrees to speed up a student loan forgiveness under new court deal. We got Louvre, I don't know. Robbery could lead to a massive museum overhaul worldwide. Countries' strict competition rules could hit U.S. tech giants hard. Study finds, what's this? Those who are bearing the blunt with from tariffs. Okay, who's was it the consumers? Yes, the U.S. businesses and consumers shoulder the blunt.
Stocks taking a hit at the end of the week as the U.S. and China trade blows on tariffs. President Trump threatening a massive increase in tariffs.
That's from last week, that video, it seems like. Goldman Sachs economists, estimated that the August U.S. businesses were absorbed on a net of 51% of tariff costs, while American consumers were shouldering 37% of the burden. They also estimated that 9% of the costs were paid by foreign exporters, and about 3% was attributed to potential tariff evasion. All right. So we're splitting the difference, I guess, there, but still, that's a huge push on the consumer. Guys, got the bell opening here in about 20 seconds. Let's go. Let's do it.
You are watching Bloomberg Open Interest. I'm Danny Berger. It's a market that is flat to down for the futures trade. Actually flat to up, I guess, for the S&P 500. But not a lot of things to move on, except some pretty strong earnings, I should say. But that's not moving the dial. After we finished yesterday, just 0.3% away from all-time highs. The Russell 2000 Futures Index is weaker this morning, down about 1/3%. Even so, we are looking at extreme volatility in gold. How is that shaping things up?
Yes.
Over here at the New York Stock Exchange, we got some beautiful outfits ringing the bell. RHP, they are a REIT and they own the Grand Ole Opry down in Nashville. Hence, this southern
Finally starting to see a
looking
little pullback in
majesty
gold.
that we are seeing out of them. Dolly Parton, the likes of those have played out there. Truly a historic venue. Looks like they're celebrating 100 years of it. In a very different tone. Cybersecurity, Okta, they're ringing the opening bell this morning. They were on this very program yesterday. Sadly, I was not here, but the chairman talking about AI threats to the world. So if you want to be able to not sleep tonight, I would recommend going back and watching our interview with them. Even so, markets are open, little change, and there are some stocks that we are keeping an eye on at the open this morning. General Electric, those shares up 2%, a full year outlook for a second consecutive quarter that was raised. They see strong air travel demand. Larry Culp's bets on this company really paying off. General Motors, those shares up 8.8%. They raised their full year outlook. They had a better than expected pickup truck sales and tariff relief. Mary Barra in the earnings writing a letter to President Trump saying thank you for allowing us the relief of tariffs until 2030. Finally, Warner Brothers Discovery, those shares are up 8%, climbing. They announced a strategic review of their assets, and it follows offers from multiple parties, including that one flowing around from Skydance. So again, those shares are outperforming this morning. Still with us, Nimrit Kang, Chief Investment Officer at North Star Asset Management. And Nimrit, before the break, you were just talking about the fragility of this market and how it's a dangerous time. Even so, we had earnings from Coca-Cola, from GE, from GM. GM, for its part, everyone's buying those big, expensive trucks and SUVs. Is the consumer still acting as an underpinning, as a floor for this equity market?
The consumer has been extremely resilient. And the earnings today from General Motors are very heartening because these are the kinds of companies that have been really crushed with the tariff uncertainty, the trade wars, the weakening consumers. So those are very good data points. At the same time, Danny, it is too early. I mean, it's too early in the earnings season. We really got to hear more from the retailers. One of the themes that we've heard over and over again is the down trading, how the lower end consumer, the younger consumer is barely making it. I mean, just even look at the auto delinquencies reaching almost, for the subprime, reaching almost 7%. Student loan delinquencies, almost 11-12%. So we would say it's a tale of two types of consumers. The ones, the wealthier consumers that have the jobs not impacted by the AI phenomena, they seem to be spending, holding up the economy. They're also benefiting from the wealth impact from the stock market. And then there's the rest of the consumers that are just barely struggling to get by.
It's been the case for some time now, and it exacerbated by the outcome of COVID.
Nice
and
cup of doom this morning, guys.
Feels like to be exacerbated to the K-shaped economy that's been talked about and written about at nauseum. Nimrit, is there a point where obviously it is horrible to have this divergence, especially for those that can't afford or are struggling every day, but at what point does that impact headline economic concerns? At what point does it lead to wider trends where maybe some of the middle and upper income folks as well start to feel the pain and it shows up in markets?
Yeah, so two things have to happen, right? Either the lower income consumer has to start seeing the trickle down effect from all the spending, from the wealth effect, from the AI spending investments that we're seeing, or we see some deceleration actually come through for the higher end consumer. It's actually the same case we're seeing even for the companies. Large cap continues to do well, whereas small cap continues to struggle. Large banks are doing really well, trading, investment banking activity. Smaller regional banks, not so great, dependent on loan growth, and loan growth still remains very tepid, 1 to 2%. So this bifurcation is at so many different levels, and one of those two things have to happen. They haven't happened. We've been talking about it, so maybe they don't have to happen, and it can continue to go on into perpetuity. But if you look at historical data, it's the numbers game. At what point do we start to see the same cohort of consumers, the same cohort of companies just keeping the rest of the economy afloat?
Putting all this together, Nimrit, you are quite cautious. I think that's fair to say. At a time when you see, at least from the sell side, they've been raising their year-end estimates day after day. How do you express that cautiousness? Because it could be quite painful to take a step back or not to fully participate in some of the FOMO AI chasing that's happening in this market.
It is absolutely painful. You're absolutely right. One of the things that we've been talking a lot about is diversification outside of just the same theme of stocks, same types of companies, large companies.
All right. I did enjoy this. Thank you, Numeric Kang from North Star, bringing the doom this morning on Bloomberg. All right, how you guys feeling this morning? Yes, we have a read from Powell today, meeting, crypto roundtable, of course, of innovation and payments here coming up soon. In about an hour. I think it's going to happen about 10:50 this morning. That's of course what we found out last night. Yes. Good morning, everyone else I missed this morning. Nebs, how's it going? Top of the morning to you. I tip my mask to you, good sir. Always one away. Yes. Good morning, everyone. Everyone. Good morning, guys. Ring the bell. Over top shot. Good morning, Otaku. Gold is dipping as we speak. Yes, it is. It's beautiful, absolutely beautiful. Calling for this pullback to 4,000, but it stopped at 4,200. It's got some support there, so it's possible that could be the pain, the end of the pain for a bit. But 4,000 would be the big one. Of course, I'm waiting for on gold. All right, double top here. On gold? I don't know. I have to wait and see how that plays out. Bitcoin sitting at 108.6, coming up a little bit with gold coming down, wicking up. Again, everyone's kind of patiently waiting for Powell to come out and speak. That's kind of what we're looking at here at the current moment. Yes, good afternoon, guys. Andy, good morning to you. Good sir. Coinbase buying again. Scared of competition? ? Says Andy. Maybe. Braveheart McFreedom out here this morning. All welcome, the CIO of McFreedom. Good morning. Let's get it, guys. Let's get it. Of course, we're here for financial freedom. Thanks again, Braveheart, for reminding us to stay on track. All right. Let's go. All right, what else we have here in the roundup of things? CNBC, Fox Business. What you guys got on CNBC this morning? Netflix and Comcast among Warner Brothers Discovery interested parties looking at buying Warner Brothers. I guess real time. Paramount, Netflix, Comcast, possibly. All right. What else we got here? Fox Business. Silver.
70% in
gold.
2025.
Oh my.
Got it. Lauren, thanks.
Yeah.
Young men are flocking to the right and leaving the left in the
Of course, Fox
Democrats
Business
are constantly.
All right. What else we have? Going back into Bloomberg real quick. Getting into some more headlines here in a second. I think we pretty much knocked out all the headlines this morning in like 3 minutes. It's crazy. That was fast. Let's see what we
Amazon didn't crash the world's internet. Apple, that had traded, closed at a record high yesterday, trading at another record this morning, up 0.5%. Elsewhere, you see some of the winners of this earnings season, this earnings day. RTX had earnings, they did well. General Electric and Coca-Cola, those did well too. To the downside, ouch, Alphabet down 1.3%. Philip Morris, they also had earnings. Expectations are high, I suppose, with how much everyone is having those gross little Zyn packets. Sorry if you are among those who have them. Those are down 6%. Nvidia, Broadcom, some of the big tech names, Oracle also down this morning. But again, we are higher by 0.07%. So let's get a look at the sectors and how that is shaking up, what's winning and what's
0.07% on the stock market. Oh, okay. Anyway, so yeah, what are we looking at here this morning? Gold sitting on a market cap now of 29.3 trillion, down from damn nearing that 31 trillion mark just the other day. It was 30.5, I forget what it was in total. Yeah, it's crazy. We are seeing a pullback on gold right now. Bitcoin sitting at 2.16 trillion. Amazon coming up a little bit today. So again, we're going to have to push a little further to flip Amazon yet again. Silver having a little pullback as well. $2.175 trillion. A little bit off of that, 2.9 trillion it was yesterday for silver. It's sitting at $48.88 an ounce currently. All right, so we're seeing a little bit of a shakeup right now on the metals, and Bitcoin is rallying a little bit on this, but again, not really moving the needle quite yet. Everyone's just hanging out, waiting for. We have 2 meetings this week, guys. Oh my gosh, the SEC tomorrow and the Fed today. And I'm not sure how long we're going to sit here in some sort of wait and see kind of mode for Bitcoin. As Bitcoin just went flat. completely flat last night. It was crazy. In between a bear and bull, not really going and doing anything that we were expecting last night. Actually, had seeing no movement at all until 6 o'clock this morning, which is really weird. If you guys didn't catch the very, very open remarks I had of Bitcoin this morning, basically on our baseline, but still like, what the hell? What happened? Nothing really major announced. I checked, of course, the real news over on X this morning before the live stream. If you guys want to see some of the doom scrolling I did this morning, there's some interesting things in there. I can go over there real quick while we're still waiting for crypto news to load. Michael Seller says he's bulletproof an hour ago. That was fun. Of course, with him dodging bullets like Neo in the Matrix. We have Fed Governor Michael Barr saying stablecoins could be backed by Bitcoin under the recently passed Genius Act. Yes, he says the quiet part out loud, of course. We have PayPal just enabling P2P Ethereum transfers. We've been talking about that for a few weeks now. This is massive, 400 million plus PayPal users can now send and receive Ethereum directly wallet to wallet, and not, I guess, with their integrated crypto platform that's been out since last bull run. So I'm not sure how much different that is from what it's already been. Okay, no banks, no middleman. Just wallet to wallet on PayPal. Just in strategy board directors, Jared Patton has bought 23,780 MicroStrategy shares for 22.23 million. We have French news. Guys, this one was pretty big. French news says the currency is completely losing value and the future is Bitcoin. So you might as well accumulate as much Bitcoin as possible. Every country is capitulating, guys. Let's go. It's insane. Oh, jeez. Let's play this real quick.
Vous avez récemment écrit un article sur le futur.
I'm going to read it because, we don't all speak French, right? He recently wrote an article about the future of our monetary systems because they are going under the transformation. It is a full transformation. Is this monetary system is in place disappearing? I think it's tipping over. Monetary system is actually the system through which passes the economy is simply a trust device. And for this trust system to work, it needs large device. It needs a keystone. The keystone of trust historically was gold a long time ago, right? If I told someone I have 5 gold bars, well, that person would tend to give me credit to trust me. Gold has a number of advantages, but it has one big disadvantage. It's not auditable. If I have 5 gold bars, you either trust me or you want to audit my gold bars. And the only way to audit them is to melt them down. So, for example, if a large monetary body near the Lever says I have X tons of gold, well, gold stock has almost never been audited. Yeah, it is necessarily still a problem. It cannot be audited. The successor to gold was the American dollar. And if I told you I had dollars, you would trust me. And there are a large number of observers. Perhaps the greatest of whom is Donald Trump, openly said that objectively the interest of the United States of America is undoubtedly to devalue the dollar. And if we are the keystone of trust in terms of value, well, then I still don't have very compatible prospect of devaluation, of the loss of the value of this key to your consensus. So the United States is in the interest of ensuring that the key to your future quest is no longer to the dollar. And there's a little animal that raises its hand, its finger, and says, I'm a candidate, and it's Bitcoin. And very interestingly, the parallel the United States is developing objective incentives for American entities, institutions, companies, individuals, even American administrations to hold Bitcoin. So we're heading towards a destination where we might actually have 2 American currencies. A currency that is a bit like the currency of the past, which is the dollar, and a currency, another objective currency, American currency, Bitcoin. I wouldn't call it. They still don't understand it. I don't think they still understand it. But anyway, American currency of the global currency. Yes, global currency. Yes. There we go. I mean, it's gold belongs to Rome, and then Rome means gold gold is the Roman currency. And so if most of the Bitcoin belongs to the United States, well, we can say that it's an American currency. I guess. An advantage of the pockets of Americans. So they are becoming less and less likely to objectively seize, objectively appropriate the maximum amount of dollars, to establish somewhere their position, which is a legitimate position, extremely dominant in the dollar economy, which will be just as legitimate as the day they actually appropriate a very large majority of bitcoins. There are bitcoins as a means of payment. They are stable coins, which are mostly backed by dollars at 99% for infrastructure and payment transfers. Gregory Raymond, do you agree that this new financial system, monetary system, is American? Yes, I completely agree. What's more even that the certain type of company in America, even mostly Americans play the strategy to the fullest. And by the way, I almost play in words because I wanted to talk to you about the oh Jesus, I'm all over the place with this. The company to acquire the maximum amount of bitcoins per share. So how does she do it? In debt most of the time, but she shares a MicroStrategy and she's in debt. Oh my God, they're going into MicroStrategy now. My God, it's just yeah, it just keeps dragging on and on and on. But yeah, guys, we have back and forth on the French news outlets talking about, of course, the same thing Russia was talking about just a few weeks ago, and of course I covered that, and that was the Russian news. The Russian leader is afraid that we are devaluing our dollar and selling it off, basically selling it off into Bitcoin. All right. Moving on, guys. I don't want to spend too much time on this. We do have a lot of stuff to cover today. All right. So again, I just wanted to point that out. French news: the currency is completely losing value, and the future is Bitcoin. Said a quiet part out loud on the French news. Crazy. All right. So just so you know, what else we have here, I wanted to share with you guys. Before we get into everything else, Samson Mao saying, of course, more things out loud. Oh my gosh, no. What happened? Come on. I gotta get back into here. Here we go. There we go. Samson Mao saying, yeah, this 0.1 million, 2 million range, that's 100 million to 200,000 to 200,000, is a hard time for those weak conviction to hodl Bitcoin. They're uncertain because the cycle didn't happen like before, and also because the assets like other assets like gold are rallying. 0.2 to 0.5, that's of course 200,000 to 500,000, will be easily for Bitcoin to attain because it will move up very quickly. 500 to a million will be even easier. And that's really what I'm actually selling it for, a range. You don't want to be selling for a range, guys. You don't want to be selling back into paper. We burn paper every single night, guys. You don't want this silly paper shit. All right. Yeah, so for all the paper hands out there, hang in. Of course, Bitcoin will add a zero soon enough. Coming from, of course, my Otaku brother from another mother, Samson Mao. Love you, my man. Love it. All right. Okay, we did talk about that. The bulletproof. We talked. I think we are all caught up on. No, we have, of course, PAL coming out today with the Federal Reserve to host a conference on Bitcoin and crypto payments. Should be happening at about. I think they're going to start setting up at about 10:30, and then start talking about 10:50 to 11 a.m. All right. So yeah, European Central Bank Christine Lagarde says signs the attention of the U.S. dollar is slightly eroded. Let's go.
But you have also said recently that you think investors have begun to question whether the dollar would still warrant its status as the ultimate safe haven currency. I mean, the American dollar is one of the strongest weapons, frankly, that the administration has to use. Do you think that it is the rise of cryptocurrency that is most threatening to that, or why are you worried?
I see signs that the attraction of the dollar is slightly eroded, and future will tell whether there is more erosion of that. But when you look at the rise of cryptos, number one, when you look at the price of gold, gold is typically, in any situation, the ultimate destination for safe haven. Price of gold has increased by more than 50% since the beginning of the year. That's a clear sign that the trust in the reserve currency that the dollar has been, is, and will continue to be, is eroding a bit. In addition to that, we've seen capital flows outside of the US towards other destinations, including Europe. So, you know, for a currency to be really trusted, you need a few things. You need geopolitical credibility. You need the rule of law and strong institutions. And you need, I would call it, a military force that is strong enough. I think on at least one and possibly two accounts, the US is still in a very dominant position, but it needs to be very careful because those positions erode over the course of time. We've seen it with the sterling pound, you know, way back after the war, but it happens gently, you don't notice it, and then it happens suddenly. And we are seeing intriguing signs of it, which is why I think that having a strong institution with the Fed, for instance, is important. Having a credible environment within which to trade is important. So volatility, uncertainty, to the extent it is fueled by the administration, is not helpful to the dollar.
Yes, and if you guys have been following my channel for a while, you know that the central banks are stopping their hordes of cash and instead going to gold. All right, insight. Only 3.4%, 3 to 4% of capital are rotating from gold to Bitcoin could cause Bitcoin to double from current levels. Covered by Cointelegraph, only a small percentage of capital rotation from gold is necessary for Bitcoin to double from here. All right, of course, yeah, that's coming out from Bitwise. Bitwise put that one out, which is crazy because they're calling for 200,000 still by the end of the year, like everyone else, and we only have 2 months left. That's just crazy, guys. Crazy. All right. What else we have here? The No Kings rally still going on, and the headlines here on Fox Business, of course. That would be one of the things they'd love to cover over there. Anything else here before we roll back into TradFi news? Catch up in the chat. Nope, I don't think we covered pretty much all the headlines this morning. U.S. cattlemen fighting screwworm. Whoa. Herd drops. Wow. Say Trump's Argentine beef import talk is no solution. Yikes. Bill Ackman calls Trump the most pro-business president we've ever had. This is the second time he's been president, though. I don't know. Anyway, getting back into the chat, guys. Good morning for anyone else who just showed up. Yes, again, we got us also here. Grand Rising, Nebs, Andy, Braveheart, Cliff, Strawberry, JPEG, Over the Top, Always One Away, EZG, and Money. Let's get it, guys. Let's get it. Thanks again, Gamma, for the roll call there. Master Otaku, win Lambo. Come on, guys. You know when.
When will then be now? Soon.
It's coming. Yo, Hyperbolic, Hypobaric, Time Chamber coming soon. Yes, the Hyperbolic Time Chamber coming soon, says Danny. You got to get Bulma on that, Super Danny. OG Bobbin, yes, and Danny said, yeah, I'm handing out coffee this morning. Let's go. I need some more coffee, guys. I'm already 2/3 done with this coffee. I'm gonna have to make some more before PAL comes out. Good morning, Otaku and future crypto millionaires. Good morning, Beebs. How's it going? Morning. Thank you again for blessing us with your presence, oh legendary one. Yes, Beebs. Joy, happy joy to join the chat. Yes, hope you have a great day, guys. We're just getting started here. Andy Beebs, Joys. Yes, Gamma. Hello, Gamma. When Lambo. God, another. Come on, Andy. Damn you.
When will then be now?
Soon. It's coming. You just have to be patient. Even if it's next year or even if it's 4 years from now, you just got to be patient. Joy, yes. Hi, Gamma, Miss Lady, GG. Good morning. Have a great day. Everyone. Gamma guys, XCN to $1. XCN to $1, guys. GG. XCN. How is XCN doing this morning, by the way? Bitcoin still holding 108,400, a little down now. Ethereum, wow, look at that. The Ethereum fell to damn near 4,000 down to 3,860 now. Having a little bit of support here at this level of 3,850. What else we have? ZBAC down to 2036. Damn, could be a really good opportunity here to buy that dip there. It is a slightly higher low though, so again, still on a bull trend there on the short term. Jaspy's down to a penny. We got XCN down to 208. So yeah, 8/10 of a penny. Swift coin sitting at 6/10 of a penny. 6.5. What are some other of our favorites on here? Moonwell. Wow, we haven't talked about Moonwell in a long time. Sitting there at 0.0. It's a 1 penny 8. Not too bad on Moonwell. It's basically found the bottom again. Almost on the bottom again. Rolling over there to double bottom and maybe, I don't know. It's still a bull trend here, slightly, very slightly. Miria, yes, same thing with Miria. Been holding that bull trend for a little while there. Higher low. H-bar, same thing. Most of the coins look the same right now. Of course, everything's exhausted at the bottom, sitting at the bottoms. This is Swee also holding in there. like everything else. What else? Matic. I don't have that on there anymore. Okay, goodbye. Say. Everything up and to the right, higher lows with a little bit of a bull trend. That's on the 15-minute there. XRP, no different. Every coin looks the same, guys. Every coin is just waiting there, hanging out there, waiting for this meeting to occur. All right, I'm going to skip down to, of course, gold again. Take a look at gold, 4,175. We broke it. Yes, we broke 4,200. Hoping, look to see another pullback on gold here. Looking maybe at 4,100 coming soon. There might be something, you know, that might negatively affect gold going to be talked about at this meeting today. We'll have to wait and see, because there might be some insider trading going on. It's kind of weird that this all happens right before the Fed meeting on crypto payments and innovation, right? Stable coins. Here we are watching gold finally have a pullback. We've been calling for this pullback for a while. It's kind of strange it happens today of all days, though. I was expecting a little longer out, maybe touching maybe a high of 45 or 5,000 first, but yeah, we did see the pullback before that. Silver coming back down to $49 an ounce from a high of what, 55, almost 54.5. Looks like everything almost hit that halfway point psychological level for both gold and silver. For gold, it would have been close to that 4,500, and for silver, it basically got close to that 55. Again, halfway point for that 54.5. Basically sent it downward. Enough is enough. And of course, I've been showing you guys those videos of people waiting in line, buying gold in all these different countries. It was basically a top signal for anyone. And again, it could still rally. I mean, the dollar's not looking great, right? How's the Dixie doing today, actually? I wonder if it got, had a push back up with likes of gold falling today. Let's take a look at the Dixie real quick. And the overall sentiment in the markets. Okay, 98.95. So it did have a little bit of a push up today. It looks like our low yesterday was we ended yesterday at 98.5. So it's up half a point today on the Dixie. Again, not great to see, but that's what it is. Still down and to the right on the year from a high of 110 at the beginning of the year when President Trump won the election. All right. How are we looking at the overall sentiment today? Let's look at bubbles. Let's look at fear and greed. Fear and greed in the stock market right now. Looking at, come on, can you get some extreme fear? No. Nope. We are sitting at fear right now at 30, and yeah, we have the crypto fear and greed coming in at maybe a little higher, like 32, maybe 34. Okay, 34 is not bad on the crypto fear and greed. There we go. Crypto bubbles, guys, on the day looking red. We're probably gonna pull back. We did have a good day yesterday, so and we are still waiting for a lot of these narratives to play out. We got 2 minutes until it's 10 a.m. We're gonna, of course, get into crypto news here next. I'm gonna, of course, show you some of my favorite picks today. What's down the most on the day, though? Let's take a look. Synetics, that's a newer token that emerged, right? I believe that was newer. No, maybe this wasn't newer. Probably think of a different token. Synetics had a big breakout here recently, up about 150, almost 120% on the month. So having a little bit of a pullback now, right? Holding still some of those gains there. 15% on a day is not too bad, though. Soon, I don't know what the hell this is. It's pretty new, though. This one, when did this one come out? Back in May. Sitting up there in these highs, is still up 133% on the month. I don't know what this is, but it's probably going to pump again soon. Down 16% on the day. Useless coin also one of the bigger movers today. This coin still kind of taunts us in the top 200. I'm still in the 200, not in the 100. Wow. Yes, and this is already up 54% on the month. Still holding those gains. It's still a pretty relatively new coin. Only came out back in May as well. All right, let's take a look at the top movers on the top 100. Yeah, Chain, Opera AI still killing it, 45% up on the day. It's still only a month or less old, so again, take caution with this token. Do your research. It's sitting at the lows now. Maybe it's found its bottom. It did recently just have a launch, so be careful. Another big mover today. We got Floki finally coming down because that whole entire big pump for nothing from Elon on that silly meme is pretty much been over with now. So the dog had its day. It was up like what, 25%, then 50%, then down, and now holding basically none of those gains from yesterday. So I guess it's down 12% from yesterday. Yikes. on Floki. Floki still has an ETF, so if you're bullish on that meme coin for whatever reason, I don't know why you would be, but yeah, you could still hope for that in the near future. Any other big movers? There's some coins that have moved down about 10% here on the day. It's not too bad if you do like those projects like Fetch AI, Tau, Cake, Pancake Swap, that is, of course. Then maybe you want to look at some of those for more DCA opportunity. 10% on a day is pretty decent, of course, to pick up. What else is down on the week now, though? I'm looking for big numbers on the week. I'm looking for like 25, 30%, and there's nothing that's 25, 30% on the week right now. The closest sitting at closer to those levels would be like Fetch AI, down 20 point, almost 21% on the week. Pancake Swap, same thing. Aster. What the heck? I just never can say this damn thing. Chain Opera AI, whatever. IP down about, again, 20% as well on the week. And Say is down 11, and AVAX is down 11. Sui is down about 10. Alright, so those are, of course, some of the bigger movers here. Now, what's down the most on the month? This should be interesting. Fetch AI is down 60% on the month. Say is still down 40% roughly on the month. AVAX down about 40% on the month. Yeah, some of my favorite coins. I'm of course being hoping to get some extra dry powder. Never quite have any though to buy. Render down 40% on the month. And what are the big takers here? Squeeze down about 30% on the month. We're looking for coins that are down at least 40% on the month, and there's plenty of here to choose from, guys. If I were to pick a couple big ones today that I knew they're probably going to swing up back fast, it would probably be, again, these top three of mine: Say, Sui, and AVAX. I know some of you guys in the chat like IP Story. That's down 60% of the month. Huge opportunity if you guys believe in that project. Still relatively new project though. Again, just came out this year, back in February. So again, be careful with what you choose. Again, my top picks today are probably going to be, I'm going to just stick with the bigger down L1s, the big L1s that are down the most, which are Say and AVAX. I'm just gonna pick those two. Wow, even Pengu's down 40%. That fast token's down 60%. Guys, all these crazy things. Pump that fun if you believe in that crazy bag of nonsense. Down 50% on the month. All right, plenty of things to choose from. Top 200. Let's take a look at the top 200% real quick on the same sort of scale. Wormhole's down about 40%. I do like that. It's 36.3 right now on the month. That's probably giving me my top pick here. MYX, if you guys are under that one. It's, of course, a DeFi play there. Jido, also been in the news. Actually, they're going to be present. I don't think it's going to be this meeting, or I think it's going to be the next meeting at the SEC roundtable. The CEO Jido is going to be there, which is questionable. Maybe that'd be a good play, right? It's down 40% on the month, 50% on the year. Hasn't really done anything yet this year. That could be one I might want to DCA into if I had a bag of dry powder right now. Linnea is down 50%. If you guys have been following Linnea, that's a big one this year. Again, still a relatively new project. It just launched about 2 months ago or less. And that's pretty much it. There's nothing really else down like more than 30%. We still have Jasmine down about 30%, XCN down 30%. There's some, of course, oldie but goodies in here. But if I were to pick today, I'd still be going with the Wormhole. And I might just want to jump on that Jido play. I have a feeling there's something's going to move with Jido. I'm not going to be able to do it. But again, guys, my 2 cents. Not yours, not financial advice. Those are my top picks today.
I'd buy that for $1.
All right. Moving back into it, guys. Get back in the chat here. Catch up with you guys real quick. Yes, when Lambo is going to happen soon. Yes. Hi, Gamma, Miss Lady. GG. Good morning. Yes, have a great day, guys. XN to $1 says Gamma. Yeah, we hope so, Gamma. We hope so. All right. Let's see what else we have in the crypto news. I'm gonna do one more run through CRPYPTO, make sure we don't miss anything, and then jump into the news. It's time we get that out of the oven. We're 4 minutes after 10. Usually the time we go over there, and we're 4 minutes behind. There we go. General Motors, talking about that on CNBC this morning. We've already mentioned it. The doom they're facing, and Warner Brothers, yes, of course, open to sell because of AI. Guys, AI is going to destroy everything. If you guys want to take some more doom home with you, you can always take a stop at the merch store. Yes, the Crypto Otaku's merch store is now live, guys. If you haven't already checked this out, you can pick up some doom and take some home to your friends and family. Jeez, I love it.
What are you, stupid?
Yes, yes. Of course, we got coffee cups, we got stickers, we got socks, we got T-shirts, we've got hoodies, we've got everything. A little bit of everything on the store, guys. Of course, go pick up, some sort of chaos for you today. All right. What else we got? Crypto news. Let's get into it. Cointelegraph, right out the gate. Cointelegraph. U.S. Political turmoil tests institutional confidence as crypto ETFs bleed into this thing. I wonder if these ETFs are rolling into Bitcoin. I wonder if the Ethereum ETFs are doing what Samson Mao was, shouting from the rooftops, saying that they were all bleeding into Bitcoin. The outflows come as the No Kings protests swept across the U.S. amid a prolonged government shutdown and political division, deepening the market risk aversion. Guys, we're at day 21 right now. It is insane. It's crazy. Day 21. I did a poll in the chat last night. If you guys didn't catch last night's live stream, 70% of the chat said that no one they know was affected by this shutdown so far. So, kind of interesting, because I don't know anyone in my friends, my family, my connections. I don't know anybody. I really don't know anybody. U.S. spot Bitcoin and Ethereum exchange ETFs extended their losing streaks on Monday, marking another day for outflows and investor sentiment remained fragile in the mounting political and macroeconomic uncertainty. According to the data from Soso Value, spot Bitcoin ETFs recorded 40.4 million in net outflows on Monday, their fourth consecutive day of withdrawals. BlackRock's IBIT led the losses, shedding 100 million, while Fidelity's FBTC and Bitwise's BitB posted inflows of 10 million. Interesting. So it looks like they're going from the big boys down to the smaller guys. It looks like a little bit there, not much. I mean, they had a little bit of inflows, but not much. The cumulative total net inflow in spot Bitcoin ETFs now stands at 61.5 billion, with total net assets slipping to 149 billion, or about 6.7% of the Bitcoin's market capitalization. Spot Ethereum saw a similar pattern, logging at 145.6 million in daily net outflows. The other straight sessions of bread, BlackRock's Ether saw the largest single day of withdrawals of 117.8 million, followed by the Fidelity's FETH, which lost about 27 million. No Kings protest sweeps the U.S. The continued outflows coming amid the growing political unrest in the United States. Sunday, as the U.S. government shutdown has entered in its 18th day, nationwide No Kings demonstrations accuse the Trump administration of sliding towards authoritarianism. From Times Square, New York, to Portland, Oregon, and Los Angeles, crowds chanted, "Resist fascism!" and "We are the people. We are the people. The rule." According to the report from Politico, I wish that were the case. I really wish that we, the people, rule. But it doesn't work out that way. In a note shared from Cointelegraph, Bitunics analysts said that the political turmoil is not merely a clash between the public sentiment and authority, but a stress test of the institutional confidence. And they warn that if the shutdown continues, that the impact could extend from liquidity to structural trust in the United States system. The market's next move may depend on whether the nation's political institutions can restore consensus amid deep division. De-risking phase takes over the market. Meanwhile, Vincent Liu, Chief Investment Officer at Kronos Research, told Cointelegraph that the persistent ETF outflows reflect a broader de-risking phase. Investors are locking in profits and sidelining fresh capital. Both ETFs are seeing a reduced risk appetite and thinner bid depth across the board. The U.S. political turbulence has deepened the cautionary mood. The erosion of trust in policy stability is pushing capital toward defensive plays. Looking ahead, Liu expects volatility remains elevated and markets await clear policy direction. Yes, hopefully we get the government back up and open soon so we can get more of that. A more defined macro path of U.S. political tension, restore confidence, reviving risk appetite, and turning ETF flows back to the positive. All right, so again, we're still waiting for the government shutdown to resolve some of this mess. All right, what else we have here? Bitcoin eyes the CME gap below the Bitcoin price dips 2.5 risks, 100K collapse, 200K. We still have, we don't really have any, we don't always have to go back to the CME gaps is what I'm trying to say, I guess. But we do still have potential dips back to 103 and, of course, 100 flat. 97 is the extreme one. I don't think we're going back there But anything is possible. Anything's possible. The fire sale, guys, is still sitting at $91,000 Bitcoin for that larger macro trend. Don't forget that. All right. What else we have? Binance, 33 million charity gift becomes a Malta's political minefield. P2E Apocalypse is gaming's best news. Yes. Play to earn models, guys. Of course, where you can play and earn crypto rewards, and you can already do that, guys. If you haven't already checked out Off the Grid, it's one of my favorite crypto games. It's a battle royale, cyberpunk, dystopian future, right? You know, just like we live in here on the channel. Off the Grid game. You can play it on PC, PlayStation, Xbox, pretty much any console you got, and you can play it on PC on Epic Game Store, or even Steam now has access. I'm still waiting for them to roll that over so you can transfer your Epic account to Steam. It's a great game. Again, you can play for rewards. You literally can earn every single match if you are good enough, and I love it. All right. Okay. What else are we talking about here? Asters, quiet resisting of DeFi Llama leaves big gaps in data. Crypto market surge as Trump confirms the October 31st summit with Xi Jinping. We can talk about that for real quick. De-escalation of tensions and growing odds of trade deal between U.S. and China are positive price catalysts for cryptocurrencies. And of course, United States Donald Trump confirmed on Sunday that he is meeting again with President Xi. So again, we've already talked about that at great length already. There's nothing new there. Let's take a look at, how about Daily Hodl? And then we go back to, of course, do another run through TradFi news. All right, massive Bitcoin whale initiates whopping $122 million Bitcoin short. If you guys didn't hear about this yesterday, we talked about it. Some of you guys in the chat were talking about it. I think it was Nebs. I think it was Jake the Snake also going back and forth on it. Massive crypto whale loaded $122 million short position on Bitcoin. This is like the same sort of thing we saw before the other big pushback we had 2 weeks ago on that Friday, where Trump, of course, put that tweet out. Maybe some insider things happening behind the scenes. Massive crypto loaded $122 million short position on Bitcoin through the decentralized exchange Hyperliquid. Again, on Hyperliquid. The transfer $30 million in USDC to Hyperliquid to fuel the bet. According to Arkham Intelligence, this move comes after the whale pocketed $200 million in a shorting Bitcoin during its recent plunge to about $105,000 Bitcoin. I think the actual number is $192 million, but he was counting right. What's another $8 million? It's ridiculous.
What are you, stupid?
In the past week, the whales also shifted $540 million worth of Bitcoin to fresh wallets, including $220 million deposited on Coinbase. The short position was taken at an average of entry price of $109,000. Uses 10x leverage with a liquidation price of $135,320. That's a huge gap, too. Damn. Arkham's tracking shows the whale's equity holds over 4.8 billion assets. Mainly in Bitcoin and USDC. We're still waiting for that target. We're still waiting for that damn target. I'd love for these people to get liquidated and not, of course, keep taking advantage of all the people shaking out. All right. We're over that one now too. Let's see what else we have. U.S. crypto investor loses $3 million in XRP and devastating hack. That sucks. Institutional investor pours $434.9 million into Ethereum, Solana, XRP in 1 week, while selling off $946 million in Bitcoin. Damn, almost $1 billion. And institutional investors. Okay, they're just talking about these. Why? Okay, investors. Yeah. Wireless giant prepares to sell $177 million to customers in data. Breach settlement. Of course, scams, hacks, breaches, yada yada. Fundstrat saw Tom Lee says Ethereum could flip Bitcoin. We already talked about that yesterday, and the day before, and the day before that. It's an old news. All right, fake social media accounts, the rise on Cointelegraph, impersonators, yada yada. All right, I think it's time for us to go back through the TradFi news and let more news load. All right, let's get back in the chat one more time. Nebula Nerd sharing a Facebook. I can't share a Facebook link, my man. What are you doing? Yes. Gamma Gaddis, how's it going? Yes, thank you. Happy joy, guys. Good morning. Yes, XN to $1 indeed, says Braveheart McFreedom. Hi, Braveheart, have a great day. Yes, have a great day, everyone. Yes, still dumping over the top shop. We're talking about gold, still dumping. Silver now at 48.9. Gold. Gold sitting at 4,177. All right, so nothing too crazy yet. We're still waiting for the I want the grander 4,000. I think that is more likely. I've been calling for that for a while. That's going to be the next stop, but maybe it only stops at 4,100. Maybe it only stops here. I don't know. But the next stop would be about that 41 on gold, right? 41 on gold. Okay. Bitcoin at 109,600, up a little bit, while gold is, of course, selling off a little bit there. It's kind of weird. Maybe it'd be de-pegging a little bit from gold, but still long-term, following that lagging indicator from gold, which, of course, sends us to about 155,000 by December if we follow it to a T, right? If we follow it to a T. It's been a while since I got to put that back on there. All right, bear with me, guys. I'm going to do this real quick. Actually, I'm going to play this in the background while I do it real quick. Let's see what the talking heads are doing. I'll throw gold back on the chart. Talking heads over on
normal. The key thing is what could be a trigger. So and I'm worried about a similar 2008 type scenario because gold went down because everything went down back then. Now the problem is both. It could be negative for gold if stocks keep strong and volatility stays low. There could be a little pressure factor on the ancient store value. But if the stock market has a bit of a 5-10% correction, which we haven't had in a long time, that can push everything lower. So right now, it's also the time of year we get volatility. And I'm kind of it just makes me very concerned about what might happen as we get through the end of the year.
Hey, Mike, we've been talking a lot about a government shutdown, right? I think we're in day 21 if we're keeping track. But the Commodity Futures Trading Commission, that report, that's been put on hold. I mean, how crucial is that for you to keep an eye on?
Well, I'm glad you mentioned the shutdown. We seem to have forgotten. It's also part of the perfect storm for gold, which might be ending. The COT data, commodity futures trading, is delayed. We haven't seen it for about a month. Before this happened, gold was not really overbought. So that, in terms of futures, the key thing you can watch is open interest. The key thing I've been watching, open interest in gold has been flat for years. It's not really jumping up. There's not a lot of signs of speculation in there. There's definitely pickup in ETF buying, ETF inflows. But the key thing that's really seems to be moving gold is the cash market. And central banks are still the underlying buyer below the market. The thing is, I think they're somewhat elastic. They're big buyers from 2,000 to 3,000. But as we get into 4,000 handle, I think they're going to be curtailing their buying.
All right, Mike, thanks so much. We appreciate that. We'll get to pork bellies next time. Mike McGlone, Senior Commodity Strategist, Bloomberg Intelligence. He's down there manning our Miami Beach office here.
Weird glitch on my chart here. Basically, I was trying to dump the gold bars pattern on there, which I have right here pretty clearly from this year's breakout back in January to where we are now. I jump over to Bitcoin and there we go. It's doing some weird stuff before, like what the hell. All right, so yeah, we're basically going to put this in about the 2.5, 3 months out from the beginning of the year, and I'll show you, of course, the lagging indicator on gold right now. Would be right around here. Okay, January, back into, let's say, March, April. So, but I'll put it right on top of April. That's probably close enough right there for being a lagging indicator on gold. All right, so putting that on top of gold, you can see it's very clearly following gold's lagging indicator about 3 months out from where gold is currently. And if we follow this basically towards the end of the year, by December we're going to be sitting about a $50,000, $55,000 Bitcoin, as I mentioned. That's kind of what we're following on gold's price. Gold pulling back now would be I guess lagging indicator for a pullback on Bitcoin, right? If we do see a bit of a pullback on gold, my guess is we're probably going to see a bit of a cup and handle and get a leg out in the long term, maybe. In the short term, it might just recover right away. I mean, it depends on what the resiliency of the dollar looks like towards the end of the year, and if we get anything big happening for risk-on assets like Bitcoin, or risk-off assets like Bitcoin. But of course, Bitcoin can be both, right? It can be both. All right, Bitcoin currently sitting at 110,000. Talking about, of course, a possible breakout on Bitcoin. We do have the Fed meeting happening in about a half hour, guys. So we're still hanging in here, waiting for that to happen. Stablecoins, innovation in AI sector. Guys, I didn't even do any shilling this morning. Guys, we have 40 people watching the live stream right now. Please don't forget to hit the likes. I need to shill harder according to Jake the Snake. Guys, hit that like button and subscribe. Trying to get the likes up to the watchers. 40 people, guys. Come on, let's get this 40 likes. The record currently for the channel is 55 likes, guys. 55 subs, 55 everything. Let's get a little bit of everything today. All right. Let's get back to the TradFi, see what else we have to dig up here. CNBC on the live, and then we of course get back into crypto news. More Coca-Cola getting the stage where AI can start to make a difference. Really?
On earnings day.
Thank you.
James Quincy, the chairman and CEO of Coca-Cola, David, with an unusual move of almost 4% for a staple. That's a big one.
It is a big one. Interesting hearing him discuss AI as well, Sarah. Thank you. Here's our roadmap for the rest of the hour. Up next, we're going to have hedge fund manager, activist investor as well, Keith Meister. He'll.
All right. Moving on. What else we have? Fox Business. Talking about JP Morgan requiring workers to. Damn it, missed it. Do something. Oh my God. Opens 3 billion headquarters in New York City. Yeah, of course, yeah, more of the big banks. Okay, speaking of the big banks, we should hear some sort of related news to crypto and the big banks today, the Fed meeting. Let's take a look and see how that's going. It should be at 10:50 today. When is Fed meeting? Innovation, stablecoins, yada yada yada. Today? Question mark. October 21st. It said yesterday 10:50. I swear it did. Okay, what time? What time today? 8:30 a.m. EDT is starting. It should have already had it started apparently, huh? To 5:30. What? That is weird. 8:30 to 5? That's the whole damn day. Federal Reserve Payments Innovation Conference. We not seeing it live then? Stablecoin tokenization AI future. Let's see if we get the news on this maybe. Hour ago. Live Fed Pinners Innovation real-time updates as Fed Reserve discussed crypto stablecoins AI with industry leaders. This is a closed meeting then, I'm assuming. I thought we were going to get some sort of focal point on it. The Federal Reserve is hosting Payments Innovation Conference today, making a market shift in centralized banks. Conference agenda signals the Fed growing. Conferences arise at a pivotal moment in the payments industry as the traditional finance institutions increasingly embrace Bitcoin technology, tokenized assets. Panel addresses permissionless oversight and compliance of Bitcoin. Michael Shalov. Fireblocks discuss the permissionless nature of the blockchain, noting that it's a risk managed through the whistling wallets to control retail and institutional interactions. Of course, we don't want CBDCs in our country. Custody, resilience, DeFi integration discussed by Shalov and Barker. Shalov and CEO Fireblocks emphasize the blockchain inherently provides a ledger storage that enhances custody security via multi-signature wallets involving crypto stakeholders rather than single wallets and banks. All right, let me see if we can dig this out. And if we really aren't getting any video today, that would suck. I was hoping to see something fun. I hang out and watch it with you guys. Host Payments Innovation Conference today. Okay. Is there public access, I guess? To video feed, question mark. I don't know. AI. Come on. Happened. Yeah, I get all these different numbers every time I look it up. What the hell? What the hell?
What are you, stupid?
I don't know. There's the 1050 one I was talking about there. Panel on stablecoin use cases and business models. So they're doing it all day, 9 a.m. to, about, this one says only out to 3:30, 3:45. Okay. Federal Reserve Pay website. Maybe they have a video here. They're live. Federal Reserve live. 1050. Yeah, so they're only going to have this available at 1050 for us to view anyway. So they already started discussing. We're just waiting. All right, I'll keep this up and running in the background, and when I go live, we'll know. We'll hang out. It's going to be a good one, guys. It's going to be a good one. All right, let's put that over here with the rest of the fire. Yes. All right, and when I see someone in the corner of my screen, I will pull it up, guys. So 1050 is still the time. All right, cool. I got scared for a moment, guys. I'm telling you, I was freaking out. No. Yes. Overtop says still dumping. Yes, I think I read that earlier. OG Bobbin. Yes, how's it going, OG Bobbin? How you doing, my man? Yes. Okay, gold sell off, and now now in pump our bags. Gold selling off, pumping our bags. Crypto JPEG says yes. Today's my daughter's first birthday. Wow, congratulations, Crypto JPEG. Let's go. Let's go. Happy birthday. Happy first. Come on, Fed. Give us some good news and start to pump for her today. Yes. Let's get this Bitcoin dominance down to lower than 50%, says Beebs. Oh, man, that would be insane. Insane. Huge rally for crypto assets if we did see that happen, Beebs. I just don't know if we're going to see lower than 55, though. My guess is somewhere between 52 and 55 would start a rally. I don't even know if we're going to go under that. Depends on how much money flows into both, right? Okay, right now let's take a look at the overall crypto market cap. Currently sitting at 3.7 trillion. Not too bad. Hanging in there. Of course, still down from that 4.3 trillion we just saw, of course, a couple weeks ago. We haven't even got back up from the last big dump, which was sitting at just barely $4 trillion in our space. Then we have, of course, some of the big movers today. I want to see XRP flip BNB, man. I really do. BNB just needs to go down. Go down to Pound Town. Has, of course, a big pullback. It's down about $300 from the top, but still, I want to see more of the flippening. And I kind of feel bad for all the bag holders of XRP right now. But anyway, it's still sitting there at 147 billion. It's down about $1 billion today, but yeah, it's got to get back above there. I remember when it flipped a Tether. Man, it's down still about $40 billion. All right, moving back. Okay, into other coins. Of course, those are the only ones I pay attention to in the top 10 right now because they're the ones really moving and it's really exciting to watch. Of course, everything down the bottom still the same. Tron 8, Doge 9, Cardano 10, and the outskirts here we got Chainlink flipping Hyperliquid. Let's go. Of course, I told you guys this would likely happen today. We're going to get a little bit of a possible buy the rumor, sell the news into Chainlink because they are going to be talking on the board this week. I believe at the SEC tomorrow. Anything else happening here? Sui sitting at 16, Bitcoin Cash at 15, Avalanche at 17, Litecoin barely holding 20 as per usual. All right, nothing else new there. Let's do one more run of news. I gotta finish up in the chat. Damn it. I'm really bad sometimes. Yeah, getting scared of this pump into the meeting. Yes, do we dump after, says Crypto JPEG. Well, we had 2 meetings, so I don't think we're going to dump after this one. Maybe after tomorrow's meeting. We could see a rally into this meeting, into next meeting. That'd be pushing us into maybe a Wednesday evening dump, maybe. Or a Wednesday evening pump. We could just pump. Wednesday's a good day for liquidity. Thursday is as well. Maybe we pump a little bit on Wednesday and then have a big pushback and into the space on Thursday. Thursday would be a really good day then if everything's sold off on Wednesday and people are just buying a dip again. Because there's really nothing hanging after Thursday except for we got to open the government. President Trump and President Xi have to play nice. Zelensky's got to give up some land to Putin to end that war, and that's pretty much it. After all this, to be in the grand scheme of things, the short version, right, of all the narratives we have right now. You found my floppy disk. I did, Jake. That's right. I did. Let's go. It took me a minute. It was hiding underneath the altar this morning. I found it. Yes, guys, don't forget to shill harder. We're trying to, of course, get the channel up to 1,500 to hand out more wrenches in the chat. I want to break the YouTube algorithm, so we got to get back to handing out wrenches again soon. So, guys, aiming for 1,500 next is our next target. That's only 400 and some change away. We're getting back up there, guys. We already passed through 1,000, and we're breaking up to, I think last time I looked at it, we're like over 1,020, 1,025, something like that. Again, guys, don't forget to like and subscribe. 32 people watching. Let's get the likes up to the watchers. Let's go. Bitcoin is back over 110,000 Beebs. Yes, it is. Yeah, I'll take my 53%, says Beebs. Yes, he'll take it. I'll take it too, man. We got to get this altcoin season finally started. This is ridiculous. We've done nothing this year. Guys, I don't know if you guys looked at your portfolio lately. I can compare my portfolio back to where it was back in April, May, even January, in my portfolio in terms of dollar amounts. Again, the silly paper nonsense, right? We burn every single day on the channel. Yeah, if you compare it to that, it's pretty much back to where it was even right now at the beginning of the year. Hasn't really done anything this year. in terms of anything significant. So there's coins out there obviously holding it up. There's probably a lot of people, sitting down if they didn't hold the likes of Bitcoin or ZBAC or maybe some other big movers we have this year. But other than that, we haven't done anything. We haven't done anything this year. If you zoom out and you look at Bitcoin overall in the weekly, we have it basically just looks like if you squish it down, right? You squish it down. This looks like a long bear market. Just looks like a long bear market. We haven't seen any parabolic moves at all to the upside, showing us that we have the power. We have the power of financial freedom on our side. So still waiting for that to play out. And I think, gold, lagging indicator is definitely pointing that direction towards the end of the year. Okay, all right, enough of that said. Bitcoin now retesting 109.7, 109.9. Let's take a look at see how the market's holding up with the order books. Let's take a look at Kim by the White Snow Lion, brought to you for free on YouTube. Don't pay for something, get it free, guys. Stupid? Yes, no, we we get, of course, this for free. So this is what the order books look like right now. Yesterday I showed you guys this in the live. It was crazy. It looks like we're seeing a little bit of bot action. I just passed by. Yesterday we were watching literally one Bitcoin at a time, like every 2 minutes. It was like some crazy bot action happening. Right now it looks like we do have a lot of big traders trying to buy up some of this here at this level. It's kind of weird. 1.2 million just passed by right there. No huge amounts being sold at the current moment. There's definitely some bullish momentum moving into these meetings, for sure. Right now we are still range bound though. Again, just kind of quickly giving an update on that. We're still range bound. And the midterm here, let's go into both again. In the short term time frames, we're still ranged at 110,000 and 107.5. Hopefully we don't see the likes of 107.5. I think that's 107.5. Let's go back to the chart real quick. Right there. Yeah, no, I'm not zoomed in the 15-minute. There we go. Like 75 grand. Yeah, that's on like the 4 hour, or the weekly or something. All right. So right here, about 105.8. The short term right here, 107 flat. It's 107 flat. Okay, there we go. 107 flat is currently our bottom range. To that, to of course 112. That's the big range, I guess. The larger range. But the short range is 110 to 108. 108 to 110. We have a $2,000 window right now on the short term pullbacks. On the longer term pullbacks, could be looking at something like, wow, we did wick up to 111 almost 111. That's crazy. All right, so that's of course the pattern of the channel inside the channel right there. We are definitely stuck in a very, very tight channel. Let's actually move this over. We lost that a long time ago, so let's move that over. I can't believe I still have that on the chart. It's ridiculous. All right, let's get this on here. I can show you where we're range bound a little bit more easier with, of course, the parallel channel. There we go. And there you have it. Why can't I drag it? What is going on? Oh, come on. Why is it not letting me drag these points? Weird. Oh, I think I'm grabbing other things on here. Okay, well, screw it. I'm just going to move it over. It's only relevant down here anyway. There we go. So we're still range bound. We do still have, guys, about 15 minutes until the Fed conference. I am still watching that in the corner of my screen just to make sure no one comes up and starts talking, right? So still watching this over there. And we have about 15 minutes or so until that pops on. All right, let's get back to some more TradFi news. I'm jumping all over this stuff today. There we go. I'm gonna push that back over there. Get it out of my way. All right. So, we're still waiting on that to play out. But as of right now, it looks like Bitcoin's holding 109 like a champ, high or low at the current moment. No big sell-offs yet in sight. Okay, all right. Moving on back into TradFi.
But to your point, on the consumer side, consumers are saying one thing in the confidence survey, but we're seeing another thing in their behavior, and they're still spending money, and retail sales are still
Doom
strong.
spending, I call
As
it.
I always say, consumer drives the economy, so if they have jobs, they have money, and if they have money, they tend to spend it.
30 seconds left or so. Big tech, of course, earnings coming up too. So what are you looking for? I mean, are you looking closely to see how spending on AI, like, is that leading to profitability? Are we going to start to see that?
I think that's been an interesting change in what investors are beginning to look for, right? You've now started to see some things about earning return on that spending. And I think that's an interesting inflection point. Now, when I talk to advisors, you have to...
All right. Talking about AI, of course, increasing earnings. Okay, let's move on. Of course, we know that's going to be a real thing. We're gonna have companies that start up. We're gonna have the first billion-dollar company that only has one employee. It's gonna happen sometime soon.
And as a stock analyst, author, and futurist.
C's on break. Talk about Fox Business here. What do we have? Anything here? Government shutdown continues. Charlemagne lashes out on the MAGA accusations. I don't know. Some political nonsense. Moving on. See if we have any more news in the crypto sector. Let's take a look, of course. Anything new? Breaking news? Can 108,000 at Bitcoin 108 can price finally clear 115 as Fed talks payments today? Possibly. Coinbase makes another huge cryptocurrency move. $1 million purchase made on Coinbase there. We can talk about that. Andy did talk about that, mentioned it earlier. So again, shout outs to Andy on this one. Deals in crypto sector have accelerated this year as the crypto-friendly Trump administration has encouraged companies to expand their businesses in the United States. At this point, the latest news comes to Coinbase and the latest cryptocurrency exchange in the United States. Coinbase said today they acquired investment platform Echo and a cash and stock deal worth approximately $375 million, and it aims to build the fundraising tools to its platform. While the official statement came from Coinbase, Echo founder and the online coin nickname Kobe, Jordan Fish also confirmed the agreement on the social media platform over on X, the real news platform, of course, X. The Coinbase stated that the reason for investing in Echo was simply that they wanted to acquire Echo. They wanted to create a more accessible, efficient, and transparent capital market. Fish and said Echo will remain the standalone platform under its existing brand for now. He plans to integrate Echo's public token sale product, Sonar, into Coinbase. Coinbase explains that the deal will be allowing startups to secure custom designed fundraising and mechanisms tailored to its user bases and expand opportunities investors directly access early stage projects. Coinbase also acquired a special NFT from Echo founder Jordan Fish for $25 million yesterday. What? The company had announced that it had his up-only NFT, which was purchased. He would resume the podcast, and which he had paused since FTX crashed at the end of 2022. Coinbase has also been attracting attention in its acquisitions this year. $2.9 billion acquisition of Deribit, the largest crypto derivatives exchange, and has generated considerable attention thus far this year. Not investment advice, guys. All right, more accusation. From Coinbase. Aster outpaces lighter in perpetuals DEX rankings as Wintermute buys the dip after previous dump. Coinbase delisting triggers 70% crash of a popular token. Let's see what token that is. That's Omni token. All right, Omni. Moving on. I haven't heard that coin in a long time. The top reasons Pepe coin price is at risk for a steeper crash. Doom for Pepe. Pepe doom. I don't know why. I'm not reading that shit. What are you, stupid? Oh, jeez. Ethereum $1 trillion prediction issued as ETH tokenized gold hits 2.7 billion. Okay. Anything else big here? The whole Pepe thing could be because maybe they're not getting their ETF this month. They're supposed to get their ETF rolling out this month. Binance 33 million charity gift becomes Malta's political minefield. A lot of these headlines we already read this morning. Okay, let's do another run through TradFi. Make sure we didn't miss anything popping back up here. They're on break at Bloomberg. Come on. They're talking about Warner Bros. Still. Paramount, of course, potentially maybe making that purchase, or Comcast, we don't know. Guys, just for a daily reminder, newslive.com. You guys want to catch the news for free, of course, jump over to newslive.com. I don't pay for anything I can get for free. What are you, stupid? No. Not in this case. Anyway. All right. Catching up the chat right here, guys. Yes. McFreedom. Yes, coming in there with the Jake the Snake McFreedom. Turn the volume up, says Cool Guy 40. Not sure which one there you're referring to. The king is pleased, says Jake the Snake. Yes, the king is pleased. Board up. The government. No need to reopen, says Brad. Yes, let's board it up. Let's go. I love it. I'm sure a lot of us would love to see that. But there's some things we just can't do as a community anymore like we used to back in the day. I mean, we had to build that all together. We're scared of each other, guys. It's a different world we live in now these days. I was actually talking to Tiny Mouse about that yesterday. It's kind of crazy. You guys are talking about that today. Yes, so we need less government. I agree with you, but it's going to be hard, of course, to go back to the old ways, the way things are built now. All right, okay, so yes, everyone's kind of just waiting on our heels right now. We got 10 minutes now until the Fed meeting is going to resume. That's going to happen at 10:50, guys. We already had the video up and ready on the corner of my live stream, so yeah, we have it. And I just wanted to, remind you guys, we're just waiting for 10:50. 10:50. All right. Getting back to it. Throw that back over there again. Okay. All right. What else we got? How about some more crypto news? How about we take a look at Bitcoin.com? Let's see what's going on with Bitcoin.com news. Bitcoin price watch 109K hold. Is it holding? 110. Yep, still holding 110. Bitcoin dips below 108. All these are older articles now. 2 hours ago, 20 hours ago, a day ago. All these are old. All right. Let's see what we have at. How about CoinDesk? It's been a while since we looked over there. CoinDesk. Anything here? Anything good? CoreWeave CEO stands firm on $9 billion core scientific offer as shareholders' opposition mounts. CoreWeave, yep. Joe Lubin, Sharp Link Gaming resumes Ethereum purchases, bringing holdings over 3.5 billion. Again, one of the largest Ethereum digital asset treasuries. Coinbase acquires a crypto fundraising firm Echo. We just read that article. U.S. surging in crypto activity under Trump. Yeah, it's the overall narrative. What you will miss was stellar Meridian conference. What else? Debt-fueled AI pivot puts Bitcoin miners to the test. Bitcoin battles key technical levels in October. Is it October? I still like that Doomtober. CoreWeave, yeah, it's pretty much all the same. BNB falls 3.3% as market shakeout cuts through support. Yes, I love it. Anything else here? How's gold doing right now? Let's just keeping an eye on gold and silver too. They've been dumping. They're back up to 4,120. Hanging out there on the 15. Damn, yeah, all the way down to 4,100. Flat soon. 4,000 soon. This is the next key level we had marked. All right, yeah, I even put that little thing there. So yeah, we're still waiting on a bigger pullback, maybe happening soon on gold. Damn, that's a huge one. What is that down now? 5%. Oh, come on, we can do bigger. We can do better than that. Jeez, come on. We're hoping for maybe at least a 10% pullback, 10% back down to roughly around 4,000. We're 9%. Yeah, 4,000. We want that. I guess it would be about 10% from the top, wouldn't it? 4,000 flat, about 9.5, 9 3/4. All right. Joe Lubin, Sharp Link Gaming. More Bitcoin. Ethereum purchases. I think we read all the headlines. I think we're all caught up, guys. We're just waiting on breaking news. U.S. Crypto Coalition warns bank data fees could cut off oil stablecoins. Doge consolidates near lows. A lot of hopium in these articles today. All right, gotta get back to dark mode. I'm gonna burn my retinas. All right, guys. I guess while we're waiting, I can chill a little harder. Guys, we got 35 people watching the live right now. Don't forget to hit the like and subscribe. Of course, get the watchers up to the likes, up to the watchers. Let's do it, guys. Yes, Jake the Snake. Yes, my liege. Super Danny. Yeah, Caesar calling for 113,000 Bitcoin today. Yeah, I'd say we were on our bullish stance on Bitcoin, calling for 114 last night. So yeah, I can see a push back up to 114 again still today. We could also see a sell-off today too, depending on what the Fed says. Maybe they don't want to give any room to Bitcoin. Maybe they just want to, of course, stick with the dollar and the stable coin payments and yada yada. Try to avoid as much as possible exposure to all these assets. I don't know. We'll have to just wait and see how that goes today. Obviously, the Fed's been, Chair Powell's been very, very adamant about his distaste for Bitcoin. He's and not talking about it the his latest speech he had. Where the hell was that? I don't even remember anymore. There's too many references. But the one we just had, what was it, last week? He mentioned to his interviewer, yeah, we do not speak on those assets. He was asked about gold and Bitcoin. We do not speak on those assets. Yeah. All right. Coinbase acquires firm. Yes, we went over all these things. Let's take a look at TradFi again. Bloomberg talking about stock rallying, flashes, signals of fatigue as gold sinks. Yeah, everyone going back to stocks and crypto and jumping off gold right now. It's kind of weird. What else we have? I'm trying to clean up some of these other ones here. Usually right now I go for a run a mile or two. We're not doing that today. Maybe later. Okay, let's get back into CNBC. And guys, yeah, we still have about 5 minutes. 5 minutes until the Fed comes out and speaks on crypto and stablecoins. Appreciate all your hard work, buddy. Gold price dropping. Yes, bullish coming in with a £10 super chat. Let's go, Andy.
Give me money. Money me. Money now. Me a money needing a lot now.
I appreciate that, Andy. I appreciate that. Of course, the £10 sterling. Thanks again, my friend. Thanks again. I was waiting for this altcoin season to be like the perfect aura farmer. What the hell? Geez. Diveral Termis? What is that, Danny? Sharing a link in the chat. Oh, what the hell? He's sharing some clip from Dragon Ball. Looks like here. Just waiting forever, guys, for that to start. And there's, of course, Piccolo. Oh, Piccolo. All right. Let's get back here in the chat real quick. Caesar calling for 113,000 Bitcoin today. Travel, work, break, watch, travel, listen, travel, work, says Danny. That's been his lineup today. I'm back. Yes, spotty, like a bad signal, says Danny. Jacob 6 says you're like a bad rash, just won't go away, Danny. Yes. And then yes, we have Andy coming in with 50 push-ups instead of a run. Oh, dude, I can't even do 50 push-ups right now. I'm still way out of shape. Oh, Jesus. Maybe I could get like maybe 5 or 10 out at a time, but damn 50. I'd be hurting. I could do some sit-ups too, but damn, even those hurt. I could probably only do 10 of those in succession. All right. Yeah, you're definitely more in shape than me, Andy. Even with all of your trips to the hospital here lately. All right. Let's get back to it, guys. We have about 2 minutes. 2 minutes. We're waiting for this Fed meeting to happen. Yeah, and let me just move that over here now and get ready. Get that in position. We're waiting for this to get started. All right. We're ready. Okay, yeah, of course they got the music going over there. No? Let me refresh it. They had the music running earlier. There we go. Some ambiance, yes. All right, okay. Let's take a look at Bitcoin real quick. It's 110,000 leading up to this meeting. We have Ethereum now getting closer back to 4,000, which is of course bullish for crypto. We have the top two, of course, moving on the way, on the upside. What else do we have here? Any other? How's Solana doing? Running back up to 200 maybe on Solana, getting close to 190 right now. How about XRP? We got a recovery on XRP coming out here. Not quite. There's a long way to go back up to 2.55, but yeah, probably keep coming here soon. Still on a bull trend. Still on that bull trend we marked off this morning. All right. Any other big movers? How about Avalanche? $20 on Avalanche. Damn. It's crazy. Still hanging out down there. The big ones we have here are ADA. Yes, Cardano, right? Cardano sitting here at 66 cents. Still on a bull trend. Keep climbing back up out of the hole. Doge, damn, Doge down less than 20. It's been a while since I looked at Doge, I guess. Less than 20 cents. Coming up from 17.6. I kind of want to buy some of this just to flip some again, like I did at the beginning of the year. Every once in a while, I'll throw some money in the Doge and pull a few grand out and just kind of like step back again. Where we got Wormhole, some other coins. What are the big movers right now? Let's take a look at bubbles while we're waiting for that meeting to start. Where are the bubbles? Where are the bubbles? I don't want to lose that one. Let's jump over here. Okay, that should work. The bubbles, the bubbles. The calm before the storm, guys. The calm before the storm. All right, let's look at the day. On the hour, everything's turning green, pretty green. But on the day, we're still waiting to turn some of these, flip these more to green. We started pretty red today with only a couple movers sitting in green. Right now, we're almost flat. We're almost at 0% on the day. So looking pretty good, recovering from the last few hours. Who's moving up the most right now in terms of momentum? Looks like Pancake Swap right now. Pancake Swap's kind of taking the lead. It's also, yeah, it was down like a decent amount today too. I think it was down like 10 or 15% when we just looked at it, right? Floki's still down, yeah, the most right now. Of course, that's silly nonsense from yesterday. All right, so yeah, just kind of hanging out. How is our market sentiment? Is it flipping? We were at 34 when we started opening up today's market. Let's take a look at where we're at right now. And over at CoinTrade, sitting at 34, still in fear. Yep, still at 34. Okay. How about, you guys, we have the meeting starting any second now. It's 10:50 right now, 10:50, so it should be starting any moment. Any moment. Let's refresh and make sure that they got that thing actually moving. Yep, it's still going. Any moment. Late as usual. They have been, just so you guys know, if you just got catching for the live stream, they did start talking in private rooms, in the back rooms, I believe at 8:30. So they've been talking for a while now. Here we go. We finally got some public.
So I can
coverage.
tell from the amount of vocal noise coming from the hallway and in this room that everyone had a great opportunity to meet others, engage with old friends, and so that's wonderful. We'll have some additional opportunities during lunch and during the next networking break. So we're back for our second panel, and we're going to be talking about stablecoin use cases and business models. As a reminder, questions will be open during the entire panel, so please use Slido for submitting them. And now I'm going to introduce our moderator, Kyle Samani. Kyle is a co-founder and managing partner at Multicoin Capital, an investment firm that specializes in crypto assets, tokens, and blockchain companies. I'm now turning it over to Kyle. Thank you.
Awesome. Good morning, everyone. Thank you all so much for being here. Governor Waller, thank you so much for organizing everything for us all. In order to kick things off, probably good to do a quick round of intros. So, gentlemen, please take it away.
Hi, my name is Chad Cascarilla. I'm the CEO and co-founder of Paxos. We are a blockchain infrastructure company that both provides crypto infrastructure as well as issuance infrastructure for stablecoins.
Tim Spence, Chairman and CEO of Fifth Third, pending the closure of the merger that we recently announced with Comerica. Will be the 9th largest bank in the U.S., but apropos to this discussion, we are a much larger payment facilitator. So we facilitate about $17 trillion a year in transactions, of which the Fifth Third branded business is the anchor tenant, but we're fortunate to do business with several people who have been on the stage today, in addition to many of the other leading fintechs and third-party payment processors.
I am Fernando Terres. I'm the co-founder and CEO of DollarApp, which is the leading fintech app for the mass affluent demographic in Latin America, backed by the best investors in the world. And with more than 1 million users, we allow them to dollarize their capital, grow it, and be able to transact globally, leveraging on stablecoins. Prior to that, I was the leading crypto at Revolut, and I also held a prominent role in helping build its growth engine, as well as taking its path to profitability.
Heath Tarbert, president of Circle, we like to say the world's largest regulated stablecoin issuer. We're issuer of USDC.
Wow! Wow!
Other products and blockchain technology. In a prior life, I was Assistant Secretary of the Treasury for International Markets, a representative on the Financial Stability Board, and chairman of the CFTC.
All right, guys. So let's jump into this. I think the intended framing for this dialogue, this is really supposed to be a conversation about technology. On stage, we have an issuer, a bank, and an app. So I wanted to try and cover kind of all perspectives for all of this. We will jump in with you, Fernando, first. You are B2C directly and close to a lot of end users who are using stablecoins every day. What are you seeing in terms of demand, usage patterns, feedback across Mexico versus Argentina and Brazil. And if it'd be really helpful if you could share one end-to-end journey that shows why it's simple, fast, and useful.
Cool. Effectively, we're live in 4 markets, which are Mexico, Argentina, Colombia, and Brazil. And the use cases are pretty different country by country. In some cases are more around the store of value idea. So imagine you're a Colombian person, you want to dollarize your savings. But there's also elements on the transactional side. So imagine you're a Mexican person living close to the border and you'd like to travel with your family to the US, right? And you want to be able to spend internationally. Or also if you're a backend engineer living in Buenos Aires and you want to work for a company in Europe, in the US, and receive your payroll. So those would be some of the use cases which are pretty consistent across all of the markets. When it comes to the flow of funds, so to speak, or how we structure it, we have locally regulated e-money licenses, or we partner with them. And then, of course, with our crypto entity, we execute the rest of the flow. We're also principal members of both MasterCard and Visa. So the way we try to run the company is having these pools of capital, sometimes in fiat, sometimes in blockchain, to be able to bridge the world, so that we as product people swallow the complexity, so we can give the customers the simplicity and the benefits without them having to go through the complexity.
And Fernando, follow up here. Based on that journey, I guess you've been iterating now for a while. What's been maybe one major change in product or go-to-market that you all have learned from hearing real feedback from customers?
Well, I guess the first one I kind of mentioned already. Like perhaps the intuition could have been the store of value, but it turns out that transactional matters, right? So that's one of the counterintuitive ones that allowed us to actually dip into the transactional piece of the equation, which is interesting because the more use case you can serve, the more times you can bring your product to the customer, right? And then the second one, which kind of correlates to this one, is the fact that many of our customers are actually on the mass affluent side of the equation. So people who travel, people who work in technology, in finance, people who save, who invest their capital. So probably traditionally, most of the fintechs in Latin America had gone after the bottom side of the pyramid in terms of wealth, and perhaps we're penetrating from the top. So starting with the top 30% of the demographic pyramid, I would say.
Got it. All right, next let's move maybe over to Tim. Tim, as a bank here, you offer a service, which is the utility and the benefit of stablecoins. What are some of the problems that your customers, either consumer and their enterprise finance treasury teams, are trying to solve right now?
That's a great question. And I think maybe I'll get there, but I want to make a couple of points here just based on some of the conversations we had on other panels, because I think it's instructive as we think about pathways for innovation, where to look. Like, one of the rules that we use at Fifth Third is don't unsolve solved problems, okay? And I was listening to the discussions about interoperability and discounts and otherwise, and I couldn't help but think back to Thompson's banknote guide, which at least the folks from the Federal Reserve will remember existed in the U.S. during the free banking era prior to the presence of the Federal Reserve, where individual banks had to figure out how to discount notes that were issued by other people. And I think the end outcome there, the conclusion there, was that we were better off with a single currency that was valued at par. And that would facilitate commerce. So our focus has been on looking at the solutions that are in the market, finding ways, whether it's through partnerships or just through introductions in places where we need to provide them, to utilize things that can become industry standards. So, our clients, when you look at the issues that they face, we're principally U.S. domestic. But we have a huge manufacturing base because the legacy footprint of the bank is Midwest and Southeast. So moving money across borders is a significant issue today. That's a problem that we solve by referring business to other banks. And as a matter of practice, another rule we try to follow is don't enable your competitors. So we have spent a great deal of time in the stablecoin ecosystem looking at ways in which we could utilize stablecoins to solve the interoperability issues and both the FX risk associated with the delay in clearance and the need to work through another financial institution to move money overseas. I think, and that, from my point of view, will be the first and most powerful use case for the Fifth Third brand. The more interesting things to me, though, have to do with the sort of infinite divisibility of stablecoins and the programmability and the things that we're going to be able to do through the business that we have as an infrastructure provider, a little bit like Jackie, to leading fintech companies and others, to help them function in a world where agentic commerce is a material share of the economy, and where we can do more and more, whether it's for compliance purposes or to prevent fraud, or just to facilitate the linkage between contractual terms and payment settlement with the programmability of stablecoins.
Next up, Tim, another follow-up for you here. Given a lot of these outcomes, how do y'all think about buying versus building?
Yeah, my view is there are a handful of truly global banks that probably would benefit from having their own stable coin, like that facilitates book transfers. So if you're JP Morgan, if I were JP Morgan, I would be doing what JP Morgan's doing. But there are like 4,996 banks in the US that aren't JP Morgan or Citigroup or Bank of America or Wells Fargo. And for the rest of us, it's important that we move toward something that approximates more of an industry standard solution. That's the way that you solve for interoperability from my perspective, as opposed to layering more technology onto it. It's also how you solve for adoption, right? The tech here is obviously better than 150-year-old payments rails. Like, forget COBOL for a minute. Imagine what the FedWire was originally built on, given the comments that Governor Waller made at the beginning of the session. What doesn't exist today in most cases is the governance, right? And the governance layer is a thing that multiple parties need to be able to agree on here. And then we need to be able to drive user adoption. Like, Zelle was late to the party in peer-to-peer transfers, but it dominates today in terms of total volumes. And the reason it dominates is there's a single brand. It is and a governance mechanism that is embedded into something like, I think they have 80% coverage in DDAs in the US at this stage of the equation. And it therefore made it much easier for people who weren't in college and splitting pizzas to move on to a world where they were sending money P2P via an instant payment rail. And partnerships make that possible in a way that going back to a world where we were issuing our own currency probably wouldn't.
All right, next up, let's move to Chad. Chad, from the issuer operator seat, when should a bank build, partner, or just distribute?
How about now? There we go. I think it's difficult for any individual bank to issue, just like Tim was mentioning here. Even for the largest banks, I think it becomes difficult because the same reason Tim also mentioned, he doesn't want to fund his competitors. That's one of his number one rules. And I think you end up in a world where that would be the case if everyone started to use someone else's stablecoin. That's kind of the beauty of it, is that because it's not just contained on your own systems, but it's moving into other people's systems, you have to really create a value proposition to enable others to want to enable that. And so if you're the largest banks, you might be able to, but from everything I've seen, actually some of the largest firms all are trying to figure out how they can do this together. Maybe a la Zelle, and there's a Zelle bank effort. There's a global bank effort that was announced, I guess almost 2 weeks ago now. And so that's what we have seen, is that, and I'd maybe mention a third point, which is there's a little bit of a skittishness because some of the large banks don't want to necessarily end up having their own token that could be facilitating cross-border illicit activity, and that there could be brand risk from that perspective as well. So that has all, I think, ended up pushing institutions to try to think about how can they use something that is brand agnostic, that has the interoperability, that allows them to be able to capture the economics. And I think there are a number of different ways you can do that without having to build it yourself. Obviously, building it yourself could create brand recognition. It can create better economics if you're able to create a way in which the market would create widespread adoption. And that's where there is this push and pull of the network effect that's inevitable. Largely, stablecoins today, and I don't certainly believe this will be the case in 2 or 3 years, are for the crypto ecosystem. And so can you get it in all the wallets? Can you get it on all the exchanges? Can you get it in the DeFi protocols? Can you enable it to have the right on-ramps and off-ramps through all the other parts of the payment system? Visa, MasterCard, the merchant acquirers. That's a lot of different gating points, and all of those gates have to say, yes, we would like to be able to accept this. And that means you're not going to end up with thousands of stablecoins that will be a rail. I think you'll end up with maybe 2 to 5 stablecoins that could be a rail. You can end up with thousands of stablecoins that look like a prepaid debit card or a co-branded card. I'm old enough to remember MBNA, who basically built almost 20% of the credit card market based off of having, Notre Dame credit card. I had one of those too when I graduated. And so you can imagine having lots of choice, almost infinite level of divisibility because of the technology and because the Genius Act and blockchain have set standards and set interoperability. So I can see there being so many different types of stablecoins, but not really so many stablecoins that ultimately you will use on a global basis. And that's what I think every institution has to think about, no matter how big you are. Where do you want to be? Are you large enough to maybe try to make a run at that? And most institutions aren't, so how could you instead find a way to work cooperatively?
Can I add one thing to that? Because I think I totally agree with the point you were making. I was sitting in the audience earlier, gritting my teeth at the term TradFi every time it comes up, because Fifth Third is an old bank, that's true, but it's the least interesting thing about us. So I am, at the moment, I'm going to propose that we go with scaled fi versus DeFi. At least there was one other bank in the room because there were some claps over here. And I know Jennifer feels the same way. But the point you're making, Charles, which I think is so critical, and the reason why we probably do need to arrive at a standard and have a couple of different networks, is in order to scale, you can't have an artisan model. Like, you have to have an industrial scale model, you have to have agreed upon governance principles, and you have to be able to support lots of different endpoints. And there's just no way to do that when you have so many different potential solutions in the market. So I totally agree.
Yeah, I'll just add my own little commentary. As someone who is a very active user of DeFi systems, I think most folks trying to get into the space don't appreciate the nuances of the complexity of the DeFi protocols and the on and off ramps and the wallets and making all those things work. It really is pretty difficult from a user experience perspective. All right, next up, we're going to Chad and Heath on this next one. What are the top 2 bottlenecks at the perimeter? So things like KYC, AML, wallet UX, things of that nature. What are those 2 biggest bottlenecks? And then what's fixed and what do you think is going to change in the next couple quarters?
Sure, I feel like we should give you a chance to talk.
All right, well, my wife doesn't always say that, so look, at a high level, when I think about frictions and sort of what are the things that are barriers to stablecoin use case, right? Or just using stablecoins, I'd say there are really 2 big buckets, 2 meta buckets. The first is the thing trusted, compliant, and transparent? In other words, do I need the Thompson's banknote guide or something like it to know whether or not I'm actually going to get my dollar back, right? I think the Genius Act largely solves that problem, particularly as it's implemented, because all stablecoins aren't equal and all stablecoins aren't stable. So I think making sure that we have payment stablecoins that actually are held to very high standards is job number 1. Good news is this country's made a very important decision on a broad bipartisan basis, and I feel like that problem is being solved. Second aspect, though, is assuming dollar's solid, the stablecoin is solid, is it actually useful? Does it have utility? Does it have liquidity? One example I like to give is, suppose at the end of this conference, the Federal Reserve Board says, good news, we're going to give everybody money to buy your dinner at Reagan Airport. But we're not going to give you a Federal Reserve note. We're going to give you 50 euros. Would you be able to actually buy your dinner at Reagan with euros? It's a perfectly solid currency. It's an outstanding one. It holds its value. But it's not necessarily have utility in certain settings. And so two big barriers to utility and liquidity are, number one, and this was mentioned earlier, the banking rails. Making sure that you can move in and out of fiat currency back into something like a USDC or a Paxos stablecoin as quickly and seamlessly as possible. So Circle, for example, has spent years building out this network of reserve banks and partner banks for customers. In fact, we're pleased that Fifth Third is a part of that network. So that's the first thing. And then the second thing for barriers would be the blockchains themselves. USDC is natively on 28 different blockchains, but it's very difficult to move currencies among blockchains. We have something called the cross-chain transfer protocol. But again, if your stablecoin only works on one or two blockchains, again, that's another barrier point.
And maybe what I'll add is I maybe break it into two categories. One is some of the friction in the stablecoin world is how do you get back out of the stablecoin world? And he was describing a lot of those, especially when you live in a world where you have to move money 24/7. And so this adds quite a bit of complexity if you think about, well, someone shows up with a stablecoin, they want dollars, and it's 11:30 on a Friday. How do you make that possible? And there are plenty of examples of that. And then on the other hand, it could be, I'm in Asia and I'm putting money to work and I want to make sure that I'm able to get a stable coin, and you're tied to US banking hours. And so there's many different types of complexities around interacting with the traditional financial system while being able to have an effective stablecoin product that works. The second component is exactly what Kyle was describing, which is I'd say DeFi and crypto is still not abstracted away enough where it's solving just the problem as opposed to requiring you to actually understand the underlying mechanics. To date myself, I kind of think back to trying to get on the internet, and it was like trying to get on when there was this thing called Freenet. And you had to dial up, and you put this receiver on a thing, and you got some weird noises, and you could get a little line of text that would come down. By the way, as absurd as that sounds, that's actually not that unusual when you kind of go through the DeFi ecosystem. And it really shouldn't be that way, or frankly, just crypto in general. I think that'll all get abstracted away with great consumer products that allow you to solve a problem, just like, no one knows how the phone works, or at least almost nobody does, but yet everyone knows how to use it. Crypto, blockchain, DeFi, stablecoins need to be just like that, which is, I think, what Dollar App is, for instance, doing, which is just making it so I can solve my problem. Is I want to be able to move dollars, I want to be able to hold dollars, I want to be able to have it happen instantaneously. It needs to be that simple at all times. There are so many different complexities depending on exactly what your use case is for stablecoins still. And so I think those things are all problems that can be easily solved. People are working really hard at solving them, and I think that they will absolutely get there. There are large firms like PayPal, which launched a stablecoin several years ago, and they were one of the first to come out and say they wanted to launch it, being a scaled financial institution. We don't want to call it, yes, you're welcome. And wow. And I don't think we call them TradFi. They're a real fintech company, really huge in terms of their scale. And they launched a stablecoin. And that's an example of someone being able to take this technology and be able to move it into the traditional system and be able to try to solve problems in a way that you couldn't otherwise. That's how I look at what can happen here.
All right. Next, I'm going Heath. You got a solo one. What are some programmable features, maybe things like allow lists, conditional transfers, and others that are going to make stables invisible in workflows in the next 6 to 12 months? Hopefully, we can overcome some of these challenges.
Yeah, the whole goal. I was thinking about this the other day, and I remember about 20 years ago, you would talk to someone, a family member, and you'd say, well, we should go out, and we should buy this thing, and someone would say, well, I'm going to go on the internet and buy it, right? We don't say that anymore. We just buy it. It's just assumed. And so we're going to get to a point where stable coins themselves are just floating around like any other form of electronic money, like credit cards, debit cards, most of which are, by the way, are not legal tender. And so what are some of the programmable use cases that sort of we're thinking about? Circle is focused on all use cases, but particularly thinking about enterprises, right? And so I'm often overseas. I'm talking to, let's just say, a Korean manufacturer who wants to sell goods overseas to Latin America. It takes 5 days for the money to move, and sometimes takes, is extremely costly. So you can imagine a scenario where all of this is built in, and the moment the goods leave the factory floor, through smart contract technology and programmability, the money is automatically sent, or when it's received on the other end. So trade finance and just trade in general is something that could be supercharged through stable coins and the programmability that it offers. Another thing we're seeing is treasury functions, right? And even for scaled financial institutions, we have a large scaled financial institution that is actually using USDC, for example, to move money inside the institution across borders. And so again, a lot of that is programmatic, and the features matter. I will say that in some ways we need more than just programmable money. We also need the underlying rails to be enterprise grade. So one of the things that Circle is doing is we're reading the CPMI IOSCO paper, we're reading stuff from the BIS, and we're saying, what are the barriers to large enterprise use of blockchains so we can actually make programmability really effective. And so we're developing something called ARC, which is sort of an enterprise grade L1 blockchain that has, sub-second deterministic finality that makes it very, you send the money, boom, it's done. You don't have to wait. There's no probability. There's no 51% attack concern. Using something that's very stable like a USDC as gas, and other features as well, including privacy layers. So it's just very important to say you got to combine the programmability with the underlying infrastructure as well to really unlock these use cases.
If I can just jump in on that one, I think there's a lot to be done here. I think one point of encouragement for anybody who is building, like we have a fairly sizable business essentially selling software, like subscription software to corporates to automate payment workflows. About a third of the total revenue the bank does annually now is attached to people who utilize software to eliminate some manual step, whether it's recon or payment scheduling or otherwise. There's a lot you can do with programmability that is technically better than people using bill pay services to schedule a payment, right? But it has to be much better in order for people to change the behavior. Like the law of good enough works against any new technology, because if the existing method works well and it doesn't cost much, and especially on the consumer side of the equation, most payment initiation is free in the US, you have to be able to demonstrate some significantly better value. So demonstrating programmability, showing people, hey, you can program the payment so that it moves consistent with your payment contract is not meaningfully better than just pre-programming your whatever sourcing software you're using to initiate an ACH instruction at the point in time when you've hit the date that the payment is due. You have to actually focus on the integration, right? That is the place where you can improve a step. So instead of having to pass contracts and have somebody sitting, in a bullpen somewhere working AP files, that there are agreements that are standardized at the time of the procurement that then pass straight through to the financial institution or the wallet provider that then automate. It's just that's the step we're going to have to take here, because just because we can doesn't mean anybody will.
All right, and then I think we have a follow-on here for Heath. What's actually production ready now for enterprises? And specifically around things like illicit activity detection and where are false positives still going to bite us?
Yeah, so the whole area of making sure you're on something that's trusted, right, is in many ways critical for enterprise adoption, right? And enterprise is going to is going to be extremely hesitant to risk its reputation to go on a blockchain where potentially North Korea is a validator. Right? And so there are a number of factors like that we're taking into account. So for example, ARC, the blockchain that we're creating, will actually have permission validators. So everyone will be vetted in advance. And also making sure that the institution that you're getting the digital assets from has an AML CTF program, it's compliant with the Patriot Act, all of those things matter.
All right, next up we're going to interoperability and orchestration. This one's for all of y'all, so feel free to jump in. Keep it clean out there, boys. And where is interop already good enough? And where is it brittle? What orchestration layer or layers are going to enable a truly tech-agnostic experience?
Actually, I can get started from the consumer standpoint. At the end of the day, it's not so expensive to maintain some liquidity buffers to orchestrate, because even today, like it's still pretty aggregated. Like the question is, what happens if we end up in one of these like ridiculous situations where it's so atomized, no? But right now, from the consumer standpoint, I would say we don't see that being a big issue. You need to hold some liquidity buffers, but again, no, like you don't really have FX exposure. You have some credit risk that you need to manage, but we haven't encountered that being a big problem. No, keen to see like on the scale side, how do you guys perceive it? No, but on our end, it hasn't been a big deal.
Given the interest that we express in cross-border payments, it's the on-ramps and the off-ramps. It's the point you made earlier about the need to cobble together your own ecosystem if you want to move money utilizing stablecoins today. The actual use of the rail is much easier than getting money in and then getting it out in another jurisdiction, ensuring that the person that you're paying has the ability to accept it and to convert it back to fiat. My big fear, I think there are lots of really interesting things that can be done with tokenized deposits, but that's the place where I think the interoperability issue is the biggest. If we can land on a handful of, call it standard stablecoin payment rails, I don't know that interoperability is a problem so much as it is just getting to a point where the adoption on both sides of the network, on the send and the receive side, are native as opposed to through a third party and then a transfer.
We're in a bit of a strange interregnum where the Genius Act has passed, and you can be forward-looking Genius compliant, but you aren't Genius compliant today. And so that's actually created a huge proliferation of stablecoin issuers from a white label side and otherwise. And so I actually think if you had a moment of risk where something could go wrong, it's probably now, between now and 18 months from now, because you have so many different firms that are operating in ways that may or may not end up looking like they've aged well. But I do think that once Genius comes into effect, when the rules are put into place and everyone is have to follow them, which I guess gets you all the way to 3 years from when it passed, you're going to have a clear set of rules, and that should create a level of fungibility that can be relied upon as long as the standards are widely enforced, and I think also adopted in a number of different international jurisdictions, so that you create this capacity where it is truly cash and cash equivalents. I think that's where we'll go. And so between blockchain and standards, you do create a capacity to have interoperability in a forward-looking basis. You don't today because stablecoins still have counterparty risk to them, depending on exactly how they're constructed. Most of them still do. And certainly a lot of the new ones also do as well. And so that's where there's a real interesting dynamic that exists right now. I think that also, and this is really, I think, Tim's point, there is a lot of complexity around having to be able to manage that liquidity because those are not the same liabilities. They're almost in some ways akin, though not the exact same thing as a deposit, because you have the counterparty risk related to them. I think that'll all get worked out over time, and we'll get to that end state where I think that will lessen maybe either the capital that you might have to hold against stable coins, the amount of risk limits that you would have to put into place, the counterparty capital charges that you might need to carry. But I don't think we're there yet. So we're getting there, but there's a lot more work to be done yet.
Maybe you asked about orchestration. I think, and this goes to sort of Tim's point about sort of not unsolving problems that have been solved. A lot of the domestic payment system works rather well. There are obviously improvements that can be made, but once you step outside U.S. borders, it becomes a lot more complex. So one example of orchestration is something we've created called the Circle Payments Network, where we have institutions on various sides that are orchestrating FX flows using what Governor Waller has called the stablecoin sandwich. But right now, to send money to Brazil from the United States or from the European Union to the United States, it can take up to 72 hours going through various correspondent bank accounts. We've been able to get that down to 72 seconds. using basically fiat on either end, and then the stablecoin rails in between. So it's a great example of where orchestration, as you asked the question, actually can make a difference to solve a problem that is a real barrier to use case. The other point I just want to think about is tokenized deposits. We've mentioned it a couple of times. There's a couple lines in the Genius Act that just gives a scant reference to it, but this country has never really thought about tokenized deposits and the potential impact on the banking system. And as a former regulator myself, I'd ask the question, I think you used the term, used 996 banks in the United States. Yeah. If in fact, 5,000 banks in the United States, many of which are community and smaller banks, immediately overnight tokenized their deposits, they moved at the speed of the internet 24/7, as a bank regulator, I might be a little concerned about that, right? And so I think if we are going to go down the road of tokenized deposits, unlike stable coins that are backed one-to-one with very high quality liquid assets, if we're using the fractional reserve banking system, which is subject to deposit insurance, the discount window, and essentially a government intervention model, and we're going to tokenize that and move it quickly through blockchains, I think more public policy work should be done.
All right, then we're getting to the last question here before we open it up for Q&A. This is for all of you all, so please jump in. Great tech always lets you do old things better and some new things that you couldn't do before. Could you all each please give one example of a use case that you think are going to become possible using stablecoins in the next 1 to 2 years that are maybe not possible today? And maybe as a bonus if you want to get AI agents in there somehow. But y'all go for it.
I guess I can get started, but it was kind of mentioned already by Tim before, but the idea of having a large financial institution initiating a transaction on blockchain is literally a game changer. Because you suddenly move into 24/7 money movement made instant, right? So I think that would be like the biggest change to expect on that side, I would say.
I'm really excited about the potential for fungible collateral that can move around the world and across exchanges and otherwise. We have a couple of clients who run large exchanges who are exploring that sort of mobility, and it would make a material difference to the institutional investors and counterparties that trade on those exchanges.
I think one of the interesting components is that if you really kind of look at the dollar on a first principles basis, it's basically a wrapper. It's kind of a wrapper today for government securities, maybe some gold, some other things that are on the Fed balance sheet. It's a wrapper, but essentially a stable coin is an even smaller subset of what the dollar is. It's basically only cash and cash equivalents, only T-bills, only overnight repo, and some bank cash. And you can imagine once you start having tokenized treasuries and tokenized repo, as Tim was saying, you can actually completely change the way in which the collateral mechanisms work for how you could run repo programs, how you'd be able to instantaneously be able to create a stablecoin on chain. A lot of the frictional elements of stablecoins start to disappear. It actually becomes quite democratized, and I think there's so many questions that come up around, well, you can't really have stablecoins pay interest, and I think the Genius Act struck a good compromise there. But in some ways, I think that really just becomes a bit of a sideshow when you have tokenized treasuries, because you're then able to immediately swap in and out of something that's giving you yield into something that isn't giving you yield. And so then, you can have that artificial construct, which makes sense in some sense, but that's not really the ultimate end space for what stablecoins are going to look like, or even the financial system will look like, because you can have the underlying assets themselves be able to move just like a stablecoin moves.
One area you asked specifically about AI that I think about, and this may be beyond 12 to 18 months, but there are people right now that are thinking through these issues and working on them, is sort of the economics of AI itself, right? If I have a website, an encyclopedia, and AI is visiting that website, calling data from it, it's possible in the future no one will visit my website anymore. So I'm a producer of data, I'm a producer of content, And at some point, you've got to interact with the AI and perhaps charge something. And I can't help but think that agentic payments plus programmable money, stable coins, could play a role in that whole new emerging economic system that we're still trying to figure out.
All righty, and now we'll jump into Q&A. Our first question here, of course, is coming from Anonymous. This one's for Charles and Heath. Fast forwarding a decade, how do you think proof of reserves will work, and how will it be different from how it works today?
Well, the good news is we've got the Genius Act. That'll be implemented. So we'll have the transparency that's there. But I think if you potentially combine that with AI agents and zero-knowledge proofs, there could be something there as well. But right now, the Genius Act solves that through transparency, through audits, or sort of the old-fashioned way. It's entirely possible there could be other ways of making sure that those reserves are confirmed as well.
You know, the way it works today is, I think Circle and us, we do monthly attestations. We have KPMG, and they look at what's in the bank accounts, which is actually the hard part, and then they look what's on chain, and they say, yes, that matches up. And you could try to do that more frequently, but it's actually the complexity is not what's on chain, it's what's off chain. And how can you get that snapshot and be able to get it reliably? And maybe the way I was just answering the prior prompt is that when you start having the underlying assets on chain for the stablecoin, well, then it's very simple. It's like very easy to do that match and be able to see it completely directly in real time at all times. And so I don't think it's going to take 10 years to get there. I think the tokenized treasury market is already starting to grow, and it could be quite significant in a relatively short period of time. I could imagine in something like 3 or 4 years, a situation where maybe the percentage of your reserves for a stablecoin that are not held in on-chain format could be quite low. But ultimately, you have to have it be 100% in order to be able to really have it be 100% matched, same to same. But I certainly think we're going to get there.
All right. Next one here is for large volume financial market settlements. What resilience features should stablecoins have beyond those required in the Genius Act? This one's for anybody. Maybe the Genius Act is perfect. All right, I guess no one's got anything. Genius Act is perfect. There you go. Thank you, Senator Haggerty and team. Wow. All right, Chad, here's the question you were expecting, of course. With the problems last week, what went wrong with the minting process? Did the blockchain work as expected? And I guess for context, for those that don't know, I think last week PayPal, for 24 minutes or thereabouts, printed $300 trillion and then unprinted them.
We printed it, actually. We don't cast aspersions here. The mistake was entirely ours. Certainly, we didn't operate at the standards that we expect of ourselves. There's an interesting situation where you try to determine where does it make sense to be fully automated, and where does it make sense to have manual interventions in order to be able to create additional levels of security. And in this case, our operational manual processes were put into place for a deliberate reason in terms of being able to create very secure cold minting processes, but it's something that we rarely use, and so that led to an error in how much was minted. We knew within a minute or two it all was contained on our system. It never left our system, which, by the way, should never diminish how seriously we take this. But it did, of course, lead to there being an overmint of a fantastically large number, and of course the unwind of it. I think that the importance of this to me is it underscores the value of the blockchain. It actually shows the transparency that you can immediately have into what's going on. And so in this case, an operational error that was entirely internal to our systems is now immediately visible to everybody. So I'm sitting here, of course, talking about this and making it really clear about what we could do better. But that's important because that means you can have this level of transparency throughout the entire financial system over time. that's a really positive thing. It's of course painful to go through, but I think you could just imagine having a world where you would be able to see exactly what's happening in real time and being able to have that level of transparency to understand how firms are functioning. And that can create confidence in the financial system in a way that the opacity that exists today has really limited. And that's why you get accelerator effects, and that's why you get run on banks, is because you don't know what you don't know. And so you're never going to have a perfect world where everything is completely transparent, but the more transparency you have, I think the better the financial system will be over time.
All right, I think we have time for maybe one more question in here. And of course, this is a nice phone one for us to wrap it up. If stablecoin issuers can theoretically have Fed payment accounts themselves, what need is there for banks in the workflow?
Well, there is a big value in intermediation, right? And if you don't have bank deposits, then the bakery perhaps cannot get a loan. And there's a massive value in that. And I think like anyone who's rejecting that value is not really understanding how the economy works, no? So of course there would be a lot of value for banks, no? And perhaps this might be like a sort of Marxist view, no? But if stablecoins eventually bring transactional value to cost to zero, and the margins get compressed in transactional business, perhaps the implication would be that financial technology will be all about balance sheet in the end, right? So perhaps the question will be the opposite, no? And banks will be even more important.
I may just leave it at that. I don't know that. I think the point that you made, Fernando, that's dead on is I don't know how much people understand about the business, and not just the role that we play as a safekeeper of deposits, but as a provider of multiple payment services. As a lender, the role that we play in maturity transformation, which is important from an economic perspective, to your point. And I just think at the end of the day, all complex ecosystems require integrators. Okay, they just do, and they're, for the average individual, potentially short of healthcare, is no more complex, opaque, harder to navigate ecosystem than managing your personal finances. And the byproduct of that is, with the exception of people who live day to day, there will be values to bundling and to the build out of, there will be value to bundling and to the build out of services around the actual currency itself. Because if that wasn't the case, then, for the last 50 or 100 years, we would have just been carrying stacks of cash around in wheelbarrows, right?
And maybe I'll add my 2 cents with 2 hats on. First, my Circle hat, then as a former regulator. So wearing my Circle hat, we put billions back into the banking system. It's really important to us that we're able to put money back into the banking system. So it is, in fact, continuing to do credit, generation, credit intermediation. And I think, we are very supportive of that. The last thing we want to do is have a situation where the banking system is disintermediated, right? Stablecoins are meant to be a payment mechanism, meant to be a version of cash. Wearing my former regulator hat, there are, however, certain instances, and I witnessed those as CFTC chairman during the COVID crisis, where our clearinghouses in the United States, the large, important financial market utilities, that didn't necessarily have a Title VIII designation and therefore didn't have Fed accounts, found themselves awash with cash, tons of cash with variation in initial margin, with no place to put it. Because the banks, to argue your point out there is the supplemental leverage ratio disincentivized banks to hold cash. And therefore, we had a scenario where the clearinghouses had all this cash on hand, banks didn't want to take the cash, and we were in a major conundrum. So I would say there are instances where having a deposit-only account, not discount window access, not any kind of borrowing facilities, but just a safe place to put cash in certain circumstances would probably provide a stability backstop for the stablecoin industry.
I also think one of the important benefits of Genius in having payment stablecoins is that you can now separate fractional money, which I think is very important, from money that you're using in the payment system. And so having non-fractional money that is able to move through the payment system creates a capacity for there to be more resilience in financial crisis where you can have accelerator effects or you can have run on banks. And when they were conjoined together, which they really had to be because of just the limitations from a technological standpoint, you had whole parts of the payment system that were locking up when certain banks were having problems. And actually having some capacity to have those not be totally intertwined can be very effective in times where I think there are systemic risks that really become endemic in the system. And certainly part of that could be having use of a Fed master account. And it doesn't even have to be necessarily being able to go into debit at the Fed. It's simply being able to have funds that you're able to put at the Fed. And so in that way, you can not necessarily disintermediate the banking system, but you can create a mechanism for intermediation to continue through the payment system, even when there are times of stress.
Wow.
Actually, we do have a few more minutes. I misread the clock. So a couple more for y'all guys. Any thoughts from this group on how the issue of revocability might be addressed in the stablecoin ecosystem?
That's probably for me. Yeah, so it's very important that transactions on blockchains are irrevocable. And as I said before, one of the things that the Basel Committee and others have said is an issue with certain blockchains is the fact that you have the possibility of having 51% attacks, and you have probabilistic settlement as opposed to final deterministic settlement. So no question that anytime something is on a blockchain, we really do need settlement finality. That's a separate issue than the one which is in a world of consumer payments where chargebacks have become an important part of the way that our consumer payment system works. Is there the ability to create some kind of opt-in as an application layer on a blockchain to facilitate chargebacks, right? To bring some of those great things that we have in the scaled financial system of today into the Web3 world. So that's the way I think it's an entire, if there is a need for something like that, it would be done through an application layer that everyone would opt into voluntarily, and at the same time preserving the irrevocable nature of the underlying blockchain transaction.
All right, going down the list here.
Go
for it.
I think there's a really interesting question on this one because given your point, like there are some use cases that are not amenable to being switched, right? I think one of the things that drives me nuts is whenever we try to compare the cost of accepting a stable coin to the cost of accepting a credit card payment, because if the decision on what sort of payment to accept was entirely in the hands of the merchant, right, they wouldn't be accepting credit cards today. The reason they accept credit cards is because people want to pay with them. And people want to pay with them because they want float or credit or rewards or the consumer protection associated with the ability to charge back a payment that you didn't make, right? So those are features of the product. We've spent too much time on and those features require economics to be able to provide them, right? It's simple utility. And the economics around the payment, then are attached to the provision of those sorts of features. And my own personal view on this one is we could spend a lot of time to replicate the feature functionality of all the different legacy payment methods and get nowhere, because what would happen is the cost to accept a stablecoin would have to go up in order to support all of these sorts of benefits. And in turn, you wouldn't see any sort of value shift. Whereas we have payments that move today in places where revocability isn't a requirement, right? It's not a valuable feature. And just mining those markets has got to be a huge TAM for people who are out there. So trying to get every rail to do everything doesn't seem to me to be the right long-term solution. Given that the rail that exists, the tech that exists today, there's a massive capacity overhang to do things where some of the things it can't do aren't a big problem.
All right, going next on the list here. Are we more likely to see existing payment rails like SWIFT move to leverage stablecoins, or see new rails for banks to adopt?
that one's mine. I'm fond of, I think it's one of the A16Z folks, but the saying that the sort of battle for any market comes down to whether the incumbents get the innovation faster than the disruptors get distribution, right? And that's what you're going to see with all of the legacy payment utilities here, is the legacy payment utilities have to find a way to rewire around new technologies, new protocols, faster than the insurgents find, financial institutions that are interested in riding on the rails. And I don't know that I would handicap that, but things that move large volumes have to be built to avoid hard right turns. And it means inherently they have to be slower, right? In this particular case, like our stance as a company has been to keep our options open. I tend to think that the insurgents may get the escape velocity faster than a lot of the incumbents are able to adopt the innovations in this particular market. But there's that's by no means settled.
All right. Another one for Tim. What's the net impact of stablecoin adoption on credit creation? Do stablecoins drain capital from banks, institutions that primarily extend credit?
They wouldn't drain capital, they would drain deposits, and deposits are the more relevant factor here because we hold $1 in capital for every $10 in loans that we make, right? And therefore we need the deposits to be able to support the level of lending. That comes down to the rules that need to be written around anti-circumvention on the Genius Act, okay? It's clear to me that the intention behind the law was to prevent stablecoins from earning interest. It's not clear to me based on the behavior in the market that everybody intends to abide by those rules. And if stablecoins are allowed to pay interest, they pose a threat that is equivalent to, but potentially far greater than money market mutual funds did when they were introduced many, many years ago. And that would have a direct impact on the ability, on credit formation. I think there are some clever strategies there. So to the point that Heath made earlier, circle round trips deposits back into the banking system. That's quite useful in terms of supporting the ability to form credit. But if my read is right and the intention of the law was to prohibit people from paying interest, we should just get about prohibiting people from paying interest, whether they call it rewards or anything else, right?
All right, speaking of yield-bearing stablecoins, Heath, this one's for you, but others feel free to jump in. Why should or shouldn't we have regulated yield-bearing stablecoins in the United States?
Well, the answer is we do. They're called tokenized money market funds. And so
rewards.
That's the circle position, is that a stable coin is the effect of the equivalent of cash. We think the Genius Act got it right. Backed one for one. Anytime you're paying out and it's paying out interest, that obviously introduces more risk. But that said, we do think there's a need, obviously, for interest-bearing instruments, interest-bearing digital collateral. And so we've created, it's not available in the United States, but something called USYC, which does precisely that. But Circle's always taken the position that it's a security, it's a tokenized money market fund. And so I think those distinctions make a great deal of sense, and they're consistent with current law, including the Genius Act.
All right, I think we've actually made it through all of the questions. And I think we're probably coming in on time as well. So I think we landed the plane successfully, gentlemen. Thank you all.
Thanks to Kyle and all the panelists. So yes, you brought us in right on time and actually just a minute early for lunch. And I know we
have... Yeah, we're almost at 12 Eastern now, about 15 minutes out actually. So yeah, interesting guys, interesting take today. They're going to be coming back at 1 p.m. 1 p.m. Maybe we should take a break and come back. I might actually let it just play. and go run and come back with you guys when they come back and resume. Hey, my job was canceled. Gonna leave this on TV while I tear apart my PC. It froze last night and won't turn back on. Damn, Danny. Geez, crazy guys in the chat. Oh my gosh, the Lambo now. Soon, it's coming soon, guys. It's coming soon. Of course, Mark.
When will then be now?
Let's see if we are seeing a little bit of pullback as they stop talking. 113,005 on Bitcoin right now, up about about 2 or 3 grand since the market opened. Again, not a bad place to be. See, you guys are in and out, dipping in and out for lunch as well. It is getting, of course, closer to intraday trading hours for the United States right now. I want to go over kind of the metrics we saw play out while we are watching that. The dollar is actually going up a little bit today on the news that, of course, we're getting a little bit more pro-crypto, a little bit more public about it, right? That's my only take here on the Dixie, getting closer to 99, closer to 99. But it doesn't seem like Bitcoin seems to care. Market dominance of Bitcoin getting near 60% yet again, guys. Here we go.
This entire idea of like 60% dominance is bullshit, ridiculous, stupid, right?
I know, but it's there. I know, Sailor. I miss Drunken Sailor. All right, so yeah, we still have that in play, and the Dixie getting closer to 90, and where were we? I guess 99, getting closer to 99 is what I meant. Yeah, and then of course, overall market, crypto market cap right now sitting at 3.81. It's probably a little higher than that now, maybe a little bit different. 3.82. Nice recovery today. So far. Let's go back to the chart real quick, take a look at Bitcoin. Then I'm going to go try to run for a mile, at least a mile. I'll get a mile in today, at least that. I can probably do that in less than an hour for sure. Come back, do some push-ups, do some lifts, do all the crazy rowboating, all crazy stuff I found outside. All right. What are we looking at here? Let's get back to Bitcoin. 113,005, 113,004 right now. In the last 15 minutes, look, a big breakout right here. Yeah, we're breaking out. Yeah, we're about ready to break. What is it, 113.5? That's the biggest resistance right here, holding us back from 114K. We might get back to 115K today. And again, I showed you guys earlier in the bull, of course, bull outlook for today is probably 114,000, and we're $500 away from that. So more than likely, we continue this on since we do have more meetings coming soon. They're going to rejoin again. They're going to come back for another round of questioning and some talks at 1 p.m. Eastern. So that's that's 2 hours. Yeah. No, it's an hour and 10 minutes. I keep getting off. It's Eastern Standard Time, 11:50 right now. All right, so an hour and 10 minutes. They'll be back and resume that meeting. And so we could actually blast off to maybe 16,000 a day at a high of that. Again, we're starting to rally. We're not in an intraday trading session yet, so we could get as high as 115 today, maybe a little higher, and then start to see and with intraday trading right around 1 to 2 o'clock, and maybe a pullback later, depending on what the mood is in the markets. That's my guess anyway. If we continue this rally into the late intraday trading session. Okay, what are the things we have looking at right now? Let's take a look at gold real quick. Or pull this back so I can see some other assets. Here we go. Looking at gold sitting at 4,100, finding its footing at 4,000 flat. It did it, guys. We called it. Nice. Oh my God. I actually had to pull back to 4,000 flat today. 4,080, I think. Yeah, 4,089, 90. Damn, it did it. All right, is it going to hold here? We'll have to wait and see how that plays out. How's silver doing? $48.90. Not too bad right now. Did have a pullback to 47. Not quite our 45 target, but yeah, I'll take it. Either way, of course, it's still following. Bitcoin's still, of course, following the gold lagging indicator, putting us into the highs of 150 here by the end of the year. At least 150 by the end of the year. That's what we're hoping for anyway. All right, guys. So I'm going to go take a run, right? So I'm going to take a little break here as well. I'm going to let the stream just kind of go live, and I'll be back with it as soon as it goes live. I'm going to be on the run. I'll be communicating with you in the chat just like last time we did this. I just got to get in there, of course. Happy, healthy, and wealthy, guys. Don't forget those 3 things are what I mainly focus here on the channel. Let me try to see if I can, up there in the corner, that's fine. There we go. That's good, too. All right, guys. Yes, catch up with you guys real quick before I head out. I found the credit card revocability discussion interesting. Yes. Yeah. Yeah, my big takeaway so far was all the damage control they're going to have, the power of damage control they're going to have, the ability to do with seamlessly by just minting as much money as they need, the central banks, of course, to prevent bank runs. I mean, think about it, guys. We just got ran today. I don't know, $40 million in our bank, and we basically are going to run on Solvent if we have another 10 million. Just the Fed, print us more money now, send us more money. And of course, there's an infinite amount of money at the Federal Reserve, so they can do that, and they can do it like that. And again, of course, in the words of CEO of CEO of a Circle, of course, they can settle that within 72 seconds, right? 72 seconds. That's what they're shilling, right? And of course, we have blockchains that can do that. Plenty of blockchains that can do that. A lot more DeFi, right? A lot more DeFi blockchains that can do that. For years. Cliff says, Otaku, have a great run and catch you stream in a few. Yes, I'll be here, guys. I'll be here. I'll check it in. Got to make sure all the cables are tight. Yes, suspect something is loose. Hope you. Yes, best of luck to your computer ventures there, Danny. Jit66, crypto should be focused on markets that need performance and liquidity. Yes, 100% agree with you on that as well, Jake. All right, let me make sure I get this set back up again for when we get back. Make sure I got all of the indicators we're following here on the live set up for when they return. All right, we'll put this back over here again. This is kind of how I had it set up before. That's pretty good. What else? I had dominance. I had a dollar. I had some crypto bubbles. Yeah, we'll just kind of leave that going. Maybe the dominance. I don't know. I'll leave that up there. There we go. And of course, anyone who drops in, guys, of course, give them a warm welcome while I'm running. I'll of course be having my phone in my hand when I'm running, so I can also participate too. All right, that should be good enough. That should be good enough. Things, yep, for when we get back. I'm just gonna put this in place, clean that up a little bit. There we go. US dollar, yep, that's everything we need to see when we get back. All right, cool. I'm ready to go run. Let me see if I can actually throw another camera up here. Let's see, what do I have? I got the arcade. Show the arcade a little bit while I'm out. It's been a minute since I played around with the arcade. If I can grab the right screen, that'd be cool. One of these is not like the others. Too many damn things. Let's see. Okay. Where is the arcade at? Let's pull that up. Come on, monitors, cameras. I have so many cameras, guys. Ridiculous. This one, that one. Attack of the Robots coming soon. Oh, jeez. There it is. All right. Can I not? Transform. Why can I not order this? Grouping. Should let me grab it. Nope. Oh my gosh, I can play around with this forever and never grab the right thing I'm trying to grab. Weird. Oh, it's locked, that's why. Okay, that explains it. Can't grab things if they're locked. Yeah, that's kind of preventing. Alright, I'm gonna leave this one up, guys. I'll be right back. I promise. I promise. Alright, one of these things is not like the other. Throw that back here in front of me. There we go. That works. All right, guys. I will see you again soon. And just like that, I'm back, guys. Hope you guys hang out. I hope you guys enjoyed hanging out in the arcade for a little while. Sorry about that. I did have to get my rent in, and perfect timing too. Perfect timing too. All right, let's get back to it. One of these things not like the other. Why is it so hard to find this thing every time? So many cameras. Too many cameras. Too many damn cameras. There we go. There we go. We're back, and I'm all wet. Sweaty, and then clean and wet. How's it going, guys? How's it going? We're back for some more Crypto Chaos. Let's go. Get the headset. It would help if I can actually hear what I'm doing. Yes. There we go. Yes. All right. So we're still waiting for this to resume. Should be coming back here in about 2 minutes or so. Should any minute now we should be resuming for the conference. All right. Let me catch up with you guys in the chat real quick. And yeah, we're running around with TVs now, trying to tease the cops, apparently. All right, I'm going to keep that in the corner of my eye, turn that off for a little bit, and go over some of the metrics we're currently looking at in the midst of all this. Bitcoin's still up 112,800, a little bit of a pullback from touching 113.5, as per usual, little pullback there. It is almost 1 o'clock, guys, so intraday trading has started about a half hour ago. That's why we're seeing a little bit of volatility, a lot of volatility right now. How's the dollar and the gold holding up? Gold holding 4,100, still holding, trying to keep that above 4,000 flat. Of course, that was the key area we were looking at, resistance, and it touched close enough. I'm going to take it, man. I'm going to take it. Let's go.
I'd buy that for $1.
Then we got silver at $48.40. Currently holding just a similar price action to gold right now in those key levels. All right, so yeah, that's what we're looking at. A bit of a shakeout all over the place. Ethereum reclaiming 4,000, having a pullback right now. It's 4,100. Wow, 4,100 on Ethereum today. Any other big takers here? We have, of course, some of our altcoins moving in the right direction. How is Chainlink holding up on all this? Because they're definitely featured right now. Up from what, like $15, $16, $17. $17, up about $1 today. Seeing a pullback right now, almost touching that $19 mark and having a pullback. Again, Chainlink is heavily featured in the next day or two of talks. Obviously, it's the largest interoperability play. Okay, getting back in the chat. How's it going? OG Bobbin? Yeah, of course, telling me I should run around with a TV. And I'm obviously wearing a mask. It's going to be looking kind of sus, right? Yeah, kind of sus.
What are you, stupid?
Probably don't want to do that for too long, right? Don't want to do that for too long. Yeah, so had a little fun with that. Teasing the cherries and berries today. Heck yeah, how's it going? Hey guy, also here we got Danny, Super Danny, back fixing his computer. I'm happy to hear that you're able to get that going again. Pumpin' says original classics 1980. Great year, my friend, great year. Yes. And today, guys, we're still winning.
You may even get tired of winning.
I don't know if we're tired of winning yet, but we're still winning. We're still winning above our bull target. Of course, last night calling for a baseline bull, kind of flat last night. Everyone was, of course, anticipating what we're seeing today, although we did not go into bearish territory. So again, baseline bull in effect today. And again, the Crypto Chaos Magic has called it. I do not take any credit for anything that happens on the altar, right? That's, of course, all the Crypto Chaos Magic in full effect. And, of course, we thank the Shrine of Satoshi. That's right, the Shrine of Satoshi back there for all of it. I wish that shrine was still working, the camera. It's I gotta take some time to fix it. I just never have time. Nope, there it is. Behind me right there. We can't see the damn camera on the Shrine of Satoshi. All right. Too many damn cameras, and I'm keep breaking the live stream as we continue onward. All right, got your ear on at work, says a guy. Nice. Got a in your ear. I definitely been there, my friend. I was right there with you guys. Not that long ago, working full time, of course, learning as much as I possibly could about crypto during the last big money print of 2020 and beyond. Up until this year when I got laid off. Again, AI is taking over every single job sector slowly. You're all going to be replaced. And we got the Feds coming back. The Fed meeting is coming back here on innovation right now. Here, let's get back into it. Boom.
AI also impacts our internal processes. So how do we fight fraud? How do we build software? How do we advance payments innovation? And so assuming we have time, we'll get there as well. So that way we can think about how are we pushing the ball forward on innovation in the country. So with that, we'll kick things over for intros from the panel. We can just go in order here.
Great.
The red light means on.
Okay. Hi, my name is Kathy Wood. I am founder and chief investment officer of ARK Invest. We manage roughly $40 billion in equity assets focused exclusively on technologically enabled disruptive innovation. So the 5 major platforms are robotics, energy storage, AI, blockchain technology, and multi-omic sequencing. And our focus today especially is the convergence among those technologies. And I know that's one reason we're here. So very happy to be here. And I must say, I want to give a shout out, first of all, to Governor Waller and to Sunaina. About a year ago, I'm going to say, I found out, she approached me, I think, that you had a director of research on innovation, and I thought, wow, now we're talking. I hadn't associated the Fed with innovation, but I see how much you all are doing. You all are doing now, and she has been a force, to be sure, working with you, Governor Waller.
I love that intro. I agree. She has been a force. Alicia Haas. I'm the Chief Financial Officer of Coinbase. Coinbase is one of the first and definitely the largest in the US crypto infrastructure companies, and a company that offers the ability to buy, store, transact in over 300 crypto assets on our platform, and then increasingly building on-chain. We have co-founded USDC, which is the 2nd largest global regulated stablecoin with Circle, and are the largest distributor of stablecoins in the US market and globally, including USDC, PYUSD, and others. And importantly, are continuing to build tools for developers for them to build their own crypto solutions, their own payment solutions, and excited to be here for this conversation.
Awesome. I'm Emily Sands. I'm the head of data and AI at Stripe. Thank you so much for having us today. Stripe builds programmable financial infrastructure. So we support millions of businesses around the globe in accepting payments, moving money, and growing efficiently. Those millions of businesses include many SMBs, startups, including most of the AI startups, and also very large enterprises, including about half of the Fortune 100.
Hi, everyone. Thanks for having me. My name is Rich Widman. I run Google Cloud's global crypto strategy. Our team is really responsible for doing basically 3 simple things, not to understate it. The first is our main charge is to think about how large enterprises like Google incorporate some of these new technologies, not just in terms of our products, but also into our own kind of financial infrastructure, our own financial or enterprise DNA. The second thing that we're responsible for is we recently launched a layer 1 blockchain called the Universal Ledger, which is built for institutional payments, which has dominated much of the discussion today. And then lastly, we're also responsible for working on large open standards related to agentic payments. Most recently, the Agentic Payments Protocol, or AP2, which we partnered with Coinbase and about 100 others on in terms of thinking about what agentic commerce will look like, what forms of payment will agents use, and how do we complete that trust chain so that users and merchants can transact with AI confidently.
Great. Well, Emily, we'll start with you. Agentic commerce, we've heard about that a bit. What is it?
So we're all experiencing how AI is shifting, especially over the last year or so, from just knowing, giving you the answer, to doing, executing on your behalf. And that shift from knowing to doing is quite profound, and one of the first industries that it's transforming is commerce, how commerce gets done. Agentic commerce is actually a spectrum, but I think of it as an agent facilitating a transaction between a buyer, whether a consumer or a business, and a seller. And if you think about a very simple but powerful consumer experience like instant checkout in ChatGPT, you can go today and look for a Halloween costume and get recommended costumes from millions of merchants, maybe they're not all selling costumes, but certainly millions of merchants selling on Etsy, and you can buy direct in one click. And that feels slightly more deterministic than maybe the pie in the sky version of agentic, but along the spectrum you see things like Perplexity travel search and booking agent, where I can say I want to go to Paris, these are my dates, here's my budget, and it finds the flights and finds the hotel and gets the reservations for me on my behalf in a cohesive package.
Walmart's
and so
integrated that
Stripe
way
has
now in
worked with
ChatGPT.
businesses for over a decade, helping them sell wherever customers are. And early days for us, that was helping you sell online and in apps. We also have an in-person payments product with Terminal. And then it was helping businesses sell through platforms and marketplaces. And today, the new wave is agentic. And so we're really working arm in arm with the merchants that run on Stripe to help understand what is agentic commerce going to demand from economic infrastructure. I'd say there's two core needs that are sort of bubbling up to the top. One is businesses need to have a way to crisply articulate what they sell, their products, their prices, their inventory, their checkout experience to agents. And just like there's not one model provider to rule them all or one model to rule them all, right? We're all switching across providers and switching across models. We also don't believe that there's going to be one agent commerce solution to rule them all. And so we recently announced the Agentic Commerce Protocol, which is a shared standard, a shared language really, that allows merchants to communicate cleanly with agents around what they sell, how they price, and how their products should be shown. We co-developed it with OpenAI. Millions of merchants have already adopted it, and we're really excited to see the traction because a core challenge for businesses of all sizes, but especially small businesses, is making sure that they can efficiently expose who they are and what they sell to these agent facilitators. The second issue popping up, the second need, which won't surprise anyone in this room, is just fraud and growing risk vectors in the context of agentic commerce. And these are really multi-party risks, right? So as the consumer, I want to make sure my payments credentials are safe. I don't want the agent to see them or use them without my permission, nor do I want the merchant to see them or use them unless there's need. As the agent, I actually don't want to be directly in the flow of funds. I don't want to be the merchant of record. I don't want to take on the risk for the transaction. I just want to facilitate the transaction between the consumer and the merchant. And then as the merchant, well, gone are the days when I can just block all bots, right? Those heuristics aren't going to work because they're going to throttle growth. I need to be able to distinguish which are the legitimate transactions from legitimate customers passed through legitimate agents versus which are malicious. So, we recently released our shared payment token, which is a new payments infrastructure that allows the agent to tokenize the payments credentials of the consumer and pass them over safely to the merchant. And as those tokens are passed over, they include fraud scores. The same fraud scores from our Radar product, which has been around for over a decade, to help the merchant understand the validity and credibility of that transaction. So, again, early days, I think as we move down the spectrum of I'm just buying a Halloween costume in ChatGPT to I'm really unleashing agents to go do, most of my day-to-day commerce for me, we'll continue to evolve the protocol, we'll continue to evolve the underlying infrastructure like the shared payment token. But however it evolves, it needs to be an open ecosystem because, again, many merchants need to be able to sell through many agents, and it needs to work safely for the consumers and the agents and the merchants alike.
And I'm sure the protocol supports different payment methods, but cards is what it's starting with right now for the most part.
Lots of talk of stables today, but many people still use credit cards, believe it or not.
Okay.
Yes, so we support over 125 payment methods. And I'll also note, I said open as if that's only open across agents or open across merchants, but it's also open across payment providers. So we are often passing that shared payment token over to the merchant to use on another PSP that they're operating on. And so we really want to make it easy for global customers to engage in agentic commerce. We support over 125 payment methods today, but we also support the shared payment token used on other PSPs.
I think that's one of the, just to chime in here, one of the focuses that we had when we worked on our standard was something similar to this, which is, we should let the consumers and the app builders and the merchants kind of pick the path of least resistance or the path of optimal outcome for them. And it's one of the reasons why when we were talking about this, I think a lot of the discussion around any agent payment protocol was really, what does payments look like today? And how do we make payments today work with agents today? I think our point of view was, what will payments look like tomorrow? And when we think about agents and their capabilities in the commercial realm, what are some optimal forms of payment today that might be small, but we think have an opportunity to maybe have even a head start in this world? And I think that's one of the reasons why AP2 works with X402, which is the open standard that's what's actually been around for quite some time. I don't want to bore people with this, but it's been around since the beginning of the internet, but it's basically an HTTP request that's called payment required. And so in many ways, we actually see stablecoins as an optimal form of payment for agents because they do facilitate all the things we've been talking about today, which I won't rehash. But I do think it is important as we think about what merchants want and what consumers want, that we leave the option open to them as opposed to kind of dictating or even just walking them down the path of inertia that already exists in the space. But I do think there's a lot of unhobbling that still has to happen there. It's still early days for sure.
And the internet taught businesses that they need to meet customers where they are, which was online. I think agents are teaching businesses that they need to meet intelligence where it is, which sometimes is in MCP servers and has a bunch of different, right? And payment methods and payment infrastructure will need to evolve to support that.
So Alicia, going towards stablecoins a little bit, what's been happening there? Like, what are some of the recent developments that you're looking at, and how does that play into this space around agentic commerce?
I cannot agree more that we need to meet customers where they are. And what customers have shown us is that stablecoins are being rapidly adopted. Stablecoins have crossed $300 billion of market cap. And the two that have been adopted, importantly, are open infrastructure stablecoins. They are interoperable. They have deep liquidity. They were built on permissionless networks. And I think that's a really important data point around what we're seeing customers adopt. So they were born from necessity to enable traders and market participants of crypto trading have a US dollar to settle into in a 24/7 market. Regular fiat dollars did not offer that because banking hours were not matching the crypto markets. And so as market participants grew accustomed to stablecoins, it's now opened up this door to payments. And we have three catalysts that have occurred. One is regulatory clarity. And with the Genius Act, and for many of you who have been involved in getting that legislation passed into place, I'm really grateful because it has provided now many market participants the confidence to come and now build in this space. We are seeing growth and adoption of banks, PSPs, corporates, merchants. Everybody's now saying, okay, this is interesting. Let me talk about the benefits of stablecoins and what payment flows those could be uniquely suited for in my business. It's not going to fix everybody's problems. There's going to be a lot of credit cards. I fully agree. Just like we text, we email, we send mail. Like, we have lots of ways we communicate with data. We're going to have lots of ways we communicate with value, and we send value to one another. So, but what we have today is regulatory clarity. We've also seen blockchain scaling. And so we now, for example, with Base, our layer 2 solution, we do $1 trillion of monthly volume on Base. We are already at the thousands of transactions per second. This is real. Theoretically, it has no upper limit on its scaling. I think it's important to think about companies that are focused on scaling only may be missing security and or decentralization. So this is an important three-legged stool. I don't think it passes notice that AWS was down yesterday and it impacted a lot of access. Ethereum was not down yesterday. Base was not down yesterday. So decentralized protocols show a lot of resilience, and that's something to think about when we're talking about creating payment networks. And there's already things such as optional privacy on Base. The tooling continues to get better. It's much like AI. Like every month, every year, we just see big leaps forward in terms of these technical advancements. So where this dovetails then with agentic commerce, where we're also seeing these big leaps forward day by day, I think that stablecoins, much like Emily and much like Rich said, are uniquely suited to agents. Agents can't open a traditional bank account. Like, that doesn't get through a bank onboarding process. They can open a wallet. They can be programmed. These are programmable dollars where they can set limits. They can white label the addresses they want to pay with. And as you think about the growing types of machine-to-machine transactions that we're going to have, we think it will grow up alongside of human-to-machine transactions or human-to-human transactions. But it's going to be a growth of the number of transactions that we see. And so stablecoins, we think, are uniquely suited to micropayments. Like, it's really hard to do a 2-cent payment through any other payment vehicle that we have. It's cost prohibitive, quite candidly. It's not cost prohibitive in a stablecoin. It's uniquely suited then to, hey, go do some code for me. Oh, you need to go buy compute? Great, go buy some more compute power from Google Cloud. Like, program that in. Moving with speed. So we think there's a lot of very natural problems that will get solved immediately with stablecoins. And we're just at the beginning. And then as our colleagues have shared, each of us, we are all involved right now in building critical infrastructure. We've talked about X402, which is enabling any developer to seamlessly embed payments now. We are building these as open standards. We are sharing these out to the world for others to build because interoperability, adoption, we think will grow to create the most consumer and business benefit. It will lower the cost and create just more inclusion into the financial systems. There will be use cases that will go through different paths, but we believe that this will drive a lot of global adoption of these technologies.
Yeah. Rich, this morning we heard panelists mention the use case of agents scraping the internet and reading content and making these microtransactions. How do you think about that relative to DP2, X402? Is that in that agentic commerce bucket? How do the different technologies support those types of microtransactions?
Yeah, so this is, I don't want to get too deep in the weeds on the technical side, but if you're a builder in the audience, right, and you're used to making API calls, and a lot of API calls honestly could be done by an agent on behalf of the user. And so whether it's the sort of almost like the pay per crawl kind of example that's been used, there's a whole host of others, right? Like we think about it when in the context of even just think about bots interacting with websites or anyone interacting with the website. Really, it's kind of funky to payment gate it for a bot right now, but with X402 or some of these agent payment protocols, you actually could have a bot hit a website, it get a 402 request for payment, and then a micropayment could be made to allow that agentic intelligence to basically have some limited access to the site. So it's instead of it always being, it's got to be a proof of a human, or I'm blocking it entirely because I'm worried about IP or other things, there's actually now another modality for commerce that can take place. And then in that context, you would think well, what is the value transfer that should be paid by an agent for looking at a single website page? Maybe it's a couple cents, I don't know. And in that context, a traditional payment method really just wouldn't make sense. So I think when it comes to anything that involves an API call or hitting a web page, these things can be wrapped by an agent in some ways and then served either to other agents or users who want to interact, and having a common protocol or standard with which they can make a payment, I think is really important. Otherwise, you're just going to end up with really just a bunch of bad phone calls between agents or people and agents trying to get access to a website and saying, oh, well, I only accept this, and you haven't sent me the standard payload I'm required in order to authorize this payment. So I think it's really just about that script. The other thing that I see as an opportunity here is really thinking about how people browse, right, and the buying experience generally. And so in many ways, I think the agent that we're used to interacting with of yesteryear is this little chat bot that you go to the insurance site or you go to the Reebok or the Nike website, and those things are pretty much useless unless you really hate this merchant and you want to yell at them and you're I just want to talk to somebody, you talk to the chat. But I do think there's an opportunity where websites can become far more optimized for browsing, where an agent actually helps me navigate the website in a way that looks and is far superior than what happens today, which is I type in something for I'm looking for shoes. It gives me a list of shoes that are for men, size 10.5, and I'm just going through very slowly. you could have a personalized experience that I think agents will unlock where it sort of is doing the hard browsing for you and surfacing up options that it thinks you'll want. So again, that's a situation where the agent is playing a role either by helping the user interface with a system, a website, or with an API of some kind, and then enabling new forms of commerce entirely, right? So the example of the browser looks exactly like what it is today. It's just an agent optimizes it. But doing API calls wrapped by an agent looks very different than what it looks like today. Usually developers are getting an API key. They got to go to the website, they put their credit card in, they get the API, they go back, put the API key in their coding dashboard, then they access it. And that's just a really clunky experience for things like data or any news feeds, pricing feeds, and things like that. So our view is that it will accelerate in many ways the proliferation of apps that contemplate, we'll call it agentic workflows or machine-to-machine interactions, but it will also optimize what I would consider to be like human-to-digital interactions or human-to-web interactions in a way that perhaps is probably a little bit more real for folks in this audience as opposed to the developer ecosystem.
So we heard a little bit about credit cards and stablecoins, and then the base infrastructure. We're at the Fed, so I'm remiss not to mention FedNow and then the work there also, because we've been doing quite a bit of work on FedNow and the real-time payment schemes at Modern Treasury. And so I think even there, too, when we think about agentic commerce, there's potential as those rails progress around the information that's encoded in the payment rails, the request for pay standard, potentially coming into some of these experiences, opening up other payment methods for the agents. So I think a central message here is there are different rails available for agentic commerce. It's not just any one of them, but there's high standards for what the rails need to support. For Kathy, I was hoping you could talk to us about why this all matters. So why is it good for society, the economy, if we have more commerce going through agents?
Yeah, and I'm learning a lot. Thank you. Oops.
Are you, Kathy? I don't know. I feel like this is just for...
So thank you to the panel.
Normie's the
it
old
increases
tripod.
my confidence that that real economic growth, real GDP growth is going to accelerate. We have had a thesis for some time that productivity gains are going to drive real GDP growth much faster than anyone dares think. And I'll just give you a quick reason. So if you look at, and bear with me a moment, if you look at the period from 1500 to 1900, there really wasn't any innovation. And according to our chief futurists' analysis, working with academia and so forth, real GDP growth globally in that period was 0.6% per year. This was global. Then we had the Industrial Revolution, so three major innovation platforms back then: internal combustion engine, electricity, and telephone. Real GDP growth with that revolution, and that's the last technology revolution, true technology revolution, cutting across sectors. Real GDP growth increased from 0.6% to 3% for the last 125 years. We believe that with the breakthroughs like this one, and the productivity gains, because that's really what you're talking about, that are being unlocked here, that real GDP growth in the next 5 years will accelerate to 7% plus. And productivity gains, of course, now that's a global number I'm talking about as well. Productivity gains, knowledge worker productivity gains, are the biggest reason. We see productivity gains shifting up into the 4 to 5% range, if not higher. So this definitely increases our confidence. I love the open source movement and how, I remember in earlier days in tech, and I've been around a long time, there were fist fights at this moment in the evolution of new technologies. We've learned not to do that, but learned about programmability, interoperability, open source. So again, it's increasing my confidence that the productivity gains that we are projecting coming out of the 5 platforms I discussed with blockchain technology and AI, 2 of the most important, it increases my confidence that these growth expectations will be realized.
The historical numbers are really interesting there too. You know, we see so much investment going into AI right now, but how does that compare to what we saw 100 years ago for other similar waves? Is this normal? Is this a lot? Is it worth it?
Yeah, we equate this to you know, the massive investment that took place around railroads and the early days of transportation. But what's different about this one is railroads had limits, right? Intelligence and imagination does not. And so we are looking at investment dollars. I know the big question is this another tech and telecom bubble? We do not believe that at all. First of all, back then, the seeds for what we are enjoying now had been planted during the 20 years that ended in the tech and telecom bubble. They were seeds. There was too much capital chasing too few opportunities too soon. The technology wasn't ready and the costs were way too high. We did not get the cloud until '06. Again, there were gleams in the eyes. I remember them. I was in the business at that time. We didn't get the first big breakthrough in AI until deep learning, 2012. Even bigger, thanks to Google, transformer architecture in 2017. And I can just give you a sense of how off-base investing was back then. If analysts had been using something that is central to our research, Wright's Law, they would never have invested in personalized medicine back then. It cost, to sequence the first whole human genome in 2003, $2.7 billion. We were not at a scalable point, $2.73 billion. Today we're down to $200. And we have, you know, the convergence now of life sciences and AI. So seeds back then, flourishing now, and I think, and this is somewhat contrarian, but it does, again, as I said, it does fit with Wright's Law. I think we might be underestimating the impacts of AI. Are there going to be bad investments? Yeah, capital chasing some ridiculous ideas. Always at this point in the cycle, there are. But given the productivity gains we see being unlocked, we see a lot of this investment as justified now.
That makes sense. So, Rich, how, if you're a leader, a public or private institution, company, how should you be thinking about this? Like, what's too early? What should you be investing in at this point?
Damn.
Yeah, I mean, this is kind of like the ultimate question. I think if you're at a large institution, whether you're a regulated bank, whether you're in the tech space. So in many ways, I think that this type of discussion, like what's happening here, is actually very critical to the next step. One, because it creates an opportunity for people to share ideas in an open way, much like the open standards we've been talking about for the last 30 minutes, right? Not necessarily written in code, but written in sort of communications and emails about, hey, we're interested in making the leap. How do we mutualize the risk with the right partners such that we're all marching forward on this path to innovation and trying to unlock the power of these technologies without necessarily owning all of the risk ourselves? And so I think, not just the public-private dialogue, but also private partnerships. That's been one of the key things for us. And I already mentioned what that meant to us in the AP2 standard, right? It would really not be a good idea, in my view, with all the change going on to basically launch a closed source point of view about how payments and agentic models should work. But even when it comes to some of the technologies we're talking about today, stablecoins in general, our journey has been one of partnership, just straight up. And the reason for that is we cannot do everything ourselves, right? Every institution has its strengths, it's the things it's very good at. It has areas where it needs to supplement where it's not its strongest. And so I think that's been the path here, is like people who are trying to kind of go it alone. I find that they struggle the most. Maybe it's a build-buy partner decision, but that's generally been our point of view, is there are things that we can do well and we'll be opinionated about. AI is one of those things. There are things where we know we have partners in our ecosystem where they're the subject matter experts, and doing a 1 + 1 = 3 situation is actually better than us just trying to do that ourselves. And those are our payment partners. It's the custodians at the crypto companies. It's the protocols themselves. We haven't talked about auditability and accountability when it comes to agentic commerce, but that is where blockchain protocols shine. Because right now, if you think about traditional payments in Rails, there isn't really a public auditable record where both agents of the user and of the merchant would actually be able to verify something happened. And so that's, we are trying to work through that layer cake, offer our own technology where we think we have a strength, and then pull in partners where that works. I think that's actually, probably we'll all agree with this on the panel, is that there's some things that we can do on our own, and then there's some things where we're a little bit better together.
And I would just encourage all of the companies to listen to their customers. What we're seeing now is that customers are really demanding the products and they are seeking the benefits. And so listen to your customers, what do they need, and then serve them in the best build, buy, partner way that you believe that is best for your company.
Yeah, talking to customers, always the
always.
best of this.
Customers
yeah.
always right.
Yeah, customers always right. Kathy, how do you think, for folks here from the public side, how should they be thinking about accelerating this innovation? What's important to support the ecosystem as it's in this moment?
Well, and I'm going to thank Coinbase for its leadership. I remember in the day when the SEC was suing Coinbase, we were sitting there saying, okay, what do we do about this? And your leadership really helped drive the clarity, the regulatory clarity that we are beginning to enjoy now. So anything in that score. I would say, in terms of risk mitigation out there, just from we're looking at the prediction markets and thinking this could be a real place again for more clarity, and we're seeing some, but risk mitigation in terms of commerce, buying insurance for your air flight. I mean, it's a ridiculous cost now. If we bring, it's really bringing consumption and investment together. I think that's a convergence that we're seeing more and more. I heard probably 10 years ago, Jack Dorsey and Mark Benioff talking about this concept, and I'm hearing it more and more up here as well. So this idea that the consumer is involved in deciding how much a risk, covering a risk, insuring against a risk should cost. So I would also say this idea in terms of clarity, but also technology, the programmability, open standards, not putting roadblocks in the way there. I think that is going to be critical. Again, we're hearing this on the panel. And so, I think because our regulatory regime was so hostile, especially against blockchain technology, we're coming through a rubber band stretching, and now it's going because we had a lot of time to think.
We did.
We had a lot of time to think, and it might have been a blessing in disguise. We certainly didn't think so at the time, but I think a lot of very good things are happening because regulators, they understood finally that if we were going to block innovation, it was going to leave our shores. And for goodness sakes, this is the next generation internet. We started that movement. We should complete it, and we should encourage it, into the rest of the world now that the cost of innovation is collapsing as much as it is.
Well, we're going to move on from agentic commerce to other good things that are happening in the world. So we'll get back. I can see from the questions we have agentic commerce questions in a bit. Emily, I was hoping you could talk about how AI is just impacting startup formation, the types of things, and what people are working on, and what is that demand of the payments infrastructure these AI companies need?
Yeah, so we talked a lot about agentic. Agentic is a sliver of the AI companies and AI work and AI value being done. And one of the things that's fun about working at Stripe is we get kind of a front row seat to each successive wave of innovation. The current wave is AI. And we are a bit of the skeletal system for AI companies. So they use us, yes, for payments, but also for billing and for reaching global customers and for tax. And so, all of the Forbes AI 50 companies that actually monetize on Stripe, and we get this kind of glimpse into what's happening with AI. You mentioned, Richard, the importance of symmetric information. So maybe I'll share a few trends in the AI wave we're seeing, and happy to go from there. The first is just the rapid pace of monetization. So many of these companies are private. And so it's a natural question. Is it a bubble? Is there revenue? Is the revenue real? Maybe only investors know, or the flashy number that someone puts in their press release. But I can tell you from looking at the AI 100, we call it, the 100 AI companies that are highest grossing on Stripe, the monetization is very real, and it's a pace unlike anything we've ever seen before. So to give you a sense, these AI companies, on average, get to 30 million ARR in just 18 months. If you want to benchmark that with the 2018 cohort of equally promising top 100 SaaS companies, that's 3-4 times as fast. And the earlier cohort, right, you get to 1 million ARR, you get to 1 million ARR in less than a year. Again, 4 times the pace of earlier SaaS. And part of that is that these companies are going global basically from day one. Our AI 100, they finish their first year already selling into 55 markets and having the majority of their revenue come from outside their home market. And that might not surprise you if you're talking about a French startup that also sells into the US, but it is also true for US companies selling abroad, right? They're selling models and infrastructure and digital art and music and all sorts of borderless goods and services. And LLMs are really good at translation. So it's really easy to go global fast and to grow revenues very quickly. The second trend we're seeing is actually in the monetization model. So traditional SaaS had near zero marginal cost. So it made sense to sell sort of seat-based licenses. But with AI, the costs, the compute costs, the GPU costs are very real. And so that's breeding whole new monetization models. Usage-based billing, right? Charge per token, per workflow. Outcome-based billing. Intercom's a great example. They charge per support ticket resolved, which is a great way, actually, to tie pricing to the value that they're creating for businesses. And then most recently, if you look at the companies, starting up over the last couple quarters, we're seeing a growing swath of what people call AI wrappers. And sometimes this is used in a derogatory way. I do not mean it in a derogatory way. These wrappers are brilliant, right? They are bringing an existing LLM that somebody else has and providing a wrapper with the local relationships and domain expertise and data to solve a problem in a vertical industry, right? So Nabla and Ascribe for healthcare, or Harvey for law, or Studio for architecture, right there. And we saw the same thing in SaaS. Started horizontal like Salesforce, went vertical like Toast. But the move in AI is happening much faster. And the monetization corollary of this is that these wrappers, because they're built on top of someone else's LLMs, have business models that are inherently tied to the cost of the underlying LLMs. So increasingly, we're seeing monetization models that track and price in real time to the changes in the underlying LLM costs. You can think of it as a percentage on top. So that's the second trend. The third trend I would say is actually stablecoin. We talked a bunch about cards, but if you go to Vercel today to use V0, you can buy in stablecoin. That wasn't true just a few months ago. And you can think of many of these AI companies. Shadeform is a great example. They're a GPU marketplace. They're selling internationally, right? So ACH isn't an option. And they have high dollar costs, like you're talking thousands of dollars in your transaction. So international cards are pretty unsavory. You get hit with a 4.5% fee, and you're likely to be declined at that size. So 20% of their revenue today comes from stablecoins. And we actually ran an experiment with them and learned that half of that 20% is fully incremental. As in 10% of that business would not be being done at all if stablecoins were not available, because those buyers did not have access to another payment credential that was relevant. We talked a bit about fraud, but just to state the obvious, transaction fraud, fraudulent disputes, that's what really matters if you're a retail company or traditional SaaS. If you're an AI company, you actually care a bunch about your compute being stolen. So you care about the full funnel of fraud. You need to know at the time of sign up, is it a bot? You need to know if the person engaging in your free trials are going through serial free trial abuse. You need to know if the person buying your large enterprise program and then burning down your credits is actually going to request a refund and leave you in the red. And so we're seeing a need for an increasing breadth of fraud-related signals well beyond sort of traditional fraudulent disputes. And then I'll just close with businesses are now being built in AI dev tools, like Vercel, like Replit. And it's not just AI businesses that are being built in AI dev tools. It's all sorts of businesses. And so payments infrastructure now needs to be deeply embedded in those tools, because building a business isn't about building a functioning website with a back end and a front end. It's also about supporting transactions and enabling the money flow. And so we have a new product called Claimable Sandboxes, actually, which just lets you build your business in a box right within your AI dev tool. But I really think in the same way we talked about agentic commerce, consumers wanting to buy in whatever their AI tool of choice is, we're increasingly seeing the same trend for developers.
Can I just add one thing to this in terms of the, are we
Yes,
in
please,
a hype
Kathy.
cycle? As we've sized it, by 2030, consumer-related, whether it's subscriptions, commerce-related, or advertising. Advertising is going to be a much bigger business. But those three will add up to, by 2030, $1 trillion in revenue opportunities. And many people will say, well, goodness, you know, we're seeing spending $500 billion by Stargate. And well, that leaves out sort of the enterprise side. And I know we'll probably get to this in a moment, but the enterprise side. And we think between hardware and software, that is between a $8 to $9 trillion opportunity and maybe 15 trillion by 2030. For some of the reasons that you're stating, this is moving so quickly, and it is having such a profound impact on businesses so much more quickly than we've ever seen before.
And what does it demand from financial infrastructure? It demands, you know, seamless and fast spin up of a business to integrate payments. It demands a much more robust and broader set of fraud controls. It demands access to new payment methods, including stablecoins, and it demands economic infrastructure that supports all these new monetization models so that the market can figure out efficiently sort of that intersection of supply and demand.
Right, and just to close this circle, so we're talking a lot about, yeah, it's B2B, it's business to consumer. I think so much of the benefits are coming in, productivity gains, and that doesn't show up on the top line. It can be turned into margins, increased wages, increased R&D, or lower prices. And so I think many people don't understand the other ways this can turn around other than directly to the top line.
Alicia, we heard Emily mention stablecoins as part of that flow a second ago, and I was hoping to just go back to that to talk about fraud as it relates to stablecoins. How should businesses think about that? Is it more or less than what they see with traditional payment rails?
It's the same problem with different solutions. So fraud exists in all payment types. Fraud's existed in credit cards, in checks, in wires, in cash. So there is fraud in stablecoins. However, stablecoins introduce a whole new set of tools to combat fraud. And I think it's important to think about those as opportunities. It's the first time you can see on-chain and permissionless networks the entire payment flow. You can use then AI and machine learning to look at payment activity and really have better informed fraud models that you can do proactive risk management on. You have the ability for whitelisting and blacklisting various addresses on a personal basis, at a company level, at an economy level. There's also a concept of freeze and seize, where if a stable coin ends up in a bad address through proper law enforcement and through proper judicial proceedings, you can freeze that asset and then remit the underlying dollars back to the fraudulent actor. The other thing with merchants is these are final. There's finality in these payments. There isn't a concept of chargebacks with stablecoins. And so from a merchant standpoint, this is a benefit to them. You can still then have different processes to then have reimbursement. But the key here is the tools only get better. As I mentioned earlier, this technology continues to evolve and build. And we are in the earliest days of looking at what fraud prevention is, but we actually see less fraud, quite candidly, on our own systems coming from stablecoins versus from traditional fiat. The other benefit, just to Kathy's point that I wanted to add on, is in the spirit of where the value accrues, the efficiency of building with AI and with blockchain is just a brand new paradigm of efficient build. And just a quick anecdote, in looking at reconciliations and making sure that we are then ensuring that the transaction was legitimate, my own team can reconcile our crypto transactions, one person, half a day. It's basically all automated. It takes a team of 15, like 3 full days to reconcile our fiat transactions with all of the payment. So your back office costs, your settlement risk, you just take a lot of risk of settlement and risk of reconciliation out of the back office that accrues to the bottom line.
Does that end up, that ends up helping you just build more at the end of the day? So, I mean,
Correct.
Coinbase pushes out a lot of product.
It
Seems
does.
like this probably helps.
It's all about efficiency, productivity gains. We can see by the end of the year, half of our code will be written by AI bots. And so that's the equivalent of almost doubling our R&D workforce.
Wow. Yeah. Kathy, I'm sure you want to touch on that. I mean, what are the implications of that? I mean, there's a lot more innovation being driven by AI-assisted engineering teams, a lot more R&D there. What was the result of that
It's
at the end
the
of the
first.
day?
Yeah, sorry, Matt.
Go ahead.
It's the first place we saw how provocative the productivity gains were going to be. And that as we were doing our forecasts, we were having to raise them, as some of the early building blocks came through. So, and it got us to thinking more about that GDP growth number. Yeah. The productivity gains, again, can be turned around in so many ways to drive real GDP growth. So this panel is increasing my confidence in that forecast.
Yeah. Awesome. Well, I think we can move on to the Q&A. Just a reminder, folks can pop questions in here, and I'll take a look as we go. But there are 2 questions that are sort of similar on here, going back to agentic commerce. They're a form of what are real-world places where you can actually use an agent, so use ChatGPT today to make a payment. I'm curious if anyone on the panel has bought something with an agent. We could start there as an anecdote, but otherwise, where are places we can actually use these today? Go ahead.
So I really did buy my 6-year-old's Halloween costume on ChatGPT Instant Checkout. It hasn't arrived yet, but we still have like another week, so I feel good. No, it'll come. I have tried using Perplexity's travel search and booking agent. Actually, the Paris example, I was going to Paris for a Stripe tour in Paris, and then I was staying with my family, and it gave me great recommendations. I did not do the all-in one-click package, but I could have. With one click, had it buy my flights and buy my hotels.
Was there a reason you did it?
The reason I didn't is because my work had already booked my flights, so I actually didn't really need the full package. And then FIA, Bill Gates' daughter's startup, is actually really cool. You can use it it's agentic shopping, but it also does like price compares. So it's sort of an always-on agent to figure out the best price for you. And then there's a bunch of nichey ones. So one that I like is Barista Agent. If you have like specific tasting coffee beans, but you want to broaden your aperture, it sounds really niche, but I think it'll just give you a sense. Like there's not going to be one agent to rule them all. You go and you tell it like your preferences. I like kind of chocolatey beans, and then it goes out and it like scours the internet, but you have this conversational interface to engage around your bean preferences, and then it buys it, and they literally showed up at my door. So I think there's a lot of examples in the consumer space, in the B2B space as well, right? You can buy or sell from within Cursor. You can spin full businesses in V0 with a complete Stripe integration and claim your integration. So I think we are on the path, and I think it is still quite controlled, quite deterministic. Humans are still generally making the final call for the basket of things they are buying. And it'll be interesting to see kind of the pace of evolution.
Yeah, I think it looks it feels very similar to me when I was younger and buying things on the internet, and you're like, I don't know if this is actually going to get here or not, but I hear this is really cool, and my friend said that they ordered it and it showed up. And I think it just will take time for consumers to build, again, we go back to this point of trust, but also these behavioral patterns around shopping with agents. What we see is very similar to what Emily said, right? We see a lot of what I would call paved roads already that kind of unhobble some of these issues that I think we've kind of spotted throughout the panel, where more work needs to be done. But there is a ton of interest. Like one of the demos that we did live. Actually, I think it was on stage at one of the Coinbase events. Was somebody basically using their agent, their Gemini agent, kind of troubleshooting an issue in their house, which is for any of the dads here, this is probably something that's near and dear to your heart, at least it is to mine. And there's a problem, and they're talking to their agent, and their agent says, hey, give me a second, I'm gonna go and look for some agents that deal with home improvement. A Lowe's agent comes into the picture, basically diagnoses the issue, and then it gives him a list of options that he can purchase for this new part. I think it was an appliance or something. And you can actually, the way that we do these demos is we unpack it so you can actually see the messages between the agents, and you kind of almost get to look inside the transactions themselves. In a consumer context, you're not going to see all of that. It's going to be abstracted away. But just in that demo and in that work stream, you can start to see like merchants are realizing how much it will increase the velocity of consumer transactions. It's also going to change the patterns of consumer behaviors, right? Are they thinking about big box stores, or are they thinking about showing up here? And what I will say is every single merchant we talk to has an agentic commerce strategy, because they realize that people are no longer necessarily going to be walking into the stores, but maybe accessing their website via an agent of some kind. I think the other area where I see it that we've started to tinker internally, and shout out to some of the stable coins that we use like PYUSD, is actually playing around with treasury management. That's a really nice safe space because you're within the four walls of your institution, but you can have agents essentially move money from cost centers without really, again, exposing yourself to what I would say is like all the real world counterparty risks that might be involved in a B2B transaction. And so those are the types of examples that I think are quite interesting, and probably we'll see more folks work on this. But I have to say, in the crypto space specifically, there are teams that have run at this 1,000 miles an hour, and I know there are teams that already today you can use their agent. And by the way, you bring your own agent if you want, to buy things on Amazon, like order snacks for the office. And that I think is, again, they're doing, I would say, all of that unhobbling work that it takes a lot of time, but we're gonna start seeing people do that at an aggressively faster pace. I think the merchants will try and meet them in the middle as they see consumers prefer this path.
I'll just add on, in crypto, you can have an AI financial advisor that goes and buys crypto, buys the dip, manage your wealth portfolio in crypto, executes all your transactions, and we have a lot of employees internally who will test the bot against their own investments. And so they'll be on chain saying, did I buy the dip right? Did I invest in the right dollars? So
they're coming to exchanges near you.
It is moving very quickly, and I think that you will see use cases expand. And I agree with Emily, there's going to be multiple agents that serve multiple use cases, and I think that consumers really are going to lead this wave, and then you're going to see businesses follow up with products and services to augment and support them.
And I'll just add one thing there. That's very important because we think the consumer is going to move much faster than enterprises. Many people think this is about using tools in enterprises. No, it is not. It is about reimagining, reconfiguring your business. That is going to take time. You work with Palantir. We're only 70 people, and we're working with Palantir because I feel like this is so important and such a big opportunity. And, we're doing this kind of away from the CTO. He's involved in it, but it has to be kind of orthogonal because the whole opportunity is orthogonal. So the MIT study that came out a month or so ago saying, hey, nobody's seeing productivity. This is going to be hard work to set up and really transform. It's going to take time, especially for the large enterprises.
It's actually, there's a question about what are the labor economics implications of these productivity gains? Are they offset? So it sounds like initially not as much, but over time, much more so.
What's very interesting, and we're experiencing it in our own firm, I thought we wouldn't be hiring many people, but we're hiring more people now. Why? When I go to the finance team, for example, why? This is the easiest thing to automate and with AI. And the answer is we don't have time. So we're hiring very young people who are AI natives, forget digital natives, AI natives, coming in and empowering them to make this happen. So, but in terms of labor, I think there's a bigger question. The history of technology is a net job creator. Sure, there's displacement, but boy, talk about the best time this could happen. Baby boomers, I think, are retiring. I'm not sure if this is quite the right number, 1.3 million per year. We have immigrants, let's just say the immigrant population growing much less rapidly and maybe shrinking in here. And so, you know, you hear about truck drivers, you hear about transportation, you know, hair on fire, you know, that's such a big employer. They are, you know, these businesses are being hurt by a shortage of labor. So we think, you know, if you put into OpenAI or Grok, one of them, what jobs are going to be created in the next 5 years by AI? And you'll have to prompt a little further and say, we want you to use futurists, science fiction, sure, strategists, economists, technologists, all of that. You'll come out with a huge list of jobs. I highly recommend it.
Love it, love it, love it, Kathy. Oh my God.
Another question we have here is, how is consumer privacy improved or at greater risk with agentic payments made with stablecoins? I don't know if anyone wants to take that, or Rich, it looks like you got something.
I mean, there's a couple things that I think there's a real opportunity to kind of improve the privacy surface area that consumers have vis-a-vis the merchants, right? So everyone kind of knows the story of they put some information into a website for a merchant or a financial services provider, that individual or that entity has suffered a hack, and then all of a sudden you have this issue. And so you can really start to create ways, and this is where it dovetails really nicely with some of the innovations that are happening in the blockchain and generally the cryptography space. We're experimenting with the idea around basically delegating authority to an agent to reveal certain private information, perhaps to another agent. It could be a user on the other end, without actually having to reveal the credential, right? And this is what we call zero knowledge proofs. Google Wallet now allows you to do this with your digital state ID today for age verification. It's a very simple way to put it is, traditionally we're very used to basically this idea of giving our information to a third party and then they just keep it forever. And the analogy that I like to go back to is, it's kind of like you walk into the bar and instead of them just looking at the ID and then they give it back to you and you go get a drink, they hang on to it forever. Even when you leave the bar, they still have your ID. And that's crazy. But that's literally what millions of people do every day. And so zero knowledge proofs kind of create that situation as it should work at the bar, which is they verify your age. In fact, it's even better. They don't even see the rest of the information on the ID. They would just know this person is authorized to be in this location, and then they have what they need from the merchant responsibility standpoint, and you as the consumer don't have to worry about the honeypot risk. So I think that that chain of trust that we talked about at the beginning of the panel has an opportunity to make giant leaps, both as it relates to privacy, but also consumer control along the way. So that's one of the areas that we see opportunities, particularly as it relates to like identifying information or identity.
One question we just got, I think we can end on here too, is for Emily, just how do you protect the less tech-savvy users in these types of situations from people who are trying to drain their wallets, get information they shouldn't have?
Yeah, so I mean, in the case of agentic in particular, that sounds like. So this comes back to our shared payment token. So we are actually passing over the tokenized credentials needed to make the transaction for the product on the merchant that you have approved, and nothing beyond that, full stop. And before the shared payment token, we actually used an approach that's not dissimilar to financial infrastructure-wise, how we approached human agents. So like someone here has ordered from DoorDash or Instacart or something today, right? So if you like ordered from DoorDash, at the time you bought, you provided your credit card information. And then your DoorDash driver, who I'm gonna call a human agent, and then we'll talk about AI agent, was issued a single-use virtual card to spend on your behalf. So they didn't see your card credentials. They couldn't go buy whatever they wanted for themselves. They could buy from Starbucks near your location in the next hour for the amount you approved. And neither the human agent nor the Starbucks ever saw your card credentials. And actually our early versions of agentic commerce, before we had developed the shared payment token, used that same Stripe issuing product, single-use virtual cards, to accomplish the same thing. And so I think economic infrastructure has come a long way, but it hasn't come a long way overnight. The first version of agentic commerce was actually made possible by infrastructure that we had built for human agents, like these delivery drivers, so that they could operate on your behalf. And the only thing that's changing is you swap in the human agent for now an AI agent, but the protection mechanisms are actually quite similar.
I think the other thing that I'll just maybe say here about consumer safety is there's something in crypto that we talk about, which is building in public. And the benefits of building in public, right? This is something brought up and bringing it full circle to the DeFi panel, right? There are benefits to having these protocols be transparent and visible and auditable. And so in a lot of ways, I think the idea is that for the consumers who are savvy and they want to unpack that protocol, they can do so. But for the folks who are building applications where they have the touch point to the customer, there's an ability for them to be transparent to their end user if they need to, and also create that level of trust between the consumer, the application, and the underlying infrastructure or the guts. And so you have to do this balancing act of making the infrastructure invisible, right? People don't need to know how the roads work or how they were built in order to drive on them. That would be a painful process. But you also want to make sure that there's confidence in the safety of that infrastructure that they're passing on, say, for example, a bridge. And so in many ways, I think the idea we're trying to find is, with our service providers and partners, the right level of balance between giving users access to transparency, but also ensuring that they have the right controls and safeguards visible and apparent to them whenever they're using the application.
Well, I think we're good to wrap up there, time-wise. So thank you again. Thank you to the Fed.
Thank you.
Really nice to meet you.
Great to see you again. Thank you for our panel. Cool.
Not bad, not bad. I love that Kathy
So
was
we're
there.
going to head
There's
into
be
our
another
last
one
break
at
of the
2:30.
day.
Crazy, crazy, crazy. Oh my gosh, it's been a long day today, guys. It's gonna be a long day. Yeah, so we're gonna hang out, I guess, for another hour and a half. Holy crap! Until they come back again. Yeah. So there's still time. There's still time. And we're gonna be covering it all day long. Geez. Well, Galaxy Shooter. Yeah, we still have another hour panel probably. That'll be the last one for the day. Right. Let's kind of catch up. What happened during that entire time frame? We did see the market kind of pull back a little bit. Right, Bitcoin sitting at 112,100 currently right now, holding that key level right now. Hopefully we can hold 112. We hopefully flip that into support. 112 is we have a lot of history there, right? We have a lot of history there, and I would love to see that of course remain in support. But well, only time will tell. Only time will tell. We're still range bound between 107,000 and 112,000. Again, we did break out of it, so. Hopefully we'll see those support, and we'll create another range, a broader range, maybe 115. 115 would be the next big one. Let's take a look at the order books here, and yeah, see what's going on with some of the rest of the coins in the market right now. 112,200 after the meeting. We're coming up a little bit here. Let's take a look and see how the order books are. Crypto bubbles looking pretty green on the day now. Look at that. We flipped green in the day, up 2% all overall, 4%. Across the board on the top 200, and yeah, looks like anything. It's a healthy day, healthy pullback from yesterday into today consolidation. All right, let's see what we have here on. Did we flip? Probably didn't flip Amazon. They're probably recovering from yesterday still a little bit here, but let's take a look anyway. Top 10 assets in the space right now. Bitcoin sitting at 2.236 trillion. Yeah, so close. Only about. What, $100 billion from flipping, or a little more. Amazon, that could happen by the end of the day still too. Although Amazon is starting to recover. All right, gold still sitting at 28 now. Wow, 28.6 trillion down. Yeah, 2 trillion today. What's insane, guys? I can't say that. I mean, it's what, like it's down only 8%. I think a lot when we looked at it this morning, it was down 8%. Holding now at 4,100. And we got silver. Silver sitting at $47.90 an ounce, sitting at 2.6 trillion currently. All right. Let's see what anything we may have missed through the TradFi here.
Supremacy.
Let's see. Besant confirms economic stabilization. Argentine peso weakens to record as U.S. confirmed swap. Wow. Yeah, damn. They're watching, of course. The entire thing happened all over again. The entire thing. The Argentine peso weakens. Guys, we
to central bank. Now, there is precedent for this. The Treasury Department.
I'm gonna have to show the clip again, but this has happened before and before and before with the Argentine peso. The last time happened, what was it, 2023? The banks collapsed and everything else happened in 23. That's one of my favorite clips to show you guys. Argentine peso. Where the hell are my clips at? There it is. Fiat. Yes, in my fiat clips here. May 19th, 2023. Argentinian inflation was up 108%. And there's the metal that was in the I love showing this clip. The metal that was in the $2 peso was worth $12, and of course they were 97% negative in terms of their intrinsic value, or not intrinsic value, but the fiat value of their peso. So what they were doing, they were smashing apart their metals, smacking out the outer ring, which was worth $12 on a $2 peso. Yeah, those things, of course, those days are coming again, guys. And that's when, of course, the last time the Argentinian peso collapsed. And now they're going to the dollar. So I guess I wonder where they're going next, right? All right, we got some talks here. Besson confirms, same says the deal with Argentina going towards the dollar. All right. We've been talking about that move now for a few weeks. Again, that's why you got to hold some of this. Something we cannot print, right? You want to hold some of these. All right. Moving on. As much as you can, guys. As many sats as you possibly can. Don't make sure you have something. Get off zero. Of course, I scream from the rooftops every single day. All right. What else we have? Argentinian midterms elections to be held this weekend.
And the peso peg, which Sturzenegger, the minister for deregulation and state transformation, said was in the cards just last week when I interviewed him here in New York. Is it?
all right. I think I'm over that. But anyway, yes, Galaxy Shooter says, yes, welp, seeing Bitcoin get to number 2 or 3 is going to be exciting. Yes, it will be exciting. It'll happen in our lifetime for sure. And it'll happen relatively soon, I would imagine, and violently.
When will then be now? Soon.
It's coming. All right, what else we have in the news? CNBC is talking about here. Trump did make that announcement. We did cover a whole bunch of stuff over on X. I was pulling this up while you guys were watching, of course. Most of the comments, guys, just my quick little take on that. Most of the comments so far have basically been to get kind of like the boomers, like the old money, to understand the space a little better. I don't know. I wasn't really taken back by too much of it. I wasn't really shocked by too much of it anyway. It's most stuff that we talk about on the channel every single day when it comes to where we're headed. I love the comment from Kathy Wood, obviously playing into science fiction. And of course, science fiction and anime are, of course, predicting where we're going into the future. And of course, if you just look at disruptions, innovation, as of course Kathy Wood loves to do, you will see exactly where we're headed. All right, so I want to share some of the things I was digging up in the midst of it. So yes, serious credit card delinquencies, unpaid balances for the last 90 days hits an all-time high level in the last 14 years, guys. Doom spending. That's why I love to call it. Doom spending is reaching critical mass. Oh man, that's insane. All right, yes, breaking over $170 billion is flooded into the crypto market in the last 6 hours. Yeah, we watched it go from, again, oh my gosh, so many things happened in the midst of all this. We did see a 60% dominance again on Bitcoin in the middle of that commentary. So yeah, it's insane. Amazon is aiming to replace 600,000 U.S. jobs with robots by 2033. Yes, the robots are coming, guys. The robots are coming. Send it. It shows how serious they are about cutting labor costs and scaling efficiencies through automation. It's coming, of course, coming to a Amazon distribution facility near you. They've already, again, don't forget, guys, they produced their first 1 millionth robot this year. It happened in, I think, May or June. I forget what month it was. Okay, Bitcoin Magazine, just in, President Trump's crypto czar reportedly scheduled to meet with legislators tomorrow to help advance crypto market structure bill. Of course, we're going to have the SEC meeting tomorrow as well, the Crypto Roundtable, doing the similar thing as we saw today. Okay, and I think Brad Garlinghouse is going to be there, a bunch of list of other people. Not Brad Garlinghouse, Alderatory, what is his chief financial advisor or whatever. his lawyer, I don't remember. Anyway, just a normal guy talking about. Okay, going back into where's the rest of my stuff? Where was the rest of my stuff? Okay. I want to share the rest of the stuff I picked out. Yes, are you ready for what happens next? The rotation from gold into Bitcoin. As we've seen this, inverse leap back into Bitcoin and a pullback from gold today. Kind of crazy how that played out. And then European Central Bank President Christine Lagarde says that, Bitcoin will not be included in any central bank reserves in the EU. Reserves have to be liquid, reserves have to be secure, and they have to be safe. And they should not be plagued by money laundering and any criminal activities. Of course, the same sort of narrative the banks have still in America. It's anything, of course, that threatens the banks. They're going to, of course, use that in in response. All right, what else we have to share here? We do have this today. Today, former president of PayPal says, sell gold, buy Bitcoin, calling Bitcoin the superior version of the bigger long-term upside. It's been a long day, guys.
Much more. David Marcus, he previously led crypto and payments at Meta, is the former president of PayPal. He's now CEO of Lightspark, a company he launched in 2022 that's building payment infrastructure on the Bitcoin blockchain. Good morning to you. It's been a while, but it's nice to see you, David.
Good morning.
Let's try to, we're sort of seeing this revolution, at least inside of Washington, it appears, around how Congress and how this administration is going to think about crypto and specifically Bitcoin, and how you think that things might manifest. If you could just sort of walk us through the permutations in your mind from a regulatory perspective, not just on the regulation, but also on the strategic reserve and things like that, how this changes things.
Well, it's a brand new day for crypto in America, frankly. And speaking as someone who tried to launch a project and worked really hard to get it off the ground here at home and having it shut down by the U.S. government, to having conversations about regulatory clarity of Bitcoin strategic reserve, and really doing whatever it takes, frankly, for America to lead in this revolution that will completely rewire our whole financial system, is quite a polarity flip of atmosphere and energy for our entire industry. So, I'm very, very happy and excited for what's coming. I think we're very close to the precipice when it comes to falling behind here. And so it's really amazing to see.
What does the strategic reserve do in your mind?
Well, look,
besides push up the price of Bitcoin.
Well, I think, first of all, if you look at the strategic reserves that the U.S. government holds in gold, we're the #1 holder of gold in the world. And arguably, if you think of Bitcoin as a better version of gold, digital gold, why not allocate a portion of that reserve or rebalance a portion of that reserve to the better version? I think, there's just a lot more opportunity for growth and appreciation of Bitcoin than gold in the next couple of decades. So I think it's a wise decision, potentially.
Yeah, a little displacement there. Today, Nathan, Jeffy, Max Kaiser produced this, I guess this response here, as predicted, by the former PayPal president. A little lead into that there. All right, what else do we have to share here? I think that's pretty much it. We did mention this during the live as well. ZBEC Network teasing, of course, the payments innovation conference marks a new era for digital assets and payments. They're just kind of connecting the dots with, of course, their payments platform. I really don't think there was going to be any mention at all about this. I know a lot of people were expecting something, but payroll, I don't think is going to mix with, again, a government's adoption of payment systems in the Fed, right? And again, I think I've said this at verbatim many times. MetalPay was on the leading blockchain to facilitate the payments for the Fed now program. So if I were going to bet on anything, I'd be betting on that Fed, FedNow, Metal Pay, Metal blockchain versus ZBEC in terms of the U.S. government adopting it for that. But they did, of course, play into this today because of the innovation conference. If TradFi is to evolve the ScaleFi collaboration, the adoption of interoperability payment rails are essential. ZBEC, through its stablecoin payroll solutions and long-term standing partnership with TradFi institutions in the U.S. and abroad, is building these interoperable rails, starting the real-time USDC payroll streams and expanding to other compliant stablecoins, connecting digital assets with systems that move into the real economy. Governor Wall, and of course, also referencing Governor Waller's statements today as well in the opening. The Federal Reserve. Waller delivers opening remarks at the Payments Innovation Conference here. We can read this because we didn't get to it yet. Embracing new technologies and players of payments.
Good morning. All right.
Hey, this is 10 minutes.
Well, thank you, Susan. And good morning to everyone.
I guess we got time.
It's my pleasure to welcome you to the Federal Reserve Board for our first Payments Innovation Conference. My objective in creating this conference is twofold. First, I wanted to have a conference that focused on the new technologies that have come from the DeFi and crypto worlds and how they are entering into the mainstream payments ecosystem. My goal is to have a vibrant discussion about payments between traditional payment incumbents and the new entrants from the DeFi world. Second, I wanted to send a message that this is a new era for the Federal Reserve in payments. The DeFi industry is not viewed with suspicion or scorn. Rather, today, you are welcome to the conversation on the future of payments in the United States and on our home field, something that would have been unimaginable a few years ago. My view for the Fed from now on is embrace the disruption, don't avoid it. As you know, we are well into a technology-driven revolution in payments, and I'm here to say that the Federal Reserve intends to be an active part of that revolution. A number of technological advances are transforming the payment system. Stablecoins and tokenized assets making use of distributed ledger technology. The rapid adoption of artificial intelligence AI, and increasingly the convergence between these innovations and the traditional financial ecosystem. This includes the institutions and infrastructure that our economy has long depended on to operate a safe and efficient payment system. And yes, this also includes the Federal Reserve. The revolution in transforming payments is demanding change everywhere. And I will say more in a moment about some new ideas that the Federal Reserve is studying to support those innovations. I have spoken before of what I see as the two broad models of payments innovation in our market economy. The first is private sector-driven innovation. Most innovation comes from the private sector, which is motivated and best positioned to allocate resources and take risk with new technologies. The second model is when public sector entities, such as the Fed, build platforms and provide services that enable the private sector to more readily and rapidly expand new services to its customers. This should be done rarely and in limited circumstances where it addresses a specific market need. The posture of public institutions, including the Federal Reserve, should be to acknowledge and embrace private sector innovation that can improve the payment system while preserving its safety and stability, which are as essential to the new generation of innovators as they are to legacy institutions. Now let me pull back a moment and remind everyone how we got here. Since nearly its founding, the Federal Reserve System has worked to facilitate payment and settlement system efficiency alongside the private sector. From the beginning, the clearing services provided by the reserve banks obviated the need for daily movements of cash in armored cars with heavily armed guards. Long before we started speaking of the payment rails that are facilitating the kind of innovation we're discussing today, the Fed was running trains on steel rails to deliver and clear paper checks traveling across the country. FedWire began conducting interbank transfers through telegraph wires in the early 20th century. Fast forward today, where we have multiple infrastructures that settle interbank transfers in real time. Today's conference will focus on private sector-driven innovation. We have assembled 100 private sector innovators who are leveraging cutting-edge technology to create new possibilities in the payments landscape. Our panelists are engaging in integrating traditional financial payment rails with distributed ledgers, developing new products and services in the digital asset ecosystem, and leveraging AI in the payment system. It's worth noting that the firms engaged in these activities include banks, asset managers, retail payment firms, technology companies, as well as crypto-native fintechs. This is an acknowledgement that distributed ledgers and crypto assets are no longer on the fringes, but are increasingly woven into the fabric of the payment and financial system. Now, before we hear from these innovators, I would like to touch on roles that the Federal Reserve plays to support the private sector. These include serving as a convener to solve coordination problems and operating core payment and settlement infrastructure. We are also looking ahead, conducting hands-on research on tokenization, using smart contracts, and the intersection of AI and payments for use in our own payment systems. We do this to understand the innovation happening within the payment system, as well as to evaluate whether these technologies could provide opportunities to upgrade our own payment infrastructures and to enable us to have deeper conversations with the industry on these new technologies. While this is a good start, I believe we can and should do more to support those actively transforming the payment system. To that end, I have asked Federal Reserve staff to explore the idea of what I'm calling a payment account. Today, Federal Reserve banks provide access to master accounts and financial services to legally eligible entities following our guidelines for evaluating account and services requests. The payment account would be available to all institutions that are legally eligible for an account and would be beneficial for those focused primarily on payment innovations. This payment account concept would be targeted to provide basic Federal Reserve payment services to legally eligible institutions that right now conduct payment services primarily through a third-party bank that has a full-fledged master account. There are many eligible firms engaged in substantial payments activities that may not want or need all the bells and whistles of a full-fledged master account, or access to the full suite of Federal Reserve financial services to successfully innovate and provide services to their customers. The idea is to tailor the services of these new accounts to the needs of these firms and risks they present to the Federal Reserve banks and the payment system. Accordingly, and importantly, these lower risk payment accounts would have a streamlined timeline for review. Payment innovation moves fast and the Federal Reserve needs to keep up. To be more concrete, let me describe a possible prototype that I've been considering for this type of payment account, or as I sometimes call it, a skinny master account. The account would provide access to the Federal Reserve payment rails while controlling for various risks to the Federal Reserve and the payment system. To control the size of the accounts and associated impacts on the Fed's balance sheet, the Reserve banks would not pay interest on balances in a payment account, and balance caps may be imposed. These accounts would not have daylight overdraft privileges. If the balance in the account hits zero, payments will be rejected. They would not be eligible for discount window borrowing or have access to all Federal Reserve payment services for which the Reserve banks cannot control the risk of daylight overdrafts. Now, I want to be clear that this is just a prototype idea to provide some clarity on how things could change. The upshot is that, in my view, the payments landscape, as well as the types of providers, has evolved dramatically in recent years, and accordingly, a new payments account would better reflect this new reality. As Federal Reserve staff examine this idea, we will engage with all interested stakeholders to hear their perspectives on the benefits and drawbacks to this approach. So you will be hearing more about this shortly. So let me wrap up here so we can get to the really exciting part of the conference, not me blabbering, which is about innovation in the future of payments. So thank you to the panelists who took the time to participate, those in the audience who agreed to be here, and the many others watching online. And a special thanks to Fed staff who moved incredibly fast to pull this event together and fit it into a very busy fall schedule for the Fed. So on with the conference, and thank you for being here.
Alrighty. so that was the opening statements that we missed during the market open. I just wanted to play that real quick because, yeah, I'm a completionist. I have to see everything. I have to. All right, guys. Yeah, so I'm going to be taking a break as well as the Fed. They're still on a break until 2:30, is it? No, 3:30. 2:30? I thought it was. Oh, mate. Oh, damn. It's going to be happening in 5 minutes. I think we're not even going to take a break. Strawberry, we're not even going to take a break. Let's go. Holy no. That's insane. I guess it only took a half-hour break. Right, where were we? Gotta get back to the main page. The main page. Events, speeches. I lost it. I had too many damn windows open. Oh, here it is. Here. 2:30. Yeah, 2:30. Yeah, that's. I keep getting these time zones mixed up. Oh yeah, so they're gonna be back in here in about 3 minutes, and we're gonna resume this live and finish that up. Hopefully that'll be the last one, because I'm running out of stamina. I've been going, and I'm getting kind of hungry. Oh jeez. Okay, there we go. All right, so I'm gonna throw that in there. We're just wait for that to go live. Nebs breaks out the crack pipe. What the hell? Oh, geez, Jay, come on. Yeah, boy, chaos all day, baby, chaos all day. This is crazy. Yeah, I guess we have no choice. The show must go on. Bitcoin's market cap still sitting, right, dominant, still sitting right around 60%. It's crazy. We didn't falter at all, guys. It's ridiculous. And we did, of course, break 60% today, too. That's insane. What else we have? Bitcoin returning back to 112,000. We might be flipping this to support. I would love to see that. Back at 112. And again, we have a lot of history here. A lot of history at 112. 112 history. Yeah, tons of history. Yeah. So let's hope that remains. And almost, guys, it's almost like we know what we're doing, right? Almost.
We're gonna win so much.
We're gonna win so much. Of course, the psychology of the market. It's this crazy thing. It's a crazy thing. All right, 112,100 currently. Bitcoin, Ethereum flipping back to 4,000 and holding. It looks like the same sort of support is starting to form for Ethereum above 4,000. Hopefully, it can hold that level. Speaking of which, speaking of 4,000, 4,100 being retested yet again, 3 times shut down from this level. A little higher now, but still not as high as the previous wick on the way down. So yeah, we do got, of course, a pullback on gold. Still maybe continuing a sell-off. We have to wait and see if there's more pain ahead for gold and potentially silver soon. Again, more people getting a little bit more excited on this bull run. Okay, so anything else happening? Let's take a look at bubbles while we're still waiting. Yeah, they have not resumed yet. I got that in the corner of my eye. We're waiting. And they should be back any second, actually. I should probably not want to move. In about a minute. I'm going to go take a quick little bathroom break, guys. Give myself a little bit more stamina. Maybe grab some more water. I've been drinking water like a racehorse. That's why I got to pee. All right. I'll be right back, guys. The crack pipe is crazy work, says Nebs. Oh, my God. Gamma God says, let's get it. Yes, Gamma. How's it going, guys? Gamma got us in the house. We got Nebs in the house. We've got freaking Jake the Snake, the King of Ohio.
Oh, hail the King of Ohio.
Nebs. And Gigi.
Gamma. Giannis.
Love it. Thanks, guys. My crypto crew is all here and present. Happy to see you guys today. A long one today, too. And McFreedom. And to wrap it all up with in a bow, McFreedom. Oh, jeez. Totally crazy. Thanks again, guys. Thanks for all the love and support. Yes, I'm going to go take a dookie break real quick. BRB, but yeah, we do have this up and running. And come in here. It's almost going to be any second now. I'll be right back on time, hopefully.
All right, let me get to the top left, maybe.
And we are going to be talking about tokenized products. Leading us through this discussion will be Colleen Sullivan. Colleen is the co-head of ventures at Brevin Howard Digital, a global alternative investment management platform specializing in macro and digital assets. Thank you. Take it away.
Thank you. Good afternoon, everyone. I'm Colleen Sullivan. I co-head the venture team at Brevin Howard Digital. I'd like to thank Governor Waller, Sunena, Ria, Alex, and the other folks at the Fed for hosting us. It's really been an incredible day. I'll start by saying this panel, I think, is the perfect example of saving the best for last. Each of these panelists really, before it was fashionable or safe to do so, recognized the benefits of blockchain technology, that they outweighed the regulatory and reputational risk of being early to the space. As moderators, we were asked to set the stage for the panel, so I'll do that very briefly. Recently, SEC Chair Paul Atkins announced Project Crypto, saying we're at the threshold of a new era in the history of markets, and that the SEC will seek to modernize the securities rules and regulations to enable America's financial markets to move on-chain. So during this panel, we're going to talk about how we get to this on-chain future state through tokenization. Now, before all assets are tokenized and move on-chain, which I do believe will happen over time, we're likely to see a gradual merger of traditional finance and crypto. Digital assets like stablecoins, tokenized commercial bank deposits, tokenized US Treasury money market funds, and all forms of crypto like Bitcoin, Ethereum, and Solana will trade and be used as good collateral in our traditional markets. At the same time, we'll see the reverse. Assets like public equities and commodities, which have historically traded only in traditional markets, are being tokenized and traded and used as good collateral in DeFi, as you heard during the first panel of the day. So it's very much a two-way street. Some of you may have watched the SEC's excellent panel on tokenization, and one of the interesting takeaways for me was that the panelists used similar but slightly different definitions of the word tokenization, and we had the same realization during our prep call. Tokenization means different things to different people. And I'll give one quick example. Let's take tokenization of public equities. Some tokenized public equities are synthetic instruments like IOUs or derivatives. They provide price exposure to the underlying, but they lack full legal ownership and governance rights. Other tokenized equities are issued natively on-chain, where the token itself is the security recorded on the blockchain. Our synthetic and natively issued tokenized shares of Tesla, fungible, both with each other and with traditional non-tokenized shares of Tesla stock. If they're not, what does that imply for liquidity and potential market fragmentation? Would a venue like the Chicago Board Options Exchange and its clearing firm, the Options Clearing Corporation, treat synthetic and natively issued tokenized public equities the same for purposes of writing covered calls and callers? These distinctions matter. We're now in a place where traditional finance brings scale, capital, regulation, and the world's deepest markets, and crypto brings transparency, programmability, composability, and efficiency. Together, I think they form a financial system that's stronger and more resilient than either would be alone. However, as this convergence happens, and as we now move into markets operating 24/7, 365, we need to ensure that the foundation of this new joint market infrastructure is stable, secure, and interoperable, and that it doesn't lead to fragmented liquidity, lack of fungibility, fragile collateral, and loss of privacy. So my hope today is to go a layer deeper in tokenization, and we certainly have the right panelists here to do that. So I'd like to begin by asking each of you to introduce yourselves, and if you could also share examples of what your firms have done in tokenization and the benefits that have accrued to your firms or your clients, as well as some of the challenges you see ahead. Jenny, you're in the hot seat first.
Great. Well, thanks, Colleen. I'm the CEO at Franklin Templeton, and we have built an infrastructure with a shareholder record-keeping system on-chain, a wallet infrastructure. It enables us to launch products on it. We, in 2020, launched a tokenized money market fund that's actually natively on-chain, and that allows us to do things like intraday yield. So if a hedge fund owns it for 4 hours, 22 minutes, and 36 seconds, you will actually get the yield for that amount of time. And I used to run our technology group, and we used to have record-keeping systems and none of them, because they're all batch process, allowed it. So it just creates so much flexibility. We also run validators on 30 nodes on, I think, 11 layer 1 platforms. And we have an asset management business within our asset management business that does model portfolios with tokenized crypto products. And we have a venture capital fund.
I'm Don Wilson. I'm the founder and CEO of DRW, which is a proprietary trading and markets innovation firm. We also founded Cumberland, which is our crypto trading arm, in 2014. So we were very early to the space. I think of crypto as kind of a warm-up for on-chain TradFi trading, and we're focused. We spend a lot of time thinking about that convergence and how we can leverage blockchain rails to make traditional finance more efficient. An example of that was this past weekend. We just did another set of on-chain U.S. Treasury repo transactions. And these were unique for a few different reasons. One, there was no intermediary risk on the Treasury, so it was DTCC that actually put them on top of a blockchain. All the transactions were atomic. So USDC and some other stablecoins were used as the cash legs. In this case, there was also rehypothecation. Because it was done on the Canton blockchain, privacy was preserved. So only the participants who needed to see the transactions saw the transactions. They weren't open to the whole world, which I think is very important. And in addition to DTCC, Circle, and some other stablecoin providers, DRW, Virtu, Citadel, B of A, and SocGen all participated in these. So, that's an example of stuff that's happening now that we're involved with, that we're super excited about.
Great. I'm Rob Goldstein, BlackRock's Chief Operating Officer. Interestingly enough, in 2014, my contribution on this topic was being the person in BlackRock saying, I don't know if I believe in this, but it seems big enough that we should create a small group of people who do nothing but obsess about this to figure out the right moment. And broadly, I would say the strategy that we've been employing at BlackRock is a strategy about bridging. You basically have the traditional capital markets, and then you have this alternative universe, this digital asset universe that has been evolving and obviously has tremendous momentum. And what we've been doing as a company is trying to lead how you bridge the two together. So for example, the IBIT ETF, which has approximately $90 billion of assets, would be a great example where there's a tremendous demand among traditional capital markets investors to have access to these exposures, but to have access to these exposures in the same old way that they could have access to IBM stock, and it shows up on that same brokerage account that they're accustomed to getting. Another example would be going the other direction, where we actually manage one of the largest tokenized money market funds, BIDL, where it provides the ability to have access to a BlackRock money market fund, but to have it as a token that lives in this alternative universe. So when you look at that strategy, we believe very strongly that a lot of what's happening is this, Colleen, you had said the gradual merging of these two worlds, and we've been trying as a strategy to be that bridge to help bring them together in every way possible.
Thank you, Strawberry Dragon, for the super
Kennedy,
chat.
I'm co-head of Connexus. Connexus is JP Morgan's blockchain business unit. So we are in a unique position of sitting within, obviously, a significant bank like JP Morgan, but actively working to develop blockchain-based solutions for our clients. And we do that across assets, payments, and information, predominantly on networks that we operate today. And our focus is really on developing solutions, leveraging tokenization that will solve real-world problems for the bank's clients today, and help to develop those interoperability points between the legacy infrastructure that we clearly use for the vast majority of our business and the new opportunities that is afforded through the use of blockchain technology. So some examples of the products that we offer today, which leverage tokenization capabilities, would be our digital financing product, which is a product that our markets business operates, which enables the tokenization of collateral such as US Treasuries to be deployed in intraday repo transactions, which can be timed down to the minute, allowing repo sellers to much more precisely meet their liquidity requirements without having to have the kind of overnight exposures that would be required in the legacy infrastructure. So we enable tokenization of assets, traditional assets, onto our network. They can then be moved against our digital payment solutions. We operate 24/7, 365 blockchain-based payments infrastructure, enabling clients to leverage that. And then, as you may have seen this year, we also moved beyond into launching a proof of concept on deposit tokens, our JPMD product, which is initially launched on Base, and that really is looking to then meet what the need that we see next, which is to have a bank-grade digital cash product that can then be leveraged in the public blockchain ecosystem as well.
Thank you. Great. And the way that I've structured these questions, they're really open for everyone. So I don't plan on calling on any of you. So please just jump in. So the first one, when we think about tokenized money, so stablecoins backed by different reserve compositions, tokenized commercial bank deposits issued by banks with varying credit and regulatory profiles, maybe even eventually tokenized treasuries direct, how should we think about fungibility? And do you envision a future where we'll need to build new clearing mechanisms or special markets to price these assets?
I'm happy to jump in on that first. So, I think from our perspective, the products that you listed there, are very different products in and of themselves. And so I think we should recognize that there won't be fungibility between those different types, and maybe there shouldn't be fungibility between those different types. Tokenized deposits and stablecoins share a lot of characteristics, in terms of programmability and peer-to-peer transactions, but they also differ in very significant ways. A tokenized deposit has the quality of a bank deposit, and so largely, if structured correctly, should essentially be treated in the same way, and have the singleness of money that you have with any bank deposit that is held in a traditional form. And so we would see that those would be fungible ultimately, potentially across institutions, but with that stable value of a dollar that you see same as a bank deposit. But that is different than a stable coin. They're structured in a different way, and they are likely to be used in different use cases, perhaps different client segments that will leverage those products, and they will serve a purpose as well. So would expect to see those coexist. And then obviously when we get into more of the tokenized security products, whether that's treasuries or money market fund units or otherwise, again, those are meeting distinct needs, and just as in the traditional environment, should be considered different, distinct product types.
I'm just going to add a couple. We're just talking about a programming language, right? We have these conferences, and we're talking about it's a programming language, and it does some really cool things that make it better than some of the traditional rails. So that's great. But there's a lot of conversation about what should a stable coin, should they all be $1? Money market funds way back when had one break the buck, and it brought a rain of regulation down that have been really good things that control it, that it's pretty close to staying as $1. Well, why? If you think about what is risk-free, A risk-free investment is a US dollar, right? Everybody's kind of agreed that that's the best, safest investment you can be. Anytime you add, just like in a chain, it's only as strong as its weakest link, you add other risk to it, it shouldn't be considered risk-free, and it will start to float away, of which the market will determine it in many ways, from the dollar. So what types of risk we have? Silicon Valley Bank was not a credit risk. It was a duration risk. So if suddenly you're holding a bunch of dollars and you've taken duration, you've just added a bunch of risk to that. The most recent fraud cases, Tricolor and First Trust or First Brand, or I can't remember whatever it's called, that's an operational risk, right? They resold the same loans. That somebody should have checked in and made sure that the loans were tagged in a system. Good news is with blockchain, it actually probably reduces operational risk. So, when we talk about the stable coins, first of all, not all stable coins are made the same as far as what the collateral is behind them. That will determine a lot of what their capability is, depending on whether people apply a discount because they think that in that there's additional risk to it. So.
And if I could, it feels a bit like Jeopardy here, I'm sorry. But if I could just echo, we couldn't agree more. This is just a technology. And I think where people often get confused, and one of the things that we get a lot of pitches at BlackRock from various ecosystem participants, what problem would fungibility actually solve? And is it a problem that's high on anyone's to-do list? And I think sometimes within this space, there's so much excitement that sometimes those steps are skipped. And I think importantly, going back to Jenny's comments about money market funds, there are differences between a bank deposit, a money market fund, cash, which is really a stable coin in its purest form is meant to be digital cash, and other types of investments, including short duration. So when you look at something like short duration treasuries, if you were in the traditional capital markets, it would never be fungible with cash at a price that's guaranteed. The price moves all the time. And I think that some of these concepts, there's a lot to learn, again, bridging the two universes.
So let's see, I will partially disagree. I think that
good. That makes the panel much more interesting.
I think that this statement that hey, this is just a programming language misses what happens when you take a so-called real-world asset and you put it on chain, and there are different ways of doing that. And if J.P. Morgan takes a J.P. Morgan deposit and puts it on chain, the character of that hasn't changed that much. It becomes a more useful instrument, but there's no incremental credit risk that's introduced into the system. Now, if let's say that there's a treasury security that's that matures, I don't know, the next day or something. It's a one-day treasury, and let's say that some, I don't know, intermediary tokenizes that and puts it on chain. Well, that has different credit characteristics than the original treasury. And so that goes beyond just the programming language. There's additional risk that's introduced into the system because of the activity this intermediary took. Now, that's not the only way of getting it on chain. I mean, somebody could deposit that treasury at the DTCC, and DTCC could put it on chain, and I would argue now no incremental intermediary risk has been introduced. And so, the devil's in the details on.
Okay, I'm going to respond. It's still a programming language. It just happens to have the application of the programming that introduces those additional intermediaries. And if you think about what this programming language does really well, it does three things really well. It has one source of truth. Guess what? A huge amount of I know BlackRock, Franklin Templeton, JP Morgan, our operational costs, the number of people we have that reconcile data between systems is huge. Oh, and then we got to do a transaction, go reconcile it with the counterparty. Another expense. This completely eliminates the reconciliation, right? That's just the application of this programming language. Number two, it has the ability to execute smart contracts. We do a foreign exchange contract with somebody in Indonesia, we'd probably go to JP Morgan and say, could you please be our counterparty because we don't know who they are. Guess what, atomic settlement, we don't need that anymore, right? So it's just effective at how it executes on something that exists today, and third, it has a payment mechanism. And you can argue on the smart contracts how their value, I mean the stable coins, the value, but it has a payment mechanism. Again, those are the applications of the programming language that create opportunity.
Yes, they create tremendous opportunity. One of the questions that Colleen asked is, should there be some kind of a central mechanism to make sure that all these things are fungible? And my answer is no, absolutely not. These things are different. They have different characteristics, and it's important for the market to recognize that. And there are two different questions. One is, at what price do these things trade? And the other is, what is the appropriate haircut to apply to them if they are used as collateral? Those are two different questions. You could have a bunch of things that all are trading at $1 because the sun's shining and nothing's breaking, but a clearinghouse, and perhaps with the encouragement of the Fed and other regulators, could apply different haircuts to them to recognize the different types of risks inherent in these different items.
And Don, I think in what you just said, one very important component, and again, I believe there's a lot to learn from traditional capital markets here. A lot of what people are calling tokens are wrapped in such a way that they're really more like a structured product. And fundamentally, I think we know through many decades that not fully understanding structured products is very dangerous. And I think that to create pure tokenized assets that don't have that structural component to it is going to require a catalyst. It may not be the only way of doing it, but it certainly, in my opinion, would be a catalyst and catalytic towards having some centralized, trusted intermediary who could help be the tokenization agent to take your asset from, I hate the term real world, but from the real world to this alternative universe. I hate the term real world because who wants to take something of value from the real world and put it anywhere else? But at the same time, I think there will have to be utilities that people trust that assist with that, at least in the early days, because these structured products that are being created are ultimately going to become a challenge.
I think I completely agree with the points here about the absolute criticality of the structuring of these tokenized products. And in the applications that we have today, we have embedded the holding of the underlying position within a custodial framework, which clearly ensures that there is beneficial ownership of the underlying asset to whoever's holding the token at any given time. Now, obviously, that works within our applications for our clients when we're looking at this, perhaps on a wider ecosystem basis. Then it is important that we think through who that custodial entity is. And I was interested, Don, that you kind of identified that there is a clear risk difference of having a regulated clearing agency holding that underlying asset and being the tokenization agent versus, AN other providing that wrapper. And I think that is really important when we think about how the regulatory frameworks evolve, is ensuring that as far as possible, the token product needs to have the same legal rights and entitlements as the holder would have in the underlying traditional position. Obviously, if that's if it's a native issuance, if it's something that is that the issuer is putting on chain, that's much easier to achieve. But if there is an intermediary there, that needs to be in a framework which has the appropriate custodial responsibilities and the oversight to ensure that the holder of that token knows that they have all those legal entitlements that they would have in the underlying product. Otherwise, we definitely will be in a difficult position of having to navigate on a case-by-case basis what the risk, the kind of risk profile is, and what the the legal terms and entitlements are, which is simply not something that's going to achieve that institutional adoption or scale.
Yeah, so I'm going to ask a question that I don't know the answer to. So Rob, if somebody buys BITL on chain, do they have the same rights as somebody who goes directly to BlackRock and invests in your money market funds?
It's structured that there's basically equivalence, yes.
No, as I said, I didn't know the answer. Yeah, I mean.
But part of the reason why I say is because, and this is where I think it again goes back to like technology and what problems are being solved, in that, fundamentally, at some point, notwithstanding the success of the digital asset universe, people may want cash, or they may want cash at JP Morgan or something like that. And obviously you need to go off-chain to do that. So you need to convert from a stable, the token is designed to be converted to stable coins. And then the stable coin again needs to be converted to dollars. So there's another hop, but in theory, it happens much faster than it would if you were buying a traditional money market fund.
So I'm just gonna make one, again, I say it's a programming language, but I love this programming language. I mean, it's very cool. It does some great things. So Franklin's money market fund is natively on chain. So what it can do, I mean, we literally calculate every second a yield, and we pay it every day in the account. So you actually see it. That's unlike our traditional money market fund, where it was too expensive to do it. You needed $500 to open an account. Our on-chain money market fund, you only need $20 to open an account. And honestly, you're going to be able to trade it 24/7, 365, right? So that is what this is going to bring. And the cost differential, because you don't have all that reconciliation and everything, is dramatic and is important. And so when I say that a hedge fund who can own it for 4 hours, 32 minutes, and 22 seconds gets paid, that's a really cool thing. The question is, to Rob's point, I'm not seeing a bunch of them jumping in and saying we need that, but maybe they do. And what more importantly, what happens with technology is the first thing we all imagine is only to be more efficient at what you do today. This is going to enable some really interesting, cool, innovative, and a lot of stuff is happening there. So I don't want to dismiss those things because it will, and there needs to be an element of catch up, but it does some pretty amazing things. And just in our money market, I can see the difference of what this technology brings.
And Jenny, if I could just echo that, I think one thing that this panel may not have done the clearest job on, this is not even like the first inning in our opinion. Maybe it's the first inning. This hasn't started yet. So global equity market cap is $120 trillion, something like that.
Oh boy.
Like, if you really think about, this is still so early. So as we're talking about use cases, I would argue that many of the use cases with regard to tokenization today are either pilot-ish kind of projects, or they're production projects that in reality have been engineered to be in production, or they're very limited applications with certain like digital asset companies doing things with their treasury. There are very limited case studies today. This hasn't even started.
And yet Bitcoin has had more transactions in 2024, I think, than Visa and MasterCard combined. So I mean, it's massive.
Damn.
Yeah.
First, I have the easiest job in the world because you guys just ask each other questions. So this is awesome. And I just get to sit and learn. So Rob, definitely we are early. Part of the reason I wanted to raise these questions, though, is it's also moving very fast. You know, we saw NASDAQ file to have tokenized public equities trade on the platform. They're working with DTC. They think this is going to be ready, Q3 of 26. We see the CFTC has an initiative for tokenized collateral and stablecoin being used as good collateral on DCOs, DCMs. And that's why I wanted to raise these questions. And then there is nuance within the products. Tokenized public equities, you can have derivatives effectively, or issued natively on chain. And I think it's really important that we think about what is good collateral? Like, what do we want coming into our traditional markets? And how do we haircut that? Like, how do we think about those things? And one thing I wondered, I mean, given that we're here at the Fed, you know, with the Federal Reserve having joint oversight of our primary clearing agencies, ICE, CME, Options Clearing Corporation, you know, is there a role for the Federal Reserve to play in helping sort out, like, what kind of collateral comes back into our traditional markets?
Yeah, so I think absolutely. I think that this is a great opportunity for the Fed to lead on this, you know, to be a thought leader. And, you know, when it comes to, you know, just focusing a little bit more on stablecoins, you know, I don't think that it's a question, it should necessarily be a question of you know, a binary question. It should be, what are the criteria for thinking about the haircuts? And I don't think the Fed should be the one determining the haircuts. The clearinghouses should, but the Fed can talk about the principles that should be used to determine the haircuts. And so, you know, I think that those should be, you know, what is the credit quality? And that's both the underlying assets and as well as any intermediary risk introduced in the wrapper. What is the liquidity profile of those underlying instruments, and you know, what is their convertibility or the ability to transform them into cash almost instantaneously? And then what is the transparency? And this is an opportunity for you know, stablecoin issuers and money market funds to compete. Eventually, I envision a world where all of the assets, whether it's a stablecoin issuer or a money market fund, that all of their underlying assets are on chain. And we shouldn't have to wait for the monthly audit to see where the stablecoin reserves are invested. We should be able to see in real time where those are. And that, you know, hopefully we see competition towards that transparency. And then, you know, you can look at it and you can say, okay, well, you know, this stablecoin issuer decided to put their reserves primarily at in bank deposits. Okay, that's probably less safe than a different stablecoin issuer that has it all in very short-dated treasuries. And you know, there can be a discussion about what the haircut implications are for that. They're probably all going to trade $1, but the haircut implications are going to be very different.
So, Don, I agree with that. I think we're quite some time away from that. I agree with that. I also think we need to take a step back. I think there's a tremendous role for the Fed to play. I think it has to start with education. So as a starting point, you know, some of us, I know Jenny's definitely in this camp, we spend a tremendous amount of time traveling the world and meeting with asset owners all over the world. And many of them are among the most sophisticated asset owners on the globe in the capital markets. Not only do they not understand a lot of what we're talking about, but to them, it has to actually solve a problem. So if you're going to start having a little bit of the portfolio over here on this sort of alternate universe, but everything else is over here at JP Morgan, that actually doesn't solve a problem, it creates a problem. So there has to be a value proposition, and I think there are still a fair number of people who need to be educated and just some fundamental frictions that need to be resolved to make it easy for asset owners to continue to see their whole portfolio. And I think a lot of times we have these discussions and it becomes very binary between like everything's on chain or everything's not. We're going to have to be building technologies and building an ecosystem that is thinking of a hybrid solution, because that's the realistic outcome for many decades.
Yeah, I think that's a really valid point around the readiness for adoption and what that really means, because I think, you know, we've talked about some of the transformational potential of this from an asset perspective, but also that means moving away from, you know, daily cycles for funding settlement or would mean differences in terms of how, data is consumed if you want that real-time visibility. And I completely agree with you that is something that from a service provider perspective, there's going to need to be the ability to move at the speed of the client in terms of, for those that want to make more significant changes to their operating models to allow them to really engage with these types of assets, great. But also there's going to be plenty who are only interested in the investment case. They want to access that asset and they don't want any additional complexity or pain, and there's going to be a need to take that away as well. So it's definitely going to take a bit of time to adapt, but if we don't find a way to do both of those things, it's going to be very difficult to kind of jump into that end state.
Yeah, I mean, to the, why would somebody do that? Why is it worth the trouble? I think that it's pretty clear that a lot of traditional markets are going to go to either 24/5 or 24/7. And as soon as that happens, guess what? You need to be able to move collateral 24/5 or 24/7. And so I think whether people want to or not, they're going to, find that this is an essential part of how they manage their assets. And I agree, there is a world where that kind of hybrid system is more complicated. And I think the goal is to make it the least more complicated that it needs to be.
Yeah, and I think importantly, just trading 24/7 is more complicated. So it is, what is the optimal way of creating an infrastructure to manage in that world?
Well, that leads me perfectly into the next question in terms of 24/7, 365 trading in the crypto markets. So far we've focused on crypto assets moving into our traditional markets, but I think we also need to spend some time on the reverse. So as traditional assets like public equities and commodities are tokenized and traded and used as collateral in DeFi, what are some of the issues we should be thinking about? So some of the things I think about: fragmentation of liquidity on-chain and off-chain. Are there challenges to using oracles to price tokenized assets accurately? Do we need some form of circuit breakers in DeFi? I'm not sure how we would do that, but it's a question. How do we ensure, and Don, I'll definitely start with you, but how do we ensure that centralized and decentralized exchanges don't shut down and not accept deposits during times of market stress? And should we rethink how auto-deleveraging systems work in DeFi? And the reason I'm going to start with Don is he published a great piece last week called "If DeFi is the Future of TradFi, What Did Friday Teach Us?" And that's referring to October 10th, where we saw about 19 billion in liquidations across the crypto markets. So I'm wondering, what are some solutions here? Don, this one I will pick on you to start, and then would love for everyone else to join.
Yeah, so, I was so perturbed by what happened and some of the failures that we saw in the market that I decided to send out my first ever thread on X. So I don't know, maybe it will all go downhill from here, but and so some of the points that I made, I highlighted some things that happened on October 10th that I think that a lot of people in traditional finance aren't aware of, that these things happen. And when you go to 24/7 trading, then you need to go to real-time collateral management, and it brings all sorts of challenges with it. And that the time that this kind of flash crash happened was a late Friday afternoon Central Time. Probably one of the most illiquid points of the day, and also a time when a lot of people's systems are kind of, take a break. And so some of the things that we saw were oracles became unreliable. So, an oracle is the mechanism that's used to record the price that you're using to measure whether somebody has sufficient collateral or not. Obviously, that's a really critical thing. And so, I think it highlighted the importance of having really robust oracles. I think that oracles should be properly regulated. The other thing that happened was, some of the crypto platforms actually provided liquidity for the liquidations themselves. And this is kind of one of these practices that I think is just a horrible practice where, an exchange has their own market maker on it. It just creates all sorts of conflicts of interest. Definitely not best practice, but especially then when that liquidity provider is actually the, kind of steps in to take the final bit of the liquidated order. And you can see it on chain on some of the platforms where
everyone in the chat screaming Binance.
The first clip of liquidation was sold into the order book. The next clip was sold into the order book, and the final clip was internalized and then sold back into the market half an hour later for a big profit. And you couple that with the observation that some of the wallets were closed. In other words, people were unable to top up their wallets, presumably because there was so much activity. But you kind of ask the question of like, well, did that benefit the exchange or did that benefit the platform? Did they make more money in the liquidation because people weren't able to top up their collateral? And all of a sudden it just doesn't look good. I'm not at all suggesting that that's the case, but it just highlights the problems with these conflicts of interest. And so that is definitely not what we want to replicate. And that was kind of the point that I was making.
Look, the things that happened on that day are things that have happened in traditional finance in history. And it just takes time for the system. Binance's pricing system worked until it didn't work because they had one source of pricing, and it was, probably one that anybody who really looked at it would have said, that's probably not going to work in times of stress. I mean, these things happen, right? This stuff will all evolve as they get identified. In traditional asset management, everybody talks about private markets and the growth of private markets, and we need to democratize them. And blockchain is going to be the great way as we tokenize private markets. And I always say, this potential exists today, but you don't get liquidity unless you have market makers who exist there to create liquidity, which means you have to have an inventory, which means you have to have a system that's in place. All these things evolve. I think it will inevitably, we will go to 24/7. By the way, if you have a Schwab account, you can trade 24/7. And I think less than 4% of their trades actually happen after hours. So it can happen. This is definitely going to be a more efficient way to do it. It's going to be cheaper to do it. And you need to have the arbitrage between markets. I think Franklin Stock is, New York Stock Exchange and the London Stock Exchange. Guess what? There's people who arbitrage pricing so that you ensure that it stays very narrow. And that infrastructure, the maturity of it, hasn't been built today yet. I mean, it's happening. And as it happens, I genuinely believe it ultimately replaces the current rails in the system. It takes a little time to do it. But we also shouldn't forget that there are a lot of big companies that are toll takers on the current system and are actually incented for this not to happen very quickly. And so that's going to slow it down too. But again, I think the capabilities and the evolution of the market, these kind of days that happen, wake people up to issues that you then go and fix.
But it's interesting because, and maybe this goes back to the point earlier, the question earlier about the role of the Fed. I think importantly, if you had this kind of issue in the public markets and it was about some arbitrage or some...
but you had
it leads to someone looking at it and actually knowing that tomorrow will be better than yesterday in terms of having supervision of infrastructure, certain standards, market quality, just a variety of things that I think for the capital markets to have widespread adoption here, we have a gap between where we are today and where it ultimately needs to be.
Yeah, the challenge is this infrastructure is going to make it a heck of a lot easier to move money across boundaries. and there's no global regulation around it, so you're still going to have this mismatch that honestly you have a little bit today, but a lot of people follow the Fed, so you end up in big developed markets having a little bit more standardization.
Right, but even something, Jenny, going back to your point about whatever exchange, importantly, if you think about the number of people who must do reviews of just the basic technology governance of the New York Stock Exchange, I don't know what the number is, but I'm assuming there's a lot of people who do a variety of like technical due diligence on them as part of their regulatory regime. There are certain basic things you could do if you want to transact here.
Agreed, but again, I mentioned the two frauds that we see. I mean, I used to do securitizations, and like I'm still trying to figure out how you sell the same loans. Like somebody's got to go in and change the system. Usually you tag them, so it happens even in traditional. Yes. I think it's harder. I think it will be harder to do with this technology going forward. I think that's the good news about this technology, but the development in the infrastructure doesn't quite exist.
I think I completely agree with you, Jenny, that this will evolve, right? And the events of Friday was really, that is something that is going to focus a lot of minds, both in the crypto space, but it is also going to be an education for any risk managers within any of the institutions that are looking to get into this. There'll be a lot of a lens on that. I think, Colleen, you asked the question about, thinking about that in the context of potentially, public equities and securities going into this environment. And I think that is really the key takeaway for me is to think about how careful we have to be about deploying, securities into these sorts of ecosystems where perhaps those risks are not fully understood or assessed at this point. And so ensuring we have the appropriate guardrails in place, ensuring that, if there are actors who are operating, whether that's kind of activity that would otherwise be regulated in the traditional world as broker-dealer activity or exchange activity, that there is that they are required to meet the same standards and regulations as exists in the traditional space, because it's the capital markets and protecting investors and confidence is paramount. And we know enough from the experiences of the traditional world that we don't need to make those mistakes in terms of the experimenting in this space. We need to make sure we go in with the right approach from the start.
So I just saw the unfortunate news that we're down to like 13 minutes. I was worried we didn't, that we had not enough questions and we're only through 3 of them. But let me switch to audience questions really quick. So Representative Foster from Illinois, great, 2 Chicago people here. It seems that most of the new initiatives we've heard about today use permission distributed ledgers. And Representative Foster is asking if that's a trend.
Yeah, so the Canton Ledger has, I guess, configurable permissioning, if you will. It has configurable privacy and also configurable permissioning. And so that's a nice hybrid environment that enables regulated entities to configure whatever levels of permissioning they need to operate in a regulatorily compliant manner. So we think that that's kind of the best of both worlds. Yeah.
I was just going to say, look, I had this debate with somebody who today in the room is doing something on the permissionless side. And I said, look, we're a regulated entity across the globe. Our tokenized money market funds better not end up in a wallet that isn't been approved on the whitelist and is AML KYC'd. We're going to be in trouble. So I don't know how you do that without having a certain, whether it's programmed in the token to ensure that the wallet's clean. I just think that that's a reality.
Yeah, I mean, I was going to say the same thing. It's a reality of operating in the regulated space. It's something that there's different tools, obviously, for permissioning. I think there's been an evolution, perhaps, from private permission chains to looking at how you can enact permissioned environments within the public domain. But you know, the AML KYC requirements that we're rightly subject to, you know, that's a non-negotiable, particularly for institutional players. And so having the ability to control that either through whitelists or hopefully in time through more, you know, perhaps more on-chain technology solutions enabling that, you know, I think that is going to be, you know, it's a critical part of how we operate our businesses today.
And not only, like, there's no disagreement, but I would almost take a step further. This is a luxurious point in time in that, going back to the initial point of this is a technology and this being nascent in the relative scheme of things, it's a unique time where you could build with no legacy in a way that should have a more rigorous AML KYC framework, because it's not about having people take a picture of their driver's license and fax it to you. So I think so much of the narrative is on what could go wrong, as opposed to the principles of how do you build something new that is actually both more efficient and more controlled for the most important elements relative to what we have today.
Did you say fax and crypto in the same conference? Wow.
Well, because we're running out of time, I do want to talk about what can go right. So I would love to hear where each of you think the tokenization space in particular will be over the next 5 years. Jenny?
You know, technology adoption is always slower. What's the saying? It's much slower. What is it? Yeah, but it's like, you know, the first 2 years, I can't really give a term, you know, it's much, much slower, and then it just takes off, and you can't imagine 10 years. That's what's going to happen here. Like, this is going to be one, first of all, going to these digital asset or crypto conference, I am stunned by the number of people who attend, the enthusiasm and the creativity that happens in these places.
Let's go!
And I am also stunned to go in on the traditional side and how much they ignore it and say, another crypto winter, not gonna happen again. We don't need to pay attention to it. And at some point, you know, this, whether you call it a bridge or whatever, you have these pools of projects that are going on. You know, central banks have been working for a couple years in Asia and Europe on kind of being able to move their currencies on blockchain. And what's going to happen is these things are going to start to connect over time, and people are going to turn around and say, how did that happen so fast? And anybody who's been living in the ecosystem is going to say, are you kidding me? It's taken so much time. So, you know, is it 5 years that we see the hockey stick? I think so. I can tell you that I have more conversations about this where people are now inbound asking about it, as opposed to us saying, and by the way, I want to mention one other thing.
Yeah, so I have to preface this by saying that I'm usually wrong. You know, I lived in London in the mid-90s, and I watched the Bund futures pit completely disappear and be taken over by the DTB, which was, you know, now Deutsche Börse, the electronic platform. And then I moved back to Chicago in 96, and I was, you know, on the trading floor at the Merck, and I said, you know, if this place is not completely electronic by the year 2000, they're going to be out of business. And I was so wrong. Of course, eventually they became electronic. So I was right in the long term, just my timing was wrong. So with that preface, you know, my expectation is that in five years from now, that every instrument that is traded frequently will be traded on-chain. That is my prediction.
And I'll take it a step further. I think that a lot of this stuff is not an if, it's a when. It's hard to predict if it's 2030 or 2032 or 2027. But I think it's quite clear that if there are $4.5 trillion in digital wallets today,
yes,
that number is going up, not down, and that wealth accumulation is going to have the ability to create the whole portfolio in that digital wallet. They'll have access to traditional capital markets instruments like stocks and bonds, and they'll have access to funds that companies like Franklin and BlackRock create. They'll have access to ETFs. They'll have access to model portfolios that will be on chain, hit a button, automatically happens and automatically rebalances. I believe these things are a question of when, not if. Someone had asked me the question, I wish I knew how to answer it. They said, with all of the wealth that's being created in AI, when you look, a lot of the fundraising that's been happening, a lot of it's been primary capital, but a lot of it's provided liquidity to employees. And they said, what % of that liquidity do you think is going into a Schwab account relative to going into a wallet? And I don't know what the answer is, but I think we all know some material component of that wealth creation is going into wallets. So it's just going to grow and grow and grow. And this will be another way for the capital markets to grow also.
Yeah, I think getting the timing estimates right here is always going to be very difficult. But I think, just look at how far we've come in a year. We're in a very different position now. And I think we'll continue to see that acceleration, particularly in the regulatory environment. To some extent, that was already advanced globally, and then obviously that has moved at pace in the US this year. I think next year we'll see significant advancement in terms of commercial bank money on chain. So, the cash side has really matured and will continue to do so, and see that as a significant area, in the shorter term. And then I think we will take the next step in that evolution towards some of the things we've talked about today in terms of structuring around more of the securities and assets side, which will build, so in 5 years, I think we'll have much clearer building blocks for sure that can then start to develop some of those, model portfolios and the kind of programmable investment vehicles, which is really where it starts to get very interesting.
Great. Ria, should we wrap up, or do we have 4 minutes? Okay, great. So final question, and we've touched on this a little bit, but given that we're here at the Federal Reserve, what do you think the Federal Reserve could be doing to help tokenization grow? I'll close with that.
Yeah, I mean, one thing I think the Federal Reserve could do is take the lead in putting together a cross-agency task force to help. I mean, because obviously this cuts across CFTC, SEC, OCC, to help think about tokenized collateral and best practices, et cetera. I think that would go a long way.
Transparency and clarity of regulatory environment is always what's so important for the market, right? People want to understand what the rules are of the road, and then they can build within that. And to the extent that and consistency across regulatory agencies, to the extent that there isn't clarity around that, that makes people fear innovation.
I think just to add to that, probably the kind of level playing field piece is important. So thinking about ensuring that we have the ability for regulated institutions and non-regulated institutions to participate on the same terms is critical.
And I would just echo that. I think that having more participation and more, I would say, embraced participation of highly regulated organizations, particularly banks, is going to be a dramatic catalyst towards unlocking innovation here. And I think the more that they're constrained or sort of on the sidelines, the harder it is for this to really get scale.
Yeah, I'll mention 2 more things. One is, thinking about, longer real-time gross settlement windows. And intraday liquidity for on-chain settlements, just kind of rules around that. And the other thing is, there are now rules that at some point in time in the future, repo is required to be cleared. And I think those rules were written in a time before on-chain activity was really taken seriously. And so I think it's important for the regulators to go back, take a look at those things, and make sure that they're not doing anything to actually hamper on-chain repo transactions.
Great. And with that, I'd like to thank Kara, Rob, Don, and Jenny. Really, really appreciate your time. Thank you.
Finally, it's over. Will it continue on? I doubt it. 3:30 is kind of like the cutoff,
Well, we
right?
clearly have had a very engaging day on payments innovation. That's a big thanks to Rebecca, Kyle, Matt, and Colleen for leading our panels and for all of our panelists. I also want to say I have been super impressed by all of the energy in the room during our networking and the lunch. And that's a big thanks to everyone who came out to DC. So a big thanks to you for coming and being so actively engaged with us today. And I also hope everyone online enjoyed the event as well. And with that, I'm going to turn the floor over to Chris, who is going to take us to the final finish line.
Closing statements coming up. Jake the Snake coming with a $2 super chat. Please stop chatting and pump the cards. I love you,
All right,
Jake.
well, thank you, Susan. And let me begin to end things by thanking all the panelists and also those of you in the audience who engaged with some great discussion. I'm always struck by the fact, I've said this to a few people over the last day or so, every time I think I have an understanding of what's going on, I go to these things and I realize how little I know. So I have to keep going, so I keep learning and learning and learning. So sitting in the audience today reminds me of how important it is to listen and learn from innovators on the ground, both newer entrants and incumbents alike. Today allowed us not only to focus on what is happening in the payment system, but also to envision where it might go next, as we were talking a bit at the end. I jotted down some notes about what I've heard today, and I'll wrap things up by highlighting some of the really interesting points made and ask a few questions. It's clear from our discussions that innovation in payments is coming in many forms. What I heard from our panelists from discussions during the breaks is that the industry is moving as quickly as possible on a number of fronts, from finding ways to interoperate across and between traditional and new ecosystems, to reimagining the consumer purchase experience through the use of AI and AI agentic agents. All of this points to a future where payments move more rapidly, securely, and seamlessly across networks, both domestic and global. I also heard from many panelists about the growing importance of tokenized money in unlocking the next phase of payments innovation. We heard from a variety of panelists about evolving roles that could be played by stablecoins and commercial bank deposit tokens, and the potential efficiency and inclusivity gains these forms of tokenized dollars might deliver. And we ultimately heard a lot of discussion about very classic economics of payments issue. That's at the deep depth of my heart. Beyond technology, what stood out today was a spirit of collaboration across the ecosystem. I've noticed this over the last couple of years. Instead of, dude, we're going to take your job and drive you out of business, which was kind of the crypto world about 6, 7, 8 years ago, it's all like, how do we work together? I mean, this is a profound cultural change in the way people think about these things. We heard bankers and developers speaking the same language about openness, interoperability, and the need for shared standards. And we may have even coined a new term in scaled-fi. Things are changing fast in the world of payments, and it will be interesting to see a year from now how much has changed, or perhaps become more defined about the innovations we discussed today. It remains to be seen just how quickly some of the innovations being discussed now will be widely used or leveraged in the marketplace in the coming years. Now, how quickly might we reach that point, as discussed today, in which most consumers interact with tokenized money in their daily lives, unaware of the new technologies at play? I mean, that was kind of a theme. Consumers don't care about the technology underlying things.
Yes!
They just want to know, can I use my money to pay for something? Am I going to get money from somebody? They don't care how it gets done. We care about how it gets done, right? We do to make sure it's done efficiently, cheaply, and safely for those consumers. What will the blockchain infrastructure rails look like, and how many different stablecoins might circulate on these rails? I mean, I think this is a big question. There's a lot of talk about lots of stablecoins, but at the end of the day, consumers have to choose which of these things they want to use. It may be very widespread. There may be just a handful that actually are used, and the rest are just a tail. That's what we're going to find out by letting it loose and seeing what the consumers want to do. And which future innovations that are unforeseen today will challenge our assumptions and understanding what is possible in payments in the future. So thank you all for making this conference such an informative and enriching experience for me, and I believe all my colleagues here at the board. Thank you to those watching online, and a big thank you to the Fed staff who did such a spectacular job pulling this event together in a very short period of time. And with that, thank you and goodbye.
Damn! Waller for Fed Chair 2026. Let's go. What a day, guys. What a day. Holy crap. Holy crap. I don't even know how long our live stream went on for. Holy smokes, guys. Crazy, crazy, crazy day. Yeah, big takeaway for the day. I posted in the chat. Quiet part out loud. That was my big takeaway. There was so much. Every single panel had many moments of that. Everyone's saying the quiet parts out loud now. I mean, you saw with BlackRock, didn't hold nothing holds bar, right? Didn't hold anything back. Didn't hold any punches. Kind of weird. Franklin Templeton though going back and forth, supporting bad actors with money makers. Money market makers. Market makers and arbitrage between. I mean, there's so many weird takeaways out. You can look at that different ways, but then also kind of flipping it and being like, "Oh yeah, I don't know where this is gonna go. We're probably gonna, end the cycle, and then people are gonna get whatever." And then going into everyone going basically ending the closing statements. It's not if. It's a matter of when. Of course, when everyone's going to be using with Christopher, oh my God, with Waller's statements at the end of that, holy crap, stating that it's not a matter of when, and everyone's going to be utilizing this technology without even knowing it. It's coming soon, guys. It's all coming soon. You just got to be patient.
When will then be now? Soon.
Oh, geez. I got to get some food soon, too, man. What a day, what a day. And oh, yeah, all this shit posting on Binance literally out loud. Franklin Templeton also, yeah, kind of stepping, supporting Binance with some of that. Oh, yeah, we see that, too, in some of our other, I'm like, come on. Yeah, no. Everyone talking shit on about Binance today. BlackRock, Goldman Sachs. The Connexus girl, whatever. I didn't get nothing out of that for her. She didn't really provide anything to the conversation. I don't know why she was even there. Kinetics, yeah. But having the three go back and forth, BlackRock, Frank Templeton, and Goldman Sachs, that was pretty impressive. All right, guys. So yeah, it's been a long day. I'm definitely gonna go find something to eat, and hopefully there's going to be some more chaos to talk about tonight. There's going to be a lot of these articles, I'm sure, talking about what we just witnessed today. So anyone who didn't catch this entire day full of knowledge back and forth. Oh my God, I didn't even get into Kathy Wood. Oh, I loved all the comments that Kathy Wood was pushing everyone in, of course, again, into the looking at sci-fi. And she's like, literally, just go online and type in sci-fi and what could actually, go have a conversation with AI about what it could disrupt. It's all coming, guys. It's all coming here soon.
When will then be now?
Oh, man. Yes, of course. Jake, thanks again for you guys coming out. Thanks again, Jake says in the chat, for my due diligence. Dude, I can't believe I had the stamina for it. Started with 2 coffees this morning and ended up with two large vats of water after running a mile. You guys, of course, thanks again for letting me take that break and run a mile. Came back. We had perfect time for almost everything. It was insane. I definitely love, again, all you guys in the chat. The longest live stream we've ever done is going to be a lot longer ones here soon as we start to get this bull run going. So guys, don't miss a thing. Of course, like to subscribe to the Crypto Otaku. Much more coming, guys. Thanks again to all the wrench The wrench, yeah, crew in the chat. Yes, that Crypto Chaos crew is moving strong. Thanks again, guys, for coming out. I will see you tonight. Later.
Fly me to the moon. Let me trade among the stars. Let me see what freedom's like without money and gold bars. In other words, hold my king. Oh! In other words, let's make history. Oh! Fill my walls with more coins and let me huddle forevermore and more and more and more and more. I long for Hollywood talking and door. In other words, I choose you. In other words, I love you.
Post-credit scene, yes. You know what? I totally forgot that I spaced out on Bitcoin. If you guys didn't notice, yeah, Bitcoin fell a little bit from 112,000. If we cannot reclaim this, again, the market's about to close, right? So if we cannot reclaim this before the market closes, what the hell is it? Wrong screen. Yes, top. Yeah, there we go. Yeah. If we do lose this, it is possible to go back down to the top of our channel before the breakout, right? So that would be back down to 110,765. I'd say 5 more realistically. 110,000 something. If we do lose this key level here, again, we want to try to hold 112,000 as long as possible. Again, flip that back to support, as we have a lot of history there, and it's a great level of support if we can just flip it again. All right, guys. So that's all I got for you. Have a great one, and again, fly me into the towers. Jake, you crazy bastard. I don't know what I'm gonna do with you, man. All right, guys. Catch you tonight, 8 p.m. Eastern Standard Time. Later. It's time to get something to eat, man. Holy crap. Holy.
Watch the cash burn, land fade. A new world rises, we've made the trade. The robots are rising, and he's taking the crown. But we're the ones that won't back down.